Good morning, everybody. Today is February 25th, 2026. The news we have overnight is that Dow futures rise 150 points, adding to Tuesday's comeback as Nvidia and Oracle shares gain. SOXL is at 70. Nvidia earnings report collides with Wall Street skepticism over AI spending. Wow.
Let's bring in Kevin Green, senior markets correspondent, right away.
Let's do a quick legal disclaimer. Please consult your personal financial advisor before you make any decisions regarding your personal financial situation. I am not a financial advisor, and I do not recommend that you buy or sell any securities or investments. This video is for information and educational purposes only, and I am not a financial
To help
advisor.
set up the action
Market
today.
is opening in 10
right, KG,
minutes.
It seems like the market is moving on a little bit from the State of the Union address last night, but President Trump did talk up the economy. He talked of markets, this new 401k. He talked about housing. Take us through some of your takeaways as it relates to the markets and the economy.
I don't think we actually heard anything that was different from what President Trump has actually talked about over the last couple of months. And so I don't think you're seeing a massive reaction both to the upside or downside. We've heard a lot of these policy prescriptions before, but once again, nothing that was really too shocking. I think the 401k comment and having an opportunity there and a potential match for those that are not seeing a match from their employers at this point in time is a little bit unique. But once again, I think the market is kind of focusing on the Nvidia earnings and then also this consolidation and this technical pattern that we've seen here over the last couple of weeks and actually in the last couple of months or so. So nothing too big when it comes to the State of the Union address. I think right now we're just trying to resolve these current levels. And actually yesterday, Diane, you get a little bit more optimistic around the market, and maybe we could actually move back to that 7,000 level. We saw
Good morning, Scott. Good morning,
improving.
Francisco. Good morning, DSD. Good morning,
actually the best
Dan.
liquidity
Good morning,
that we've seen
Horatio.
since
Good morning,
the end of
D.
January.
Good morning,
That's actually a really good sign.
711.
Software caught a bid, Max 7 caught a bid as well, and you did see the financials kind of stop the bleeding for now. So if those kind of conditions continue, and we even get a non-event from Nvidia, I think that's actually going to be a little bit more conducive for us to try to retest that 7,000 level. I'm not sure we're going to be able to break through, but at least retest that level, at least for now.
Okay, and let's talk about Nvidia. Talk to us about how critical this is and what's at stake here with its earnings.
Yeah, look, I'm going to take a little bit of a different take. Nvidia, obviously, we're going to be focusing on it, but it has been really a non-event over the last couple of quarters. And in fact, Nvidia has moved to the downside a week later after their earnings announcement. But what this is going to actually do is take some of this maybe hedge pressure that we've seen in the market overall off the table after we get this earnings announcement. So we may see a move both to the upside or downside. We might actually be a little bit within range of the option expected move, which is what we've pretty much have seen in the last 2 quarters or so. And we'll see how this goes. I think the commentary in the conference call is going to be a very big deal. If we're kind of looking at the numbers right now, you're looking at revenue being reported. The estimate right now is around $65.6 billion. So looking between 68 to 70% growth on a year-over-year basis, pretty much meeting trend of what we've seen in the past. And the adjusted earnings per share estimate right now is sitting at $1.52. Data center sales, looking at that coming in at $60 billion. Obviously, it's going to be driven by the hyperscalers, the build out that we have seen not only from training but also from inference. The guidance is going to be the main factor here, Diane. Now, here's the big wild card that people need to kind of keep in mind. We had a trade representative from the U.S. Discuss yesterday that the H200s have not been delivered to China as of yet. That process is still rolling out. So we are not expecting the China sales to be reflected in this particular quarter, but they could be reflected in the guidance moving forward for Nvidia, and that's really what could take it over the top. If you kind of look at the Taiwan export data from December to January, we actually saw a 4.8% increase in electronics. That's actually a pretty massive spike on a month-over-month basis. Now, obviously, all of that is not going to be Nvidia chips that are being sold. Actually, around 40% of those exports are generally semiconductors. But that rapid increase could also signify the fact that we are seeing maybe inventory moving around here, and that actually could be booked in the next quarter for Nvidia. So I think the guidance is going to be very critical and key. Let's see if they add China sales to the guidance moving forward. If not, that probably could be the catalyst that maybe pulls us a little bit back. But Nvidia has been trading within a range 170 to 190 literally for the last 2 months or so. And I think the guidance is going to be the surprise. But if you look at some of the export data from Taiwan, you may have a little bit more of an edge on the guidance figure when it comes to Nvidia, because that is actually a massive ramp up in exports for electronics, which should translate into
market opening
additional
in
sales
6
and
minutes.
revenue for Nvidia over next quarter and a half or so.
KG, how much does it matter, though, that Nvidia did finish higher yesterday and above 190? I mean, what was interesting to me was initially with that AMD news, it was dinged, right? But then it gained some ground throughout the session and ultimately finished higher. Does that matter yet, or just kind of levels to watch?
That's incredible.
Yeah, it's just a level to watch. 190 has been very key. We've seen a rejection of that. We did close above that level yesterday. We're trading at around $194 right now. Maybe there's some buying in anticipation before the earnings announcement that it's going to be good, and maybe that's what the price action's kind of reflected. We've seen these breakouts before, and it's not even Nvidia; it's other companies as well. I really don't trust the trading action the day of the earnings announcement, because obviously things can shift here. But like I kind of said,
VIX is at 18.87
tilt to Nvidia's earnings rather than a negative one. And I think if you are expecting the China sales to be reflected in the guidance, that's your bullish take. If it's not reflected in the guidance, that probably could keep us within this expected market maker move range and or a breakdown.
Good morning, everybody.
If we're talking
about the broader market,
do we need Nvidia to have stellar earnings in order for us to move higher? Diane, that's not the case. And in fact, if you look at the last 2 quarters, we saw Nvidia dip to the downside, but the equity markets actually continue to make new all-time highs. Nvidia, in their earnings announcements, actually going to roll off hedging activity across the board from the index
190 fucking 5. Here we are in the video. Doesn't go 200.
To get the S&P 500 higher. So it's not so much do they have to exceed or do they have to move 5% or do they move down 5%. I think it doesn't really matter if you're an index trader. You just want the event to be over so we can unlock a lot of that hedging activity, which usually, actually, as of right now, it's more bearish than bullish. Unlocking some of that hedging activity could clear the way for us to go back to 7,000.
Okay, let's quickly talk through Workday. Those shares under heavy pressure right now off the back of its quarterly results. Take us through your takeaways here.
Yeah, we are seeing the shares moving to the downside. Actually, the current quarter that they reported was actually pretty decent. They did report adjusted earnings per share coming in at $2.47.
Man, here we go. QQQ in a channel up, IWM in a channel up, SPY in a channel, Nvidia in a channel up. Fucking bastards. Well, either way, I said in the other room, this is an American Open. Either way, if we went lower overnight or higher overnight, this is an American Open. So here we are, American Open. Hopefully my internet doesn't freak out. There are no White House press conferences today, just Nvidia earnings at 4 p.m. after market close. Here we are. Insane open. Here we are. SOXO is at 71. Well, whatever happens today, God did number one. God bless America. We will see. QQQ is at 612 IWM. Let's go into the 1 minute chart. Man, if I cannot get the fuck out today, I am in for Nvidia earnings. That's fucking fucked. I did not want to be in for Nvidia earnings, but I am. 9:30. Talking about Reddit Palantir to lead your RFO software. Software is heavily shorted for some reason right now, or it has been. We'll see what happens going into software is so down. The market is really high up. Omega bullish Nvidia 1.1% up for the day. The Omega whales. SPY is following. QQQ is bullish. IWM went bearish off of open. Man, Nvidia, Omega, the god of God, dinosaurs are here today. Folks, if you ever seen something today is the god of God dinosaurs coming in, man. Algo range broken at 9:30. The motherfucking dinosaur from Toothless. I'm talking about the Omega. Broke algo range into 9:30 and bounced at 9:30 into 9:35. 9:35 broke the algo range lower. 9:35 also created an algo range, looks like. Mother of all dinosaurs. The whales. The mother of all whales. I mean, the biggest of all biggest fucking players in the world. Hedge funds. Jesus Christ. Tesla are at 420 after seeing sub 400 yesterday. Palantir showing green. SOXL 71. Wow, still rising. 71. That's higher than fucking January 29th. That's crazy. Time is 9:35. 9:30 made a roof on SPY. 9:30 made a floor on SPY too. IWM going bearish and QQQ going bullish, and Nvidia is mixed. SPY is mixed. Sorry. Nvidia mixed too against QQQ. Time is 9:35. Nvidia trying to go lower into 9:35. They're showing slower and slower, lower. Could fucking be a trap in and of itself. Let's see. I need more food. Should have bought more food. NVDR. Nvidia. QQQ is going bullish. IWM trying to pull back. I don't know what this white line is. I don't want to delete it. It looks like some sort of a support line that I drew. I don't know. A couple of the fucking days ago. I could not fucking sit here and tell you what that shit is. SPY is trying to go bullish with QQQ into 940. There is no divergence. The roof is 940. Wind direction is showing north into 940 on this one single candle. However, there's an algo range at 930. Market is showing bullish off of open, but is deciding morning range. Bigger cycles. Smaller cycles creating medium term cycles to create bigger cycles. But morning cycles are trappy as shit. So Nvidia trying to go south showing. Bull trap showing. I don't know if that means it's gonna bear trap, but it's visually showing. So let's see. The MACD is looking fucking nuts on Nvidia. QQQ looking bullish. IWM looking bearish. SPX still looking bullish on the 1 minute. And their divergence. They don't want to have a divergence at the roof yet. No divergence at the roof. 940, 939, 940, 937. Bounce trying on 940 on Nvidia now. Man, so many speculators, bro. It's crazy. This is what it be doing, though. So many speculators, man. Someone said all-time high, then D word. Who would have predicted? That is such a crazy ass thing to say. I'm not gonna lie. It almost makes me feel like you're not looking at where we are in SPX, but yeah. I'm gonna delete it because today's a very dangerous day. I'm just gonna leave it at that. Because you're talking about in the future, like after Nvidia, into tomorrow, into next week. So I'm talking about today's shit, fucking next week, like it's crazy work. 941 HOD, IWM rejecting, 940 HOD. There is no divergence on the roof. The ref. Cycles are creating. One cycle rejection. 940 to 945. 945 is bouncing because there's no cycle confirmation rejection and it's trying to create a cycle that goes continuously higher or cycle. The MACD volume is a little bit mixed. MACD RSI looking like it wants to stay up. Volume looking like it wants to pull back. Nvidia coming in popcorn with the 1 minute volume here too. Popcorn. HOD into 945. Now there's a divergence at the roof. HOD divergence. We had two people that sent a emoji and also liked something or did a poll at like 2 or 4 a.m. in the morning. I don't think people listen at all or want to listen or they're never here for the live stream and they're saying, "Oh, I'm here. I want to be in the WhatsApp group." So they don't really understand what's going on with that, but yeah, it's kind of messed up. But I guess that's life, right? 945. They don't want to say anything in chat. They just want to like something and they want to do a poll here and there once a month, once a week and say, "Oh, I've been active though, Jeff. I've been an OG. Why'd you remove me?" "Oh, I didn't." But It's just, dude, I've asked and begged for you to not like and not do pulls in the middle of the night, and they're the ones doing it because they're the ones that come in at 4, 5 p.m., 4 or 5 a.m. and say, "Oh, now I just got on, so this is the time that everybody should get on and see what I'm doing or what I care about." So yeah, it's kind of messed up, but that's the reason why I said don't do that. But it is whatever. Time is 9:45. There's a HOD divergence at the roof. They want to go break the HOD divergence right now already. Maybe QQQ is looking super strong. HOD divergence is trying to clear. I ain't gonna lie, I turn off notifications. Yeah, well, I ain't gonna lie, I don't like bots in my chat that don't want to say anything and just wanna say I'm active with the poll here and there, or once a month at 3 a.m. in the morning when the market closed or something. So, like I said, life is full of distractions, right? It is basically every single day there are choices and distractions, but more distractions than choices. And the choices need to be made. And the choices are kinda awakening other people at 4, 3 a.m. in the morning Eastern Standard Time. So, kind of weird. All right, 9:45. After they asked not to do that over and over and over and over and over again on the WhatsApp group and a live AM. So, live. So, yeah. That's what it is. There's a bunch of people that I don't even know too. Never talked in the YouTube chat that are in the WhatsApp for a couple of long time too. I guess that's how it is too, but I don't know. I have no idea who is active, who is not in that time. How could I know? We all have things going on. Actually, I can know by the computer. The logs tell me what time you see the message, and the log tells me that everyone else saw the message at 10 a.m. in the morning when I sent it at 9:40, and it says that the person saw it at 3 p.m. or 3 a.m. or 6 p.m. or something, 6 or 12 hours later, and then they do the thing, and then they put an emoji on the picture. So I mean, I don't care if it's someone active, trust me, but it kinda is annoying when it's someone I don't know, someone that I've never seen on the WhatsApp or YouTube, and it's someone that just never listens. That's the point. It's kind of the respect that becomes a problem. There is no respect because they don't know any, they have not been here for me to, hear me respectfully ask them to not. That's all it is. So I guess it's a misunderstanding from their point of view, right? But like from my point of view, it's yeah. I mean, the watchers know, right? Every day, I've asked for 2, 3 weeks ago the emoji thing, not too much. We all love each other. We want to do emojis here and there, but I mean, to just emoji all the time on the WhatsApp group and just an emoji chat, that's kind of it's not what you think it is what what I've been preaching. But yeah. Life is what it is. Life ain't that fucking easy, sadly. Bulls are showing on even Nvidia. MACD is going bullish, trying to break the high of the day. There is no divergence at the roof because QQQ is running to 616. QQQ is just rocketing running today. 691.5. So SPX 70 points below all-time highs so far. Couple of dollars, but still. And Nvidia really wants that new high of the day with the market. Wow. New high of the day on Nvidia. $195.5 testing. Man, they're really showing fucking 200 before earnings. Wild. Clearing the divergence into 952. They created 7 minutes ago. Fucking rocket. It's a fucking rocket. Just flipped the wind north. Oh, market moving fast as fuck. Oh, MACD on the video, fucking unbelievable. This is a straight up Elon fucking Musk rocket fucking pyramid on Nvidia. MACD. The fucking blue line just all the way up. What the fuck? Oh my god. Big motherfucking whales are here on Nvidia. Look at this Nvidia pamp. Oh my god. Nvidia pamp. Candles are euphorically one over another Happy as shit going north right now. 196. We are here already. Shit's like Tesla delivery numbers. They want to set a fucking crazy ass number. This shit's like fucking everything. Citigroup, fucking JP Morgan, fucking Dr. Burry, fucking JP Morgan. No, I'm kidding. Yo. Is there divergence at the roof? No. 950. MACD trying to pull back on the one on the volume side. MACD RSI is all the way up there. IWM. 950 rejection to 955. There's an algo range at 955. It could bounce back into chop here. Or go lower and then come back in. This shit's gonna cycle like we're at all-time highs though, because yeah, this event, major event. Fuck, coming in with a spike candle. There's a box on IWM from the top to the bottom. Time is 10. VWAP touched. There's a fucking box. Purple box. QQQ bear trapping already. That's fucking nuts. HOD and QQQ divergence at the roof. Showing long-term, medium-term bears are still in danger, or they're just showing super bullish on tech right now with QQQ on purpose. It's a divergence. It might be chopping here for a while. This shit is dangerous. HOD into 10. $9.45, $9.50. It's the most important thing happening right now. IWM. And Nvidia too. Showing just ultra bullish today on Nvidia. They about to just go to 200 today before earnings. The fuck? The fuck? I need some news to come out. Market is chopping. The bulls are coming back, and QQQ is bullshitting. but it's bullshit in north. QQQ is actually bullshit in north too. 616 trying. Nvidia is being led up by QQQ too. It's some bullshit. But the bulls are shitting on QQQ. Northward. The shit wind is up north. The shit is being splattered up north. Someone said Nvidia might hit 200, huh? Yeah, that's what they're showing. Crazy wild. That would be lovely. News would be lovely. QQQ actually though, this is some fucking crazy ass cycle. Triple rejection again, like last week, but instead of going down, it just goes up. Like, what the fuck? Before earnings, too. Like, what the fuck are we talking about? This is literally before earnings. Man. They're showing bullish as shit today before earnings. It is bullish as shit before earnings. On QQQ and tech. Mega day on Nvidia today. And one day literally breaking out of this fucking huge ass fucking candle. I need about that. Let me about 185. This is fucking bullshit. I need about that big ass fucking big dick fucking candle. I need literally this. The big fucking dick candle, which is $10. I'll be happy with $10. Fuck me. Oh my god. Can't stop, won't stop Nvidia. IW, I'm testing the LOD. Market is diverged. SPY and IW, I'm trying to head lower. IW, I'm trying to break the floor maybe. And QQQ is rallying.
With the big picture here and what's going on with this market, Luke Lloyd, President and CEO of Lloyd Financial Group, is with me. So we talked yesterday about how many of the names got hit pertaining to AI, and Anthropic at least was part of it, as it really announced some breakthroughs and some concerns about cybersecurity, concerns about financials. And so many names were caught in the crossfire, from DoorDash to American Express. You don't particularly love the Mag 7 names anyway. Nvidia is reporting tomorrow. You're not buying Nvidia if it sells off, or the Mag 7 names today?
No, because there's just so much more attractive out there, because people don't realize how much other parts of the market, besides maybe some parts in the equal weight S&P 500, but there's so much out there like software names that just sold off too much, and they're too attractive compared
They're
to the
stacking
Mag
the
7.
fuck out
So,
of
if
Nvidia
you look
bulls
at like
today.
the
Oh my god.
IVJ, I think, or IVG software
Oh
ETF
my.
out there, it's down 35% from the top.
There's
So
no
software's down
fucking.
basically
Just look at
35%
this
from the
ladder up.
top.
Like, what the
And then you take a
fuck?
look at something like Microsoft. I know Microsoft is a Mag 7 stock, and it actually is one of the ones we do own in a very small weight in our portfolio. We started trimming Microsoft back in July of last year. Microsoft's like a 2 or 1.5% weight in our portfolio, but Microsoft is only up 10% from 2021 levels. So there's basically been this almost huge bear market and almost like recession, it feels like, in much of the market, but the indices just aren't showing it. I mean, the S&P's down, what, 2%, 2.5%? The NASDAQ might be down 6% from the top to bottom. So like a stock like Nvidia that hasn't really moved much, it's been kind of the stabilizer, and Apple has held up much of this market, but there's they're so much more attractive out there. We've been buying into the software sell-off the past 2 or 3 weeks. Every week, the past 3 or 4 weeks, we basically have picked up 2 new software names. That's basically cut in half 50%. So that's where we see the risk and
IWM
reward,
needs to
especially with the
break down
software names
or bounce.
10%
That's the
below
higher picture.
2021 levels. So
QQQ
a lot
testing.
attractive out
I
there.
have no idea what the fuck QQQ
And look,
doing, to be honest.
Microsoft was not the best of the Mag 7. I mean, you have to
QQQ
think
is super bullish
Microsoft is a great
in a
company,
fucking
but
Elon
it's
Musk
not the
rocket
best
up north
performer of the
too.
Mag 7. Let's call, you know, a
Outer
spade a spade.
atmosphere.
But Amazon was also down over the last
Right
year,
before
so it's not like they've all been
reaching
booming.
March.
But I will say a name like Nvidia over 1 year has been a good performer. I think it's been up over 30% in 1 year. So I'll give you that just so that I have clarity. It's up 36% in 1 year. So let's talk about where you do see opportunity. Where do you think the play is now?
So, like I was referring to, the past 4 or 5 weeks, like 2 stocks a week we've been adding. That's been down 35 to 50%. A stock like Reddit, we picked up. A stock like Palantir, we actually picked up. I never thought I'd say we own Palantir, but after a 30 or 40% correction, it starts to get a lot more attractive in regards to its growth story. A stock like Fortinet, which is cybersecurity.
SOXL at 72.
2 other names we picked
Oh my
up
god, I
just
just
last
burped.
week.
72.
Cellubrite, CLBT. It's a software company that's selling defense software basically to American governments and governments around the world. It's an Israeli company, but that stock's got cut in half. Also very attractive in regards to its growth. Rivian, talking about Amazon, we don't own Amazon directly, but something that's backed by Amazon. Rivian, with the EV sector, we think that backing with Amazon and rates going lower in the future, that's a good highly more speculative name, but also a higher beta name that we can add, because we do expect software to have somewhat of a rip your face off rally very soon. We want to partake in that kind of rip your face off rally by adding higher beta names. A lot of these names I'm referring to here, the Reddits, the Palantirs, the Fortinets, the Cellubrites, the Rivians, these are not like multi-year holds for us. I want to be very clear with that.
SPY
These are
going
roughly
lower.
25 to 30%
IWM must be
portion of our
breaking the floor.
portfolio. That's higher
IWM
risk
breaking the
compared to the
floor.
other 70%. So we
5-minute
set up right
candle.
now our
Let's see what
portfolio, about
happens.
70% of it, it's long-term holds, more that Warren Buffett style of
QQQ trying to
investing.
pull back. There's an
Compared to
algo
the other
range here
30%,
at
it's more
10,
set up for
10,
trading to
10,
hit a
and
theme
an
or
algo
to do
range. We'll
something
see if it
for a
stops
reason
at
in
the
our
floor on
portfolio.
SPY.
So it's funny about 6 months ago we were talking, I think our trading portion was more like 10 or 15%. That's now, like I said, closer to 30%. That's how much we've gotten higher risk as certain parts of the market have sold off. And that's, again, what this game is. It's risk management. It's not necessarily about making
They
money
want to
all the
show
time,
no
but right
bears
now
on
we're pushing in more
Nvidia.
chips because we do see somewhat of a
They
rebound.
killed
Not
off the
necessarily in the Mag
fucking
7 names. We see a rotation continuing to happen
little
into the
bears from
equal
the
weight side of
story.
things and into the software rebound.
Teddy bears,
Yeah,
they said.
understood. So there are names that you're going for some growth.
Get
and names
the
that are
shit
just
out of
ready.
here, they said on
You're
Nvidia.
looking to Rivian and Celebrite and Fortinet. I mean, Rivian had some news
10,
this morning. It's partnering
10,
with Energy
bouncing.
Hub to expand
10, algo
utility
range.
EV managed charging programs across North America. The stock is
IWM
slightly
looked like it
higher
broke
this
down the
morning, so
5-minute.
that could be
It
an
is
interesting
deciding
deal
whether it
that someone
wants
could
to
look into.
or not.
What are the sort of go-to names, maybe the boring ones, and also when would you
SPY's
buy,
testing the floor.
more Microsoft or some Nvidia?
Great questions. These are phenomenal questions. So one of our go-to winners has actually been a more of a Latin America company, international company. It seems like it's green almost every single day, and also had a great earnings report last week. Grupo CBES, CIB, Bank of Colombia. I mean, that stock just continues to be a consistent performer. I think it was up 100% for us last year, and I think it's already up another 10% for us this year. It pays like a 6 or 7%
They're
dividend.
trying to break
So
the
that's one
floor.
of the more boring kind of names, a financial company, but it's got a little bit of that kind of growth kind of mindset because of being international. Humana is another example. It sold off a lot. It's not necessarily a boring company with kind of the news headlines at the top, but Humana is also a stock we've owned in the past. Accenture was one we've kind of taken a look at. We did sell Accenture just because of software getting hit. That was kind of our
Baby shark,
de-risking part of maybe a boring company
baby
that's not
shark,
so boring anymore because it kind of just loses a
baby
lot
shark,
the past few weeks. But
baby shark,
those dividend-paying names, utility kind of companies, even energy like the
baby
Exxon
shark,
Mobil's of the world, that's been a good winner for us this year with
baby shark,
energy. Those are kind of the areas where I'm referring to, the large cap names that are kind of winners that are thought to be kind of boring, maybe not in the Mag 7 kind of stocks, but they're there to kind of hedge your portfolio with lower beta and pays you maybe a nice little dividend on top to kind of protect your portfolio. But again, it's all about portfolio construction. And when I went into this industry, started Lloyd Financial Group, we kind of had a decision to make. Do we create 2 or 3 or 4
Tesla,
different types
Palantir,
of
Nvidia,
portfolios
all looking
where
the
one's
same,
for a
probably
retirement
just looking
portfolio,
so
one's
far.
for a growth portfolio? To me, that makes no sense. You want to have a well-rounded portfolio that's
Baby
adapting
shark,
to the ever-changing environment. And
baby
that's why,
shark,
again, we're trying to change risk. Whether you're
baby
70
shark,
years old or 25 years old, the overall risk in the portfolio should fit that entire environment. And when it comes to the Mag 7, what would take us to own a lot of the Mag 7 stocks? Well, I referenced Microsoft's a very underweight position for us. Google is actually one of the Mag 7 stocks we've owned and we still own. I think that's probably up to 6% weighting or 7%
looking like the
because of how
Bears
much gains
are
it's had.
coming to
But
break
outside of
the
that, Meta,
floor.
Amazon, some of
Baby
the other
shark, do
names we
do do
don't
do
own
do do.
outside of
Baby
that, what
shark,
would
do
take
do do do
us
do
to
do.
own that?
Baby shark,
I
do
think
do
just
do
a
do do do.
reset
Baby
in kind of
shark,
expectations. I want to see money come out of the Mag
do
7 and continue to rotate in the RSP.
do.
If we can see a 10 or 15% dispersion into the RSP equal weight, that gives me enough confidence and enough money's rotated out of the Mag 7. It's kind of been the flight to safety for 4 years then we'll get maybe poured back into the Mag 7 at some point.
Stop
So we
it,
always are
Nvidia.
paying attention to capital rotation. I'd like to see about a 15% dispersion from the equal weight to the actual S&P.
Luke Lloyd, great to see you. Thank you. Lloyd
Testing
Financial
the
Group.
bottom
So
of the
glad you're
purple
with us
box on
today. Appreciate
QQQ.
it.
The thing could chop or bounce. IWM curling back up. The bulls are trying again until the low of 1010 breaks. The bears are in danger in the 3/3. Nvidia is bugging out. It don't look like the market. Baby shark,
Baseline tariff
baby shark,
of 10%.
baby shark,
Why did we
baby
start
shark.
with 10% when
Big
the
sharks are
president
coming.
appears to want 15?
I'm shaking my blue
the
shark
authority that
left
we're
and right.
using right now, which
Seeing
is a
his
temporary
face bubble up
150-day
and down.
authority,
Singing my
that's
shark
5
song.
months, 150 days. And we have a lot of countries out there that for a long time
Yours
have
said
had 10%.
Nvidia is only supposed to
some that
move
have
$10.
higher 15%.
You're
and so our
wrong.
goal with all of
It's
this is to have
$12.
continuity. So we want to have the 10%, and,
What is
we're
Nvidia's
looking about how to implement the 15%
move?
that the president indicated, because we want to have continuity. We want the countries, we want the companies, we want
5.2
people to
to
understand that what we were
5.6%
doing before,
likely
we're going to
suggests the
reconstruct
price
this
of
alternative tools because we want to
178
keep
to
going,
201,
maintain the policy.
which is
We'll
a
just
lot,
have a
but
change
it's
in the legal
around
implementing
$12.
And Besley, you're giving me the impression that this is still under
196
conversation,
minus
negotiation
12.
perhaps internally, when the president was pretty explicit over the weekend in his own
184,
words, as the president of the United States of
plus
America will be
12,
effective immediately, raising the 10%
210,
worldwide tariff on
208,
countries, many of which have
205.
been ripping the US off for decades.
So wherever they
without
close
retribution
today,
to the
and
fully
then
allowed and legally
plus or
tested
minus
15%
12.
level. How can we sort of explain that, which is rather explicit, with the more
Baby
nuanced
shark,
tone you're offering this morning?
baby shark, baby shark,
So we'll put out a
baby
supplemental
shark,
proclamation
baby
that
shark,
the president will sign,
baby shark,
going to 15%
baby
where
shark,
appropriate.
baby
Remember,
shark.
before the Supreme
Come
Court
on,
struck down the
my good
tariffs,
luck shark.
a lot of these countries had agreed to have tariffs, U.S. tariffs
Fucking
on them
goddamn
of
huge
18%,
whales on the
19%,
video today.
20%. So going up to 15%, for them, at
Probably
least
BNF
temporarily,
himself.
it's better than the deal that they had.
Right.
And so the president wants to make
Promise
sure,
he's not gonna do
again,
the US
that we have
shit, Michael.
continuity in this
Probably
process,
BNF
that
himself.
folks who acknowledge they had giant
Probably
trade
got
surpluses with us, they had unfair
Dr.
trading
Burry.
practices affecting their
Probably
trade, and
sneaking
who
around.
agreed
Kathy Woods
to
on Tesla
pay the
sneaking
tariff,
around.
that they actually are in a
Volunteering.
position to do
Probably
it
sneaking
until
around.
we can get the more durable
Man.
and long-lasting measures in place.
Ambassador Gray, when you say when appropriate, is that this week, or are you looking to do this after the 150 days runs out of the 10% level we currently have?
Oh, it'll be in coming days. It's soon, right? I mean, the president put out this direction. To your point,
Fuck, I want a more
and so that all of
equal
that
chart.
is in development. So that will be
Equal
soon.
level
Again,
chart.
the idea is to establish a through line from the policy that that the president has implemented successfully over the past year, and continue it over this 150 days, and as we build up appropriate tariff rates using other investigations and means.
So when you do raise the 122 tariff to 15%,
I might have OCD.
what's your argument going to be to the Europeans? Because this is stacking on top of most favored nation rates. That means that for the Europeans that agreed on a 15%, the highest level they would agree to accept, this new rate for some products will be above 15%. What's going to be the argument to Brussels?
So I've been in constant contact with my counterparts in Brussels, the UK, and elsewhere, And the way to think about this is every country has domestic procedures that they need to go through to come into compliance with the deal.
Is
With
chopping or
Brussels, we
testing
gave
the
them
bottom of the purple
a
box,
good rate on
whether it wants to
cars.
break down or
That
not.
stays the same.
IWM.
With the UK, we gave them a quota on cars. We
Fake
gave them
it out.
a
Bonds
quota
or
of beef
rejection.
to import duty-free.
SPY
That stays
mixed.
the same. So a lot of these parts stay the same. But just like Brussels hasn't fully implemented its deal, or the UK hasn't fully implemented its deal, we also need a couple months now to have some domestic procedures because the Supreme Court struck down all of this. It's pretty normal when you have a trade deal to implement over time. Most trade deals take years to implement. We're on the fast track, and so we're just going to have a couple,
it's like 10.75 to 12%
the tariffs in a way that comply with our end of the deal, and we expect the EU and the UK to hold up their end of the bargain too.
But does this new 122 15% now basically break the EU trade agreement, given where most favored nation products are and those rates?
So right now, as we talked about, 10% is in place. There will be a proclamation raising it to 15% where appropriate. And so once that comes out, I'm happy to come back on and explain how that might accommodate other countries where there's a deal.
Will any of the rates on any country stay at 10%?
Well, we will.
Baby shark, baby shark, baby shark, baby shark, baby shark, baby shark.
Anytime you put on a tariff, we're going to have foreign interests who want to bring it down, so people are going to sue us. So I'm not going to get ahead of the president. I'm not going to get ahead of the White House counsel and all these folks who are implementing this. So when that comes out, it'll be very clear what and how and why.
Ambassador, in some of your comments, it seems like you're suggesting that the rate could go above 15%, and I just am curious what exactly you're planning to use. It's been discussed that Section 301 in particular will be used to go after places like China, which it has been used for before. Is that still in the cards?
Yes, so Section 301 is a country-specific tool, and it allows the president to investigate unfair trading practices by countries.
Testing.
And again, this is what we've been getting at over the past year. As we've concluded deals with over a dozen countries, they have agreed to eliminate unfair barriers to our trade, take down their tariffs, eliminate fake regulatory barriers, et cetera. And so we can actually conduct these investigations under Section 301 on a country-by-country basis, figure out exactly what they're doing that's been so problematic, and negotiate with those countries, but also impose a tariff as enforcement to make sure that they eliminate those practices. China certainly, but also other countries, Vietnam, Southeast Asia, the Europeans,
SPY is bouncing at
potentially.
10.20.
But the point is to recreate the policy that we've developed over the past year.
QQ is bouncing at the bottom of the purple box. Nvidia is chopping, or sorry, IWM is testing.
That's the only reason why these countries have made all these concessions, because they know the president's willing to enforce.
I think 3/3 started on QQQ, but we'll see. I mean, this shit could cycle and go in the purple box and reject, so I have no idea.
There are a couple that have already started.
Timber!
Investigation on Brazil a few months ago. We opened up one on China a few months ago about compliance with the Phase 1 deal.
We got an
and we have
alien ship coming in on
many
Nvidia.
others that we are preparing right now. We expect to launch in the coming days and weeks, such as related to forced labor and supply chains, industrial excess capacity, or unfair trading practices with respect to fishing or seafood.
We may be building a Polaris.
Subsidies.
We may just see a Polaris today.
So, Ambassador, you were potentially planning to use 301 because when I spoke to you and your colleagues in the past, there was this concern Supreme Court could strike down
10:15 is bouncing on SPY. This is the LOD hoping LOD floor testing for now. If it bounces for 5, 20, 30 minutes or an hour, it could, and then break LOD later, or it breaks LOD now. It is up to QQQ. It is up to IWM.
The largest trade deficit in human history. And the trade
on
deficit
SPY.
was a manifestation
Nvidia is up to the
of many
shark.
things, but one of them is a lot of offshoring of production to other countries,
whale shark,
jobs and manufacturing that went to China,
Atlantic
Vietnam,
Ocean
Mexico,
shark,
et
Indian
cetera,
Ocean shark,
to the point
Pacific
where our
Ocean
defense
shark,
industrial
they're all
base
here.
was challenged, our manufacturing base and
Every
jobs
single
were
one of them.
hollowed
The
out.
Japanese ocean
And
sharks
this
are
was
here
an
too.
emergency,
Shit,
and is an
the
emergency.
Korean
And
ocean
so
sharks
the
are
president
here.
used an emergency power
They're
to
all
move
fucking
very,
here.
very quickly. Section 301 and Section 232, some of our alternative tools, they take more time, they take more process, they're very effective, but they didn't have the flexibility and the speed we needed to really out the gate,
or
make
what?
these
I have no
points,
fucking
get the deals
clue.
with the countries,
It
and
looks
now
like
we
it's
can
trying
go
to
back
squeeze
and
on
make them
everything
firm.
and trying to
Ambassador,
fail or
Canada and
squeeze
Mexico,
or
of
what?
course, will be dealt separately, but does the president feel constrained by USMCA?
So I wouldn't say feel constrained. We're in the middle of of a review that we have to conduct in the United States. I'm in contact with my counterparts from both Mexico and Canada. There are things in
let's get an
USMCA
LOD
that
break.
make sense that don't get a lot
Bring
of name
Nvidia
because
back
they
to
function fine.
192.
But there are a lot of things where we don't have the type
Before
of market
fucking
access
12,
we want,
come
whether
on.
it's in goods or services. We have Mexico that historically, over the past few years, has been discriminating against U.S. energy producers and service providers. We have Canada that limits our access for dairy, has taken American wine and spirits off its shelves. So we have a lot of issues like that. We also have concerns about transshipment through Canada and Mexico of goods from third countries coming through and benefiting from duty-free treatment from USMCA. And so we want to make sure that if there's an agreement with either of these countries, that it really benefits these countries and not third countries that might use Canada or Mexico as an export hub into the United States.
On the same side of the story, Josh Wingrove and the team down in Bloomberg News in Washington, D.C., reporting more recently that the president is privately musing about exiting the North American Trade Pact. What can you share with us this morning about the prospect of that happening?
Well, it's not just privately.
IW,
He talks
I'm
about
trying
it
to
publicly
leave
too.
down
It's
south.
not a secret. I don't think that's super newsy, to be honest. The president has been really clear this year that he's concerned.
This shit
with
really
the
matters
performance
on the
of
5 or the
USMCA.
15 minute.
He
If
doesn't
it
feel
leaves,
that we should
stays
just
down
rubber
there with the
stamp,
volume of
this
MACD,
agreement.
then it's
I'm
really.
having separate negotiations
But it could
with
just
Canada and
pop right
Mexico
back up
because
like
our
it did.
relationships with those
But it's
countries
trying
are
to
so
leave.
different. And so I think we'll have over the coming
You
year
stupid ass candle.
the
1, 2,
conversations.
3.
Maybe we'll have separate protocols with Canada and
Two
Mexico
candles
that
stacking.
we tack on to USMCA. We just have to fix some of the gaps in that. The president has already taken
Bears
action
are
on
here on
autos, which is a big
IWME.
problem. We've seen a huge influx of imports of autos from Mexico. over
LOD
the
is
past few
testing
years,
on
when really
SPOIT.
we want to be making those things here, and we're already seeing
QQQ is up
Stellantis,
north.
GM, and others announce new lines and using up excess open capacity
Nvidia
in
is
the
up
United
north
States
today.
to make more cars
Way,
here. So we're already
way
seeing
above
a good
LOD.
effect from the president's
QQQ
trade
is
policies
bullish as
with
fuck
respect to
with
Canada and
Nvidia.
Mexico.
So
Nvidia
it
is
sounds
still
like a
bullish as
review
fuck.
and improve is the path you're on,
Unless they
Ambassador
break
Greer. When it comes to the
192.
122s, are you prepared potentially for suits as well using that legal authority?
Well, any legal authority the president uses to impose tariffs,
Be nice.
foreign interests are going to sue, right? People who are
Kill
importing from
girl,
foreign companies
be
and foreign workers, they're going to
nice.
sue. So, of
IWM
course,
girly,
we
be
expect
nice.
that comes
Time is
along. However,
10:25
I would say
and
that the lower
30
courts and even the Supreme Court
seconds.
expressed that 122 is an authority that the president can use.
10:20 trying to
We put out the
bounce.
proclamation
Last minute
week
of
that lines out
10:20.
exactly how the president can use this and why he's using it and the declarations he's making. Are people going to sue? I expect they will. We feel confident in the case.
In July of last year, the
IWM.
president's own lawyers said that
QQQ.
122 wasn't applicable. They
Spy.
said, and this is the appeal of the
All
Court of
bugging
International
out
Trade decision.
at the
They
floor.
said basically,
1,
nor
2,
does it have
3,
any
4
obvious
fucking
application
times.
here, 122,
If they
where the
bounce here,
concerns
they
the
create a
president
small cycle
identified in
and chop
declaring
at
an
least.
emergency arise from trade deficits, which are
Yo,
conceptually
this is
distinct from
stupid.
balance
10,
of payment
20 bouncing
deficits.
at the last
So why do you
minute
think
of
it works
10:20.
now when it didn't work over the summer?
So I will say, first of all, that I think that there's more context to that statement. And further, a balance of payments is not identical to a trade deficit. People have kind of set up this straw man. That's just wrong. If people go back and actually read the proclamation that went out, it talks about the actual balance of payments deficit. It refers to the current account. Now, the trade deficit is a big portion of the current account, so it certainly is a
just
driver
like that.
of it. But we also talk about things like our net investment
Please
income
fucking
position,
cycle for 20
where
fucking
we're
30
$26
minutes and
trillion
reject. What
in
the
hole.
fuck?
So there are a
No.
variety of things that contribute to a balance of payments
No.
deficit. And so folks who are out there with this oversimple straw man argument that we're just equating a trade deficit to a balance of payments deficit, they're just wrong. They don't even understand. I don't think they've read the proclamation.
Ambassador, can we finish on the trade deficit? Widened recently. And just to wrap up the conversation, help explain to us what the metric for success is actually going to be for the administration to demonstrate to the American public that this effort is actually
bear
working.
trap for a little bit,
Sure.
showing this is
So
atrocious.
when the president
Off
put
the floor.
his trade program into place starting in April, every month from April through December 2025, the trade deficit goods went down year on year. That's exactly what
10-20
happened. So
algo
from
range
April to
broke out
December,
into
the trade deficit in
10-25.
goods went down by 17%. When we look at it, is the trade policy working? We're looking at the direction of the trade and the
Guys, I
trade
think I need to
deficit,
go
so that's
smoke a
going
cig.
the right way.
We have 96 people here. Let me just say, thank you all so much for being here. God bless you wherever you are in this world and this country. Thank you so much for trying to be active and being active when you can. But definitely, thank you so much for hitting the like button when you are here. I very much appreciate it. And incredible. Yeah, honestly though. Oh, this year has been fucking crazy. It is still crazy, but wow. March is coming in 5 days. I wonder what the fuck March is gonna bring us, man. It's about to be nuts. That's what, this is so fucking crazy. Uh, we are back into the purple box on QQQ. We are testing the purple box on IWM. There is a purple box on SPY. I did not draw it. I guess I could draw it. 10 to 10. 950 to 10. 10 to 10. I think I have to draw 950 to 10. Alright, I'm going to do that. And I'm going to walk away for 5 minutes so that no matter what happens, I don't sit here and be like, ooh, ooh, ah, ooh, can the, ooh, ooh, ah, ah, and they get me. Right. So.
Kevin Hanks, pre-bell playbook, joining us. Of course, everybody's getting ready for Nvidia. Since last week, we've been speaking about this. This can really determine things one way or another. The CapEx spending, how much people believe in AI, and so on. What are you watching?
Good morning, Nicole. You know, you can make the case that everything we worried about in terms of CapEx spending from Microsoft, Google Alphabet, Amazon, Meta Platforms, all that CapEx spending, where's it all going to end up? And the answer, in many cases, is going to be Nvidia. Now, AMD is going to play a role in that. Broadcom's going to play a role in that. But those stocks should all move today. What do we have in store today, Nicole? About $1.52, something in that range in terms of earnings per share for Nvidia. That would be a 70% increase year over year in terms of earnings per share. How about revenues? Revenues about 65.7 billion, something around there. That would be a 65% gain year over year. So now that the table is set, now that we know all these names they're going to be affected, is Taiwan Semi going to be affected? Is Micron in memory going to be affected? Of course it is. Are these all the mega cap tech going to be affected? Of course they are. So just remember, it was a quarter ago that they came out with earnings that we thought was beyond expectations, beyond what we thought was good news, and the stock still sold off. Since then, flatline. This quarter, new story coming out in about 6 hours, Nicole. It should be a good one.
Yeah, and by the way, as you mentioned, Taiwan Semi, I was looking at Japan and South Korea. I mean, we saw up arrows there. South Korea's been at highs. I saw SK Hynix and Taiwan Semi, also Samsung. All of those had up arrows today. So the tech trade is on today, at least for the moment. Let's talk about the State of the Union last night. Obviously, the longest ever in history, covering a lot of different topics, particularly about the economy and America. Your thoughts and what some of the impact could be on the markets today?
Now, at the Schwab Network, we take no political stance. But from an economy stance, the question has got to be this, and our viewers should think about this. How do you slow down economy and bring down inflation without taking the economy into a recession? That's what the administration, Scott Bessent, Treasury Secretary, is trying to accomplish, right? They're trying to bring down inflation while continuing to grow the economy and have wages higher than the level of inflation. So people are frustrated with prices. You hear the word affordability all the time, but it's hard to bring down. Remember, when you talk about inflation, that's the growth of prices. I don't think this country wants negative prices crashing, because that would be a big red flag for the overall economy. So bringing down prices slowly, I think, is what this administration is trying to do. Will they get there? I don't know. Will the economy go into a recession? I don't know. So far, we've managed to dodge that. I think you know, the partisanship of that event last night is a little bit sad and depressing. But all things considered, what I think the difficult task is to bring down inflation, which they're trying to do. They've got unemployment down to 4.3%, but bringing down inflation while not putting the economy in a recession, Nicole.
You know, I love speaking to you sometimes because you know what I'm talking about. When I say Fannie and Freddie, you know what I'm talking about.
Yeah.
And so this goes back decades. And something that the president did institute was that Fannie and Freddie had to put money to work and put probably $200 billion or more buying mortgage-backed securities, bringing down mortgage rates. You have mortgage rates at the lowest level in some time, a long time, at 5.99 instead of at 6%. And in addition to that, even maybe seeing a potential spin-off or part. Some of the parts, I don't know.
She is right. SK Hynix,
between 500 and 700 billion dollars in IPO this
Samsung,
year.
all
This
rose
is big
overnight.
stuff, folks, and you know it's not something that we talk
I
about.
feel like
every
I'm
day,
going
but
against the
Wall
world.
Street for 30 years, you know what
They're
a big
making me feel crazy.
piece of the puzzle Fannie and Freddie are. And so buying those mortgage-backed securities and helping to bring down those rates and really attacking affordability, that is also, politics aside, what this
What a
administration
fucking
has
nasty
done.
bear trap.
It's my understanding. You tell me, in the meantime, with
Lower
mortgage
into
rates at the
1020
lowest that
on
we've seen in a long time, and you have mortgage apps this morning.
QQQ and went higher into the box.
You cannot argue.
Went lower on
case,
1020
Nicole,
and went. Oh,
that
okay. So I thought QQQ went lower than SPY.
The 30-year
It did.
mortgage rate has come down from around
Nasty.
7. You mentioned
Small
it
cycles are happening,
slightly
medium
under
cycles are happening. It's
6%
bullish for now,
at
but
one
yeah,
time.
this
The
is
official
fucked.
numbers
I expected
for
this
mortgage
at 1010,
applications,
honestly.
it went from
But
6.17 to
IWM is not QQQ mega bullish.
6.09% for the week.
Nvidia right now too.
That has done good things for refinances.
All right, let's do our first poll of the day, folks.
7.1% a week ago.
This shit is gonna fucking end green. If you think above 690 today, end the day.
Is purchases. Purchases down 4.7%.
If you think we're gonna dip below 690, stay below 690.
So that leaves the composite up 0.4% for mortgage applications. Now, Diane King Hall and I were just talking about there may be some seasonal factors here, and the time to really look and see if these lower mortgage rates are helping housing affordability and the overall housing market might be when we get to the spring. And
bullish
families can move as
690
school
plus
year ends and another
bearish
starts
690
if
below.
there's movement in housing then. But rates, what you can't argue with, mortgage rates, 30-year mortgage rates have come down in the last 12 months.
I'll be back in one second.
Well,
I'm going to run to the bathroom. Let's see what this poll says on the WhatsApp group.
That moves the housing market. That stimulates the housing market. I know you said purchases had a down arrow, but someone is much more likely to buy a home at 6% than they are at 7%.
We have 2 people voting bullish above 690. We have 5 people voting bearish below 690. 6 people now. Okay. This is before earnings, right? This is literally before earnings into the end of the day. Near, so like 2, 1. We have 4 people voting bullish above 690. We have 4 people voting above 690. 6 people voting below.
For years, growth investing meant big tech. Now AI hype is cooling, volatility is back, and investors are rotating into energy, industrials, and consumer staples. So where can you find quality growth at the right price?
8 people
Jacob
says
Hemmerich,
bullish.
Chief Investment Officer at
7
SRH
people
Fund,
says
who joins us now.
bearish.
Jacob, great to have you here.
Plus or above.
It's good to be here.
So let's start with tech, because it feels like AI has gone from unstoppable to questioned almost overnight. How are you thinking about AI and tech investments at this point in the cycle?
That's a good question. It seems like everybody's got to have an opinion on AI. Is it in the early innings? Is it in the late innings? Are we maturing? Is there years and years of great growth ahead? At SRH funds, we think we don't have to have an opinion on it. It's kind of back to the old Warren Buffett adage that investing is like, it's like batting in baseball, right? You don't have to swing at every pitch. And in investing,
Well,
they don't
what a
call it
timing
strike
of the
if you
ball.
don't. So you can just wait for the
Yeah, my
pitch that
headset
makes sense,
green.
wait for the pitch you understand and you're confident you can hit. So yeah, AI is the buzz, it's the trend, it's exciting, it's going to be transformative, just like the internet was in the late 90s. That doesn't mean it's a great risk to take today. and it may be a wonderful investment in the future, but I don't think you have to know. I think if you do good investing, you can find other opportunities.
Unbelievable.
Okay, so you might not have to have the answers to all the questions at this point, because there certainly are a lot of questions. But how do you position within it as you think about growth at a reasonable price? Is the pullback that we've been seeing creating attractive entry points?
My headset, I broke it. I need to go buy a new headset.
The skepticism that we've been seeing is actually justified, and you need to find growth elsewhere?
This is so fucking crazy. This market is fucking nuts.
A lot of different places.
Look at that fucking. Did you just see how that candle just flipped down from being green to red in 3 fucking minutes? IWM breaking the floor, going lower.
If that disruptive technology doesn't
SPY.
totally destroy the
30
industry,
level at the
those
minimum
questions,
is breaking
right?
time
Is
is
it going to work?
10:30.
Is it not going to work? There are other places, though. Again, I think you don't have to be in the most competitive space. I think the smartest people in the world are trying to figure out if AI is working or not working. And there are other opportunities, like you mentioned earlier. Industrial is a good example. There's places that are coming off of low cycles, that have reasonable valuations, that present some interesting opportunities. And some of those companies
LOD is not
can
breaking yet.
benefit from AI without sort of taking the capital risk that
Mega
maybe
candle.
some of the direct AI companies are in.
Okay, so let's dig into some of those opportunities, because
I'm
investors
gonna
seem to
go
really
get
favor
some.
stocks
I'm gonna
linked
go get
to
some Scotch tape.
kind
I'll
of
be
the
back in 2
physical
minutes.
world versus digital so far this year. We're seeing a lot of the AI immunity trade. You mentioned industrials, but specific names like Deere or Exxon or McDonald's, things that AI might not be able to disrupt. So are you in that pro-rotation camp? Where do you look when leadership broadens, if you could be a bit more specific?
Yeah, and one of the areas that we're interested in is trucking, for example. Trucking is something that got beat up. I think trucking was in a down cycle in the last few years. Things are starting to look strong. It's physical, it's necessary. It's also something that, with all the routing and logistics that's involved.
Guys, give me 1 second. I'm dealing with so much bullshit. My headset fucking broke.
Something that AI is going to replace, if that makes sense. That's an area that we feel like there's some potential opportunities in. Another one is we like looking at like the home builders, for example. Not just home builders, but stuff like that, where it's inexpensive because no one seems to be paying attention. And there's still a lack of housing in the country. So there's still a need, there's still demand. It's not going away.
Yet I'm taking a look at, so the fund that we're spotlighting here is the SRH Fund's U.S. Quality GARP ETF, growth at a reasonable price. Taking a look at the sector breakdown, and I'm seeing that it's software and tech.
Yo, this $50 Razer headset, not
so
it.
You still want
This
exposure
$50
there,
fucking dollar headset.
but this provides diversification just away from AI.
I think the key difference is when we talk about quality growth. So quality growth, what we mean by that is we're saying we want growth that's sustainable, that's not a flash in the pan kind of company, kind of growth. It's not a overly cyclical, it's only on the growth side of the cycle, and it's not growth that is dependent on acquisitions. And so, yeah, there are some great tech companies, there are great software companies that can provide that kind of growth without it being something that feels overly risky. It's just a short-term trend. It's something that's not going to last.
All right, I'm back.
So there are plenty of opportunities still in the tech world, still in the software
Got a lot
world.
of volatility today.
Okay, so breaking it down by some of the biggest holdings, I see
I had to
Ciena,
tape
so a
this shit
software
'cause my
play,
mic was
Emcor,
getting away
Jabil,
from my
Enersys,
face.
Cardinal Health. I see New York Times on
Man,
there.
though,
So
but look
not
at that fucking
necessarily
cycle.
the
I literally
names
said
that
it
we
might
would
small
have
cycle or
typically
medium term
associated
cycle.
with growth. Is that
now it's not even
because
breaking
you
the
think
floor,
some
so
of
it's
those
testing, but
big
wow.
tech names aren't quality, or they're not a reasonable priced asset
And a 1/3, 2/3, 3/3 bearish cycle.
A lot of them, it comes down to price. Price matters. That's something that we've seen
left
in the market. We've been talking about a lot
on the 5 and the 15.
internally. Is the large names, the large companies have gotten expensive.
Should be pulling the market
We
lower
see
right
that in
now,
large
but
caps in general. The large caps have one of the higher PE ratios. Not that PE is the end all be all. It's not how we do valuation, but it's a good metric to look at.
alrighty.
It's higher than it's been for a long time.
690. We're right at 690. I can't fucking believe it.
That gap in
5 fucking
valuation
minutes.
has gotten
Things
really high.
change
So there's
mad
some
quick.
opportunities in some of these smaller companies. I think that's one of the areas that is shining in our portfolio, is a lot more focus on kind of these medium-sized companies. Again, some of those are benefiting, and Imcor is a good example. Some of those are benefiting from the AI trend. They're more the picks and shovel type company than they are the gold. But if you can get it at a reasonable price, if you cannot overpay for it, that doesn't mean it's the cheapest thing.
930 open candle range.
For it, we think that guards against too high of expectations, where you got to really hit it out of the park to keep the stock moving in the right direction.
Okay, so you've made the case for mid-cap over large cap. Make the case for mid-cap over small cap, though, because we have talked a lot about so far in 2026 the small cap outperformance that we've been seeing with the Russell outperforming the Dow, NASDAQ, and S&P 500. Why mid-cap over small cap, though?
Yeah, I think it comes down to risk. Mid-cap, if you think about a medium-sized company, it's small enough relative to the large cap that it's not mature.
I'm sorry, I have to draw all these colors. People might hate on me for it, but it is what it is. This is fucking
it's
crazy.
got balance sheet stability. It's got maturity. It's I think got a higher probability of surviving, especially if we go into a down cycle. And a down cycle could happen. I mean, I'm not predicting a down cycle. I don't know, but it could happen. And if it does happen, are the companies that you're invested in going to survive? I think that's a big question. And the mid caps, I think,
690, 690. That's not a fucking coincidence. That's like almost fucking perfection.
Better balance sheets to withstand that. It's sort of I like to think of it as you've got sort of the growth potential of these small caps with maybe less of that risk that the small caps might have.
So if it's mid caps that really have the compelling valuation and where you see the growth, what does that mean for the direction of the overall market then?
Smart people understand cycles. Stop that bullshit in chat. Come on now.
Some of these large cap indexes, anything can happen. Anything can happen in the next 6 months.
1/3, 2/3, and 3/3 is the most important understanding.
Long-term focus. When we're thinking about trends, we're thinking about 10 years, not in the next year, the next 6 months. And so anything can happen in the short term.
Not predicting tops or the bottoms, but understanding cycles of candles.
Risk.
Understanding that we are in a 3/3, but we're playing with the floor. Understanding cycles. To the max.
We want to be in equity.
Not just one-sided. All-sided.
In the market.
Wedges creating on Nvidia. Wedges creating on SPY. Wedge is bullshitting, but trading
sour or not
on QQQ. IWM is, I don't know, I guess trying to knife up. It's creating some bullshit wedge.
Okay, so how do you balance that?
While it's doing everything, the technical analysis, while it's doing everything, cycle and
I meant
time.
what sort of returns can we expect to see this year? I wasn't meaning 10 years out, but you don't also want to miss out on any of the potential momentum there. So how do you balance?
I'm just drawing things out. I'm just typing out time, but in reality, I'm doing mental fucking analysis. I'm doing mental fucking analysis and calculations and deductions and cycles
are beaten
and
down
time.
now, but might lead the market higher later on down the road.
Yeah, I think looking at the beaten down areas is important to see if there are opportunities there, right? That's where taking that relative value, kind of saying, hey, is it a reasonable price? Is good? Is the growth sustainable? I think that in the near term, those returns could be strong and they could be sour. I mean, we've been very bullish on the market the last few years, and now we're saying, what's the question? What's going to happen? And I think the way you balance that risk is you go into these, like we've been talking about, go into these areas like mid caps or industrials, trucking, home building, where
I low-key wish that candle was fucking like news-based though. I wish that candle at 10:30 aligned with some news.
You're more
maybe another candle, but like I just
positive,
wish.
solid returns, even in the next year, in the next little while, because the valuations seem more appropriate for the growth profile that these industries, companies, sectors have.
Okay, we'll leave it there. Jacob Hemmer, Chief Investment Officer at SRH Funds. The ETF is U.S. Quality GARP, ETF SRHQ. Thank you so much for joining us. Really appreciate it.
I appreciate the opportunity.
Making it hard as fuck. Creating a wedge.
Welcome back to. So glad you're with us right now. We're seeing some up arrows. The Dow's up 219 points. So it's been a pretty nice run. The Dow's up 10 months in a row. You'll take that. Not the NASDAQ, though. It's having a tough month. Stephen Whiting's with us, co-founder and CIO at CIO Group. I'm glad you're with us. And I specifically sort of did that story about the Dow versus the NASDAQ because the NASDAQ, in fact, is having the worst month since last March. What's going on in tech? And are you saying that software is, quote, a lost industry? What's happening here?
Yeah. Far from it. But look, there's a lot of dispersion within technology. You take a look at memory chips. You take a look at semiconductors.
They're just saying this shit because
just in the last
you
3
just hasn't
months,
been going higher.
the public companies that are
Like
spending on the AI build-out have raised their CapEx spending plans. The increase in the last 3 months is just $94 billion. So it's a massive amount of build-out in technology in the hardware side. And investors just think that this is going to eat software. We just won't need it anymore. But some of the software makers, I mean, the big ones like Microsoft, are really the place where AI takes place. They are cloud companies. They are cybersecurity companies that you're not going to just ask your large language model to take over. Now, this is an area where there's always disruption, but these capital-light industries and software, again, many will adapt. So there's not a lot of dispersion there. Many of these companies are just off 30% as if they're all the same thing, but tremendous dispersion, which is the usual thing with fintech and stuff.
I wanted to sort of, so
SPY's
people
trying
really
to go
know
higher.
what we're talking about. For example, I pulled
Nvidia
up the
trying to go lower,
which is
and
the
a wedge.
software
Things
index.
are all mixed.
But today, tech
This could
is
be the
doing
most
well.
critical moments.
You know,
Most
this
critical
excitement
moments
about
happening
Nvidia.
right
We saw
now.
Tech Abroad doing well. And
Of
what's
the day.
not doing well is the IGV index, to your point. In fact, it's hovering around 52-week lows. 76 was the 52-week low. What are we talking about? Names like what are you putting aside right now?
Workforce and Salesforce, are they the same thing as Palo Alto and Microsoft? They're in different businesses and they're providing different things for end customers. But I'll tell you something else. I mean, we also have to take advantage of dislocations like this, but this cannot be the singular focus for portfolios. There are multiple things that are going on, areas of worry. AI is not simply destroying everything or boosting everything. We are finding a lot of dispersion simply because of AI.
This shit is
we also have to
crazy.
build portfolios that are not going to be the bet on one thing or the other in AI. And you know, just one of the things that we prepared to talk to you about.
I'm drawing
was,
cycles over each other right now.
The energy that goes into AI. You know, so if you believe that AI
Holy
is going to have a
fuck, this
profound
shit is
negative
crazy.
effect on employment, somehow we have to power it. And so the utility and energy sectors are the strongest sectors of the year. Now, a little bit of that is geopolitics, but a significant part of this is just powering AI.
Everything is bearish trying except Nvidia now.
To the economy. It's going to need to stay on.
It's the only reason why I said not yet.
Out. I mean,
what a fucking stream.
like
All
like
bears are trying, but this shit is not.
I
want Nvidia to follow the market. Nvidia will lead QQQ. That's all I know. Nvidia is showing one green candle and fucking QQQ just showing tiny ass red candle negates that shit in my head. It's like fucking.
And both dislocations either now in the case of software or in the year past in terms of healthcare. Healthcare and technology are basically the two sectors that become larger and larger to share the economy over time.
Unless they break down the range or something.
They're what the economy is becoming. Those are the two long-term outperforming industries. When they have dislocations, you can take advantage of that. But let's be prepared.
690.5. We're literally in the middle of the market open.
As large as 80%.
I wanted to ask you, and I do want to get to your energy play, but Nvidia today,
doing?
As a pro
Bears
in
are
this
trying
market,
on SPY, looks like.
We all look at Nvidia. Everybody has it in their 401ks.
Could just chalk here because of Nvidia too. It could just be bear trapping here, just like it's bull trapping.
What will you be watching specifically? Do you
for
like
a little
Nvidia?
bit, like 20 minutes, or it could show that, or just fucking, I don't know.
We think it's
I'm fucking feeling that because of Nvidia. I don't know.
And
Nvidia
that's,
showing
again,
max
the
bullish today.
massive build out in
Still.
AI infrastructure.
I need my phone
Nvidia
charger.
is sold out, perhaps through 2027. But the problem with it is that its recent high, it was 8% of the entire US equity market. And that's a lot of idiosyncratic risk in a hardware maker. And hardware makers, look, I remember when people said Intel could never, ever be replaced. So if you look at the stock, very powerful fundamentals. It's here for very good reason. But the concentration risk in Nvidia has been pretty significant. And of course, we think that fundamentals
It's
strong.
raining,
We're
man.
investing in AI infrastructure,
And hopes.
54% growth rate. But the problem is we probably
It's
can't
raining,
continue
man.
at that rapid pace beyond 2027.
Hallelujah,
So your
it's
portfolios are going to
raining,
have
man.
to adapt sooner or later.
I am not convinced until they break out or break lower onto 5.
Pick today.
So this is a master limited partnership
Just
ETF.
like IWM did earlier.
For individual investors, you can take advantage of underlying MLPs like Western.
It's raining, man. Hallelujah, it's raining, man.
That are underneath it.
Hallelujah,
Right now
YSQ,
is about an
QQ.
8% yield.
Trying
And
to turn
in an
down.
environment where there's some geopolitical risk, there's the need for energy infrastructure on the regulatory
This might
front.
be the
It's
real
getting
fucking
easier,
trend
not
line, to be
harder.
honest.
American oil and gas output
Sad as shit,
are at
but
record highs. So when you
I
can
want to
get that
delete it
much
now,
in
but yeah.
yield, that's really
Looking
a
at
nice
QQQ.
offset to what you're seeing in terms of the day-to-day swings in technology.
Kind of a
And we would add
lies.
other areas like that, some in the real estate market, some in healthcare.
I can't undo what I
These are
just did.
sectors that are up this year, and they're also just not closely correlated to the AI trade, even if in some respects they're important to powering it.
Man,
All right, thank
I
you.
can't undo what I
Stephen
just
Whiting,
did.
thank you. CIO.
Control Z will
Great
not
to see
work.
you.
Fuck. Nvidia is a huge, huge percentage of SPY.
Joining me right now with more details on some more big movers you want to hear about, and that is Diane King Hall. Let's take a look also at Circle. That's been one we've been talking about throughout this morning. Good morning, Diane King Hall.
Good morning. Good to see you, Nicole. Circle investors circling around that one. Those shares rallying huge, continuing to advance this morning even higher as after a top and bottom line beat. Those shares rallying well over 20%.
I don't see a fight going on in Nvidia. I see a fight going on SPY. I see what I see on Nvidia right now is literally
much better than expected on the top and bottom line in terms of earnings. They earned 56 cents per share. The street was just looking for 17 cents, so a huge beat there. Revenue coming in at above 770.2 million.
This is what I see right now on Nvidia.
There. The street was looking for a little bit more than 739
shark control
million. So the company saw circulation of its USDC product grow over 70% on a year-over-year basis. On-chain transaction volume up nearly 250%. That revenue growth was 77% for the quarter. Adjusted EBITDA growing over 400% year over year. So strong growth there. Now, as we know,
oh hell no, dude!
Interest on reserves backing USDC.
Atlantic
so higher
Coast,
circulation,
great white shark.
rate environment equals higher reserve income there.
690 sub I needed SPY
because
of Nvidia. Fuck.
To stablecoin adoption trends and of course interest rate dynamics there. The CEO highlighting expanding global enterprise adoption. That's one of the things we've been watching in this space. And more
literal shark control
into real-world payments because that's been one of the questions circulating
going
in
lower
this
and Nvidia not showing any fucking sort of
use case here. And of course, Treasury use case is one of the things that the CEO highlighting. Shares have been under pressure since their IPO, but making a big comeback today. Just also want to highlight, we do have an interview with the CFO, Jeremy Fox-Geen, at the end of this week.
Oh, good. Looking forward to that. In the meantime, I mean, I hate to be Captain Obvious, but I mean, this was really nearly $300 stock last July, and now around $50 was the low. Gets that gain today to $75. So, you know, trying to stabilize the stable coin story.
Why is
Let's get to
Nvidia
Kava.
fucking
That's another
stabilizing,
name to
man?
watch.
Big move here as well. I mean, this one is one of those companies that had a
Jesus
difficult year
Christ.
as well last year, but you see shares jumping
This
off
shit
the
needs to
back
stop
of
fucking
its
soon.
latest quarter. They
Now.
had surprising same-store
196.
sales growth.
It's
Adjusted
not gonna.
EPS coming in
Fuck!
a penny better
Nvidia.
than expected at 4 cents per share. She was looking for 3 cents. Revenue 274.99 billion. That was also a beat. So they beat on both the top and bottom line. Same-store sales increasing 0.5%. Now that may not sound like a lot, but again, the forecasts were calling for a decline there. So the growth, though, was driven by pricing and product mix. So they obviously had to play with their pricing strategy
against the market, against the world.
As opposed to heavy discounting. So in other words, we've heard about this consumer making choices and being more choiceful, but it looks like for Kava, they have figured out how to draw the consumer back in. So they had a better than expected quarter overall there. So again, the growth was driven by the product and price mix. It's not so much about the traffic because there actually was a decline in traffic, Nicole, here. So pricing power, but keep a watch on traffic.
Yeah, I mean, those two names, Kava and Chipotle, similar but different, right?
Nvidia
so
not following the market.
15% gain here.
Market
see
just
what
going.
Chipotle's doing, just out of curiosity. It's up 1% today.
Yeah.
Okay, how about HP?
Okay,
it's
HP.
Crazy.
Those shares have been under pressure this morning. Let me do a check on see where they are now. Not as much pressure as what's indicated in the pre-market here. So little change this morning off the back of its results. But listen, that stock has been an underperformer so far this year. It is down double digits year to date. In terms of its most recent quarter, HP earned 81 cents per share. That was actually a beat. The street was looking for 77 cents. Revenue coming in at 14.4 billion, also a beat. But this one is about the guidance.
I need Hulk to come in, dude. I need a Hulk smash. Fuck.
Here,
what the shit
they did
is
reaffirm their full year adjusted EPS range of 290 to 320.
Break the LOD and turn the fucking momentum or something. It's fine.
Free cash flow is also expected to come in at the low end of between 2.8 to 3 billion. So the guidance wasn't cut, but the tone of this is clearly softening here. The headwind is, they talked about a dynamic environment. We know they're operating in
super fucking flying, dude.
The memory chip
Every
costs
candle.
are a headwind. It's been a headwind for the industry, so that directly impacts PC margins here. So that's one of the risk factors here for HP.
Yeah, all right. And we see Oracle up 1.9%. We had an upgrade there in Oppenheimer. Thank you, Diane King Hall. Go look at those names there on the move and coming up.
Man, I added on Nvidia 200, put that open. This shit is fucked. Zeus himself is coming in with these cycles right now.
And you're right. I think the tech crisis points to the fact that this disruption is real when it comes to the AI impact. And Nvidia is the poster child when it comes to the demand that they have seen for their chips. And look, all the hyperscalers, we started the year thinking they're going to grow their CapEx 30%. Now that number is 60%. Some of that increases because of memory prices, but then you are also seeing an increased plans to add capacity. And that's where Nvidia will likely have upside to their numbers tonight. The question still remains around the sustainability of growth, because when you are growing 70% at the scale that Nvidia is at, $300 billion run rate for 2026, the numbers, the growth rates will taper. It's a given. So that's the part that I think the visibility is what you want to figure out in terms of how much visibility the company has and what that means in terms of growth rates.
I mean, I'm looking at the FA function, which is a consensus of all the analyst forecasts here. And again, in calendar 26 or calendar
color coding
26, 50% revenue.
Then he
growth.
said,
I mean,
not bearish looking now, LOL. Candle just fucking following up to Nvidia.
From Nvidia tonight.
This candle trader fucking done
these days?
This is why.
I mean, Jensen has called out demand
candle just comes
stronger at least 10 times, since the start of the year, CES, Davos. And yesterday, the fact that AMD had this deal with Meta where they ended up giving away 10% of the stock as warrants. To me, that's a sign Nvidia still is the leader when it comes to, everyone clamoring to get their chips. And everyone else is trying to make sure they stay in the race, which is what the move I thought.
Yeah, you're about
AMD
7
had
minutes late.
Yesterday, you basically put the surveillance cork in my mouth, and Mandeep lectured me on the use of AI. I look at it as a $20 subscription. How in God's name did they pay for the billions of data centers with $20 from Alexis, $20 from Paul, and $20 from Tom?
So right now they are subsidizing it, and it is being priced below the costs that these hyperscalers have to pay to Nvidia to get the chips, because Nvidia clearly is not taking a hit on their margins. They still have that mid 70% margins. So prices will go up. That $20 subscription will go up in price.
Is this familiar, Paul? It sounds like streaming.
I know.
And also the enterprise API usage. That's a big part of adoption. Don't just focus on the consumer.
That's corporations.
That's corporations.
They don't pay $20 per person.
Yeah, they're signing multi-million-dollar deals right now.
I mean, Nvidia, you just mentioned $300 million in revenue. I just went on to look at AMD, $45 billion of revenue. It's not even close, dude. So is Nvidia that much ahead of everybody else in terms of this story?
They are, and that Blackwell chip ramp that they showed last quarter, I mean, you will see it in full gear in the results tonight. And now they have announced the next architecture, the Rubin architecture. So that's how far ahead. They're at least, 18 months ahead of everyone in terms of the efficiency and the compute capacity and power that they are able to show with their chips.
Across the nation today, Mandeep Singh with us with Anurag Rana. I just can't say enough about Bloomberg Intelligence ability on technology. We threaten to have both of them on together, but they can't be in the same room at the same time. Okay, Mandeep, here's the real world on depreciation. I had a 2019 Intel cheese grater, fancy Mac computer. Fancy people like me can buy. It has a depreciated value of under $400. The fancy Nvidia chip in the bottom of my cheese grater is now holding up a martini at 5 p.m. I mean, tell us about the depreciation and the technological pressure that Mr. Wang is under to get better, and everything else becomes a coffee table for a martini.
Yes, and that's a great point about the long-term, multiple that this company can get despite its growth is because of that aspects. But right now, the real constraint is power. So everyone has a finite amount of power, and you want the best compute. And that's why people are willing to upgrade to NVIDIA's latest architecture, because they can't add more power. They want to use the chip that is best optimized for the power they have available, which is why NVIDIA is releasing their new generations so quickly, within a year, in some cases.
It's Blackwell.
It is? I don't know.
Somebody whispered it.
Look at the rental pricing of the older versions of their chips.
Rental pricing.
Yes. I mean, they're still off the charts. Everyone wants to get a hold of whatever the market has to offer in terms of the rental price.
All right. So in the last 3, 4, 5, 6 weeks, we've had this sell-off in software stocks. What are you and Anurag telling institutional investors these days about that?
That it's going to take a while to clear this out in terms of these companies adapting, the LLMs situation now. They have to integrate LLMs. They have to offer, functionality that's built on top of LLMs. And it's going to take a while to play out.
Don't I just run out and buy Salesforce.com hand over fist here? I mean, is AI going to put a Salesforce.com?
Not out of business. The terminal value is not.
Guys, we are Nvidia.
All
right, you guys cop the Nvidia GPU 11400.
See, finally, Tom, these tech analysts, investors actually have to do some work. Before they could just sit back and say, my business is growing 20, 30%. He's built his career on just my business.
What a fucking W.
A year.
Yeah.
He and Anurag.
No,
now,
you're right. They just plug it in.
Now I think they got it like,
mess.
oh boy.
Okay, one final question. You know why it's waiting for us here. We got to get him on. Mandeep Singh, Microsoft AI, transform with Microsoft AI where trust meets innovation. Great MBA
Literally
statement.
a fucking mess.
Wonderful. What's the level of panic at Microsoft right now?
Good question.
In the AI wars?
I mean, look, the whole OpenAI situation is what's really causing the panic. Microsoft is still deeply
OpenAI.
embedded. To Paul's point, they're a system of record in a lot of the cases.
Jensen Huang.
And most likely you are going to add AI on top
Man,
of
who's gonna
Microsoft
stay here for
software.
405
You're not going to
Nvidia
rewrite,
earnings?
what Microsoft is doing with Office or Windows or all the other software they have.
Shit,
The
I might
question
even
is,
go live for
they
the
don't
Nvidia
have
earnings
their
call,
own
bro.
LLM.
Fuck.
And that's
I
where
think I'm gonna
the
go live
reliance
for the
on
Nvidia earnings
OpenAI is
call.
hurting
If
them
anyone wants
because
to come join
OpenAI
for
wants to get into applications themselves, and that whole thing is not panning out
I
very
thought
well.
LLM was a law degree out of the United Kingdom.
Yeah, I know.
The good news is that almost all countries and corporations want to keep the deal that they already made, knowing that the legal power that I, as president, have to make a new deal could be far worse for them.
I'll be here for the
and
Nvidia
therefore
earnings
they will
call.
continue to work along the same successful path that we had negotiated before.
Did anybody watch the State of the Union
Supreme
yesterday?
Court's unfortunate involvement.
That's President Trump on tariffs last night at the State of the Union. The administration preparing a separate order to raise the global rate to 15%. Trade Representative Jameson Greer with me just moments ago telling me tariffs will go up to 15% for some countries. A lot of news in that interview, which will be online shortly. One industry feeling the pressure is U.S. quartz manufacturing. It's been facing a flood of foreign imports, including transshippings from countries like India, Turkey, Vietnam, threatening more than 100,000 American jobs and local communities. Joining me now is the CEO of Cambria. Marty Davis is here. Cambria is a Minnesota-based family-owned manufacturer of American-made countertops of quartz countertops. Marty, great to see you. Thank you so much for being here.
Thank you, Maria. Great to see you again.
What did you think of the president's comments last night, and assess the backdrop for us in terms of what you're seeing from international competitors?
I think the president's comments were right on the money. He was actually quite kind about it. What the decision they made to the policy they made to take away his power as in the executive branch and as our president to protect America both on an economic front and a military front in a manner to use America's economic
Crazy.
power
QQQ looking bullish.
So
IWM hovering at the floor.
Proper behavior for America and put America first.
Nvidia looking bullish.
So what do you want to say to the president as he is about to travel to Beijing to meet with Xi Jinping? I know India is also a country that you've had to deal with this.
Yeah, the Pacific Rim to me is very predatory. They come in and they hijack our manufacturing in the United States by selling products to our prosperous middle class. And when they go home, they don't tell the people they just sold the product to that it's their job they're taking back to China or India or the rest of the rim. So I think they're very predatory. They come in with cheap products. They game the system. It's not free and fair trade. They manipulate their currency. They fund China as a large state-owned enterprise. Both Vietnam and China are communist
all
countries
semis around the world bullish
they
as
game
fuck.
the economics
Samsung,
of the manufacturing
SK,
systems there
Nvidia
to
now.
really to offshore American
Overnight,
manufacturing.
intraday.
And they target it. In our industry, they have targeted 95% of the quartz products they make in the Pacific Rim they took from manufacturing here and sell it all into the United States. It's not for their domestic market at all. It's very predatory.
So right now, we just had Jameson Greer on, and he was telling us about the investigations that are underway. He's doing investigations over the 232 and 301 authorities that the president will use for tariffs. What specifically do you want to point out that he needs to understand or they need to uncover about these probes and studies that they're doing?
Well, first of all, Jameson Greer is a brilliant guy, so we're lucky to have him there. The president made a great choice. Of course, President Trump is brilliant about these matters as well. He understands it very, very well. But we have to make sure that we get in and take a deep look at how they subsidize, how they game the currency, and how they game their system.
Captain, I remember that too. That was a pretty memorable moment. Somebody in chat was like, that's such a gotcha moment. And President Trump was just looking around, gotcha emoji.
Free and fair markets. So they don't have free and fair
oh my God.
Rules, but they come in and
that made me feel really American too. I'm not gonna lie, but like, yeah.
Under a command economy, they can.
It's just like how they pan the camera around at that exact moment.
I know he writes deals. They say, I don't know. He's pretty sharp about all this, and he's got to stand strong with them.
I definitely remember that.
Modi is a wolf in sheep's clothes, And in my opinion, and India is the next China, Maria. We've talked about it. China is reverse fracking their policy through Malaysia, Vietnam, Thailand. They're orchestrating all this trade after Trump came down on them in 2018. We as an industry came down on them. They immediately pivoted that tariff material that was restricted through the rest of the Pacific Rim. They're very talented. Trump always says they're very smart. He's right. And I think we have to remember these are
UHOD on
foreign
Nvidia.
governments, not foreign people in most cases. The private manufacturing sector of those
Wind
government
direction is so
countries
north on
definitely
Nvidia right now.
participates in that. But these are Vietnam and
Was.
China are communist governments,
Is,
and
I don't
they
know.
facilitate. China does in large part with their
Incredible.
technology. They own a lot of the plants in Thailand now.
Yeah.
And so they're really sharp. They need what we have. We have the prosperous middle class. It's interesting. They come and hijack our middle class jobs to sell products to our middle class, our prosperous middle class. At some point, that circle will catch up, and the market that they're selling to won't have a job.
So what are the levers the president needs to pull? Because in the middle of all of this, you've got countries like China holding back things like critical rare earth metals.
Well, if you look at China, I mean, everybody talks about this. This is a nonpartisan issue. Everybody in America should be behind the president. George Bush and Bill Clinton, in a bipartisan way, screwed this up. And Newt Gingrich, too. He was involved in it. And that's most favored nation of 2001. I think it was December of 2001. Bush put him on a
Nvidia
permanent basis.
fucking leading
They
market now.
violated every aspect
Since
of
about
the most favored nation
10:35,
WTO
10:50.
entrance that you could violate.
Wow.
We don't hold them accountable. For 10 years, they took 3 million jobs, and Bush did nothing about it. Nothing.
Well, I mean, we've got all these Chinese companies
talking
trading
about
on U.S.
George W.
exchanges.
Bush
Isn't
now.
that a lever to pull to say to China, look, you keep doing this, these predatory actions, then maybe these companies shouldn't be traded and be exposed to
SPY
the
is
greatest,
back in the wedge.
most liquid markets.
Now
in the world.
IWM trying to go bullish off the floor.
But I might add,
QQQ is
if
not
we
back
would have
inside the
enforced
wedge.
The rules of Bush putting him in the most favored nation.
Some sort of trap going on.
WTO,
Nvidia
state
super
ownership.
bullish
They were supposed to go
still,
down in
or
state
was.
ownership. They went up substantially.
Yeah.
What they've done on rare earth, they're violating all aspects of their most favored nation status in the World Trade Organization. And I think Bush and these guys should be out here. Larry Summers, he caused it. They should be out here saying, hey, we got it wrong.
Yeah.
China didn't go Western democracy. We thank the President of the United States, Donald Trump, for making the tough moves. Now we're here for him.
Yeah, we put a spotlight on it every morning, by the way, because we understand how they got it wrong. But you, in the middle of all of this, are doubling down on your Made in America push. You're shifting courts processing from Canada to this new $80 million facility in Minnesota. Tell us about that.
We process our courts is very unique. We own our own mines in Quebec, and it's a very unique white courts
New
that
bearish
doesn't
cycle
really exist
trying.
in America. So we processed it up in Canada. Recently, we announced and we're commissioning in May. We've moved all that processing down to Minnesota. So 100% of everything we do there will get the raw material from that particular mine. It's an $80 million investment. We moved it down into Minnesota, and I say onshored, if you will.
Yeah.
Yeah. So.
Well, and this is what the president, one of the things he's doing is this Project Vault, right? He's trying to gather as many of these strategic minerals as possible to ensure that we're not reliant on these countries. What do you want to say as we wrap up here?
Well, I think India is the new China. And together, they've taken.
You have any Indian Americans in chat, folks?
Frack into America
Anybody?
By working together in various ways. I remember at the Trade Commission in 2018, they said, "How will those countries work together?" I said, "You watch them."
Wow.
India grew
Marty,
to
we'll
be
leave it there.
an
Great to have you
economic
this morning.
powerhouse.
Thanks very much.
Maria.
Good to see you.
Yeah.
Marty Davis here. Stay with us.
American oil production is up
When is
by
this
more
happening?
than 600,000 barrels
Iran.
a day, and we just received from our new friend and partner, Venezuela, more than 80 million barrels of oil. American natural gas production is at an all-time high because I kept my promise to
I think it's
drill,
bearish with
baby,
no cycle
drill.
time
We have an old
confirmation.
grid.
Just
It could
confusion
never
going
handle
on
the
with
kind
this
of
wedge too. We are
numbers,
back
the
in the
amount of
purple box
electricity
on
that's
SPY.
needed.
We are
So
not
I'm
on
telling them
QQQ.
they can build their own
IWM
plants, they
rejection
can
trying.
produce their own
Things are a
electricity.
little bit
It will
confused
ensure
at
the
best, but
company's
we are
ability to
hovering in
get
the middle. We are
electricity while
hovering
at
at
the
the.
same time lowering prices
There's a lot
of
of bulls and bears, I
electricity for
guess.
you.
President Trump addressing the nation at last night's State of the Union, celebrating his policies bringing back American energy independence and dominance on the global stage. The U.S. oil
As soon as I say that, Nvidia is showing green candle, so I gotta stop talking. Time is 11:15. Nvidia acting like IWM when it goes one directional up, just showing one directional today.
Thanks for having me, Maria. It was glorious night.
Nvidia doesn't have to follow the market, but QQQ will follow the market.
It was optimistic. It was
Now market
patriotic,
diverging.
it was looking
QQQ bouncing with
forward.
Nvidia,
How can we restore
IWM
the
rejecting with
American
SPY.
dream for everyone?
Or vice
Stop
or
price
SPY.
rises, make America the place
Confusion.
people want to invest.
Confusion.
So jobs, new
Confusion.
manufacturing jobs can come back to our country, raise people's wages and lower people's prices, and the Democrats didn't like any of it.
Unbelievable. I mean, how do you continue doing that? I mean, I know you're just back from Venezuela. The president talked about that and the amount of oil that we have gotten so far from Venezuela. Update us.
Yeah, look at this. Venezuela's been going downhill for 25 years. We've tried all different things. It's going to be sanctions, carrots, sticks. Biden took the sanctions off if they had an election. Well, they didn't have a fair election. And nothing has driven them in a positive trajectory. The president just thinks out of the box. He said we've had sanctions on the oil.
Oh, yo, I want to do a second poll.
Let's actually enforce it.
For this Nvidia earnings. Are you bullish or
maybe the
bearish?
dynamic will change. It just changed dramatically. Now they're ramping up production. They're freeing political prisoners, starting to free their press, looking at reforming their laws. They want to go from a criminal state to a positive member of our hemisphere again, and to huge benefits of Americans. When most of the American refineries were built in the 60s and 70s, they were tooled to refine Venezuelan oil. Because at that point in time, Venezuela was the largest crude exporter in the world. And now that oil is flowing into our refineries, going to push down diesel prices, jet fuel prices, gasoline prices, lower prices for Americans, and reduce criminality, reduce mass migration, reduce the running of guns out of Venezuela. Like, this is a win for everyone.
So many great points as a result of energy being the central focus of the president's agenda. Take a look at oil prices this morning in terms of hitting 7-month highs ahead of the nuclear negotiations with Iran tomorrow in Geneva. We're looking at the price at 66.17. What do you want to say about Iran? Investors are fearing military action from either side could disrupt the flow of oil in the Strait of Hormuz.
Yeah, look, tensions in the Middle East are always going to put upward pressure on prices. They're still well below the average during the Biden administration. But look, Iran is the biggest supporter of terrorism in the planet by far. They've made that neighborhood a dangerous place, less welcoming for investment, and less stability in the country. The president's had a very clear position. We cannot have a nuclear.
That's crazy. We just had a poll done in the WhatsApp group.
And the progress in that front, I think, has been tremendous. Imagine
on the Nvidia earnings, they are personally one person.
Amazing. Kevin, weigh in here.
Long-sided, 7 people, short-sided, and 2 people.
A dominant part of the president's agenda has impacts in so many levels, as the secretary is telling us.
It's the most important thing. I mean, we all talk in America, you do it every single day, about who's going to capture AI. I mean, you're in a battle for who's ever going to be able to be the victor. Don't really look to the chips. You look to this man next to me, because whoever gets their energy policy right will win the AI battle. And that's why what President Trump has done is tremendous, the way he has shifted the world focus. And what the other thing where the Democrats don't tell you the truth, and where the president was so great,
the
if you
Democrats,
want to build a data center, your price is not going to go up because these companies are going to pay for it, but your price actually comes down. Look, I used to live in a state of California. I just watched my energy prices keeps going up because they kept mandating all of these renewables, and now it's too expensive to get any new businesses.
Confusion
but you look
happened.
At these other states that are doing the right thing.
SPY
you look
pulling
at what
back.
The secretary is doing. He's putting us in a
Nvidia
better
trying to pull
position
back
to win the AI battle and make America and the world safer.
Such an important point, and the president addressed it last night. Secretary, tell us about the data center build-out.
And Kevin said it right on. Look. If President Trump hadn't have been elected, our DOE study show we would have massive increase in blackouts right now. They were closing power plants, net closing of reliable, affordable power plants. This president kept 17 gigawatts of coal online last year that would have been gone. We would have had hundreds of Americans freezing to death in that big Fern cold weather front we had. Would have been dangerous. Instead, he wants America to lead in AI. He's making it easy to add add power capacity and doing deals with the hyperscalers. It's been a dialogue since the day he came in office to say, yes, we want you to lead in AI. Yes, we want more power on our grid, but you have to do it in a way that stops price rises and ultimately drives down electricity prices. We had an announcement yesterday. Indiana has filed a rate case to lower their rates. Georgia and Alabama, we announced deals today to add power, add jobs, and freeze electricity prices for multi-years in the future. It is a transformation from the Biden administration's reduce power availability, drive up costs, and send the AI revolution to China.
Coming up with a solution to
Man, I just sent my Robinhood
the
in
data center
the alert room.
is causing electricity prices.
If any of the 5 people wants to see, I did not take profit yesterday in the morning spike. And look what happened.
You're going to take on the cost. Here's Bernie Sanders just recently. Here's a senator. Watch.
Look what happened.
Yeah, well, I think one of the things I think we need to do, and right now, among many other things, we're seeing data centers sprouting all over the country, raising electric bills for people in the communities, et cetera. I think we need to be thinking seriously about a moratorium on these data centers. Frankly, I think you got to slow this process down. It's not good enough for the oligarchs to tell us it's coming, you adapt. What are they talking about? They're going to guarantee health care to all people? What are they going to do when people have no jobs? What are they going to do? Make housing free? So I think we need to take a
literally
deep breath,
the
and I think we
940
need to slow
bullshit on
this thing down.
Nvidia.
One way to do it would
And
probably be a
everything got
moratorium
close dated
on
as
data
fuck
centers.
now. They squeeze the shit out of it.
Moratorium on data centers. How does that
Sad.
lead to the U.S. being the #1 player in AI?
You know, you want to know what my Nvidia strengths are? Fuck, I'll say it. I don't give a fuck. 200, 192.5, 195, 172. I got a dog shit contract. 195. I got a 172.5 today. That's how fucked this shit is. I'm in fucking
power in the coming century.
I'm in
The United
deep
States, we don't want to export
as
that to
deep
China.
as I could be balls
and he's
deep
wrong on
with my
electricity
profits. I'm
prices.
still
This is
fucking green
just
for the
selling
month, but
fear.
still, this
It's
is
the
literally
states
like my
New England and
that I'm
California
risking.
that have reduced their production of electricity.
I'm risking
They have
fucking
the skyrocketing
huge, too
prices.
huge.
The states that are
I should have just
embracing
fucking
growth
left
and new,
at
and
9:40
new
yesterday, and I would have been
those
like,
are
oh,
the
we have go here. But
Something
now
just
it's
took care
like,
of it with this new policy.
now I'm in the dumbass
Very
cycle.
smart. I will
Now
tell
I'm
you this.
fucking trapped, and now I'm
The
in
next
the
year and a
earnings.
half
The earnings
is
are
going to be the
fucked.
critical time period. You got to spend the resources now because
Earnings
you're
not
going to
even
get too
close
far
by.
behind.
Earnings coming in
He's
4
going
hours.
pushing us back to
That's
the
the
dark
crazy
ages.
part.
He wants China to win.
I'm not
with
even
that
going to
policy.
work today. I
The
called
president
out.
is
I
looking
need to
for
watch
the
this
future
shit.
for the next generation to make sure
I'm watching
America
fucking
is
everything
still the
today.
country
I'm watching
leading
the
the
earnings
Final
call.
word
I'm
on
watching the
Russia.
fucking
You
4
have
p.m.,
actually been
4:05
able
shit.
to
I don't give a fuck. I'm
get
watching
European
everything.
nations
I
to
am
get
not
them
getting
weaned
off
of Russian oil.
until this shit fucking
Yes,
done
Russian oil and Russian
by
natural
6:37.
That is a constant
It is what it is.
dialogue. But yes, America can replace all of the imported Russian gas into Europe. We've replaced most of it so far, but we want to replace all of it. Not only does that benefit American businesses, but it starves the Russian
My
war
goddamn
machine of the
portfolio
funding
coming
it
in with the
needs.
biggest head and shoulders ever I've ever had in my life.
like
Like biggest fucking head and shoulders I've ever. I mean, it's still green, so I'm happy as shit on the monthly, but like it's fucking
Secretary, it's good to
weird.
have you this morning. Thank you.
Thanks for being
So much
Thanks
fucking
so much
profit.
for your leadership on all of this. Secretary
Now
Christopher
just
Wright.
being
We'll be
fucking
right back.
used
Stay
up
with
for
us.
the move up on Nvidia. It got drained. The contracts I joined early as fuck literally drained like 40%. It's at 52% down, 42% down. It's actually crazy. So it's no joke. The market really needs to move $10 or $12 on Nvidia today after earnings. And it needs to fucking hold into tomorrow. Because I need to fucking get the fuck out tomorrow morning. But this shit is looking terrible. Options are expiring on every single Monday and Wednesday now. There are options on Nvidia. March 2nd, there are options on Nvidia. March fucking 4th. I'm in some on March 2nd, but I'm scared as shit that they're about to fuck this weekend. I'm scared as fuck they're about to fuck it all actually, but I'm scared as fuck they're about to fuck this week and also, and they're gonna maybe somehow do it into Monday or Wednesday or some shit, but I'm low-key scared. Things are not looking the best. I ain't going for it.
How we are looking as we are setting up for this Wednesday, what's going to be a very busy day of trade. So let's get to Kevin Green, who joins me now. KG, very good morning to you. Obviously,
KG says Nvidia earnings to end market gridlock. Software push-out continues.
As the volatility is concerned for this market going into today's report?
Well, what's actually very interesting.
I have a dog shit Nvidia contract for $40. Like that's what's crazy. 172.5 for $53. Like I put every. I put all my dog shit free money that I don't have in the other shit.
I think the market is kind of positioning for something to kind of spark when it comes to Nvidia. But if you look at the last couple of earnings announcements, we actually have seen Nvidia trade lower, 2 or 3 days after the earnings announcement. So I think when you're looking at the implied volatility for Nvidia right now,
maybe I am too hedged up against the market right now. Like what the fuck? I feel very hedged against the market. I feel very, very against the market right now. SK, fucking Samsung rallying overnight too at all-time highs. Nvidia doing this shit. Like it feels very, very weird. It feels very scary.
Options will start rolling off some of this implied volatility move. That could be conducive for equities to make a move. Now that could be higher, that could be lower. You have a little bit more of an edge of a higher move just because the hedging right now is definitely to the downside.
Coming in with it fucking
I think this is
nasty.
actually going to be conducive for us to kind of get out of this gridlock or this channel range that we've been in for the S&P for a fairly long time. If you're looking at the
spiked
top
it down
line
crazy at 940
right now, revenue
on
guidance
Monday,
is
and
looking
they
at
spiked it down crazy, like in a good way at
looking for
940
around
on
68%
Tuesday. So
growth
that's
on a
the
year-over-year
3/3 just in
basis.
other ways, and
the
it came
EPS
in the
estimate
morning
right
at
now is
940, and it was just so
$1.52.
fucking
Obviously, we're going to be
incredible.
focusing on the data center
Max
portion.
fucking hope to the
Market's
both
expecting that to
sides.
come in at around $60 billion for that revenue because of the AI build-out as well as the training and inferencing.
We have
mix that
Eric
we're
requesting
seeing
to join
within
the old
the
WhatsApp
market.
group.
Now,
You gotta be
US
active in the
representative
YouTube chat
yesterday
to
state that
join the
Nvidia has not
WhatsApp
been
group.
able to ship
We have
any
a
of
lot
those
of
H200s
inactive
to
people.
China as of yet. So we
I'm
are
trying
not
to
expecting that to
keep
be
the WhatsApp
reflected in the
group
earnings
active.
announcement for this quarter. But the big deal is going to be the guidance moving forward. Are they anticipating that China revenue to be in the next quarter? And could that actually take us over the top from the street's expectations?
Insane hedge fund stock candles coming.
Going to be a
SPY
big
and Nvidia
factor for the move as well. So
since 11:20
everybody's
now
talking
for
about
5
it,
minutes.
but I think if you're a broad index trader, you just want to get the event over with to kind of unlock some of this hedging activity that's been taking place in the broader market for the last couple of weeks.
Cycles are trading
Absolutely.
live
I mean,
with no
on China,
setups.
we want to look at
Things are
some of the
very risky
expectations as
at
far as any of
best.
the updates on licensing or timing of the shipments, no
cycle.
doubt, because obviously a lot of this has been priced in sans China, so anything would no doubt be an added bonus here. But as you say as well, I mean, looking for updates on the Rubin, looking for updates on the Blackwell as well. I mean, gross margins in the range of the mid-70s is the sort of stuff that I suppose a lot of companies would dream of, but also this morning looking to see Nvidia if they will instill some of the confidence that the AI capex story isn't collapsing this year as well, given the big numbers that a lot of those companies have thrown out there. What would that mean then for the broader market, KG, as far as easing some of the concerns we've seen around valuations, etc., and also the capex indigestion that we saw off the back of the hyperscalers' earnings?
Yeah, I would say that you would actually like to see Nvidia have a non-event type of earnings announcement where the guidance does exceed the street's expectations, which it has before in the past. But usually you'd like to see a beat of around 7.5% to 8% to the upside of the guidance to really drive the stock higher. The reason why I would say that you would like to see this kind of right in the Goldilocks
trap
that
too?
middle
I don't know.
range.
Since
Any type of massive re-rating higher on guidance would imply that CapEx spend from the major hyperscalers is actually increasing faster than what we heard from their earnings announcements a couple of weeks ago, which could actually put pressure on those stocks, which is what you do not want to see.
This is the bullshit I'm talking
that comes
about
in lower than
with
the street's
IWM,
expectations,
though.
then gives you the sense that maybe we are starting to see demand, stall out.
This is the bullshit I'm talking about with IWM, though. I
That is
go
out there.
fry.
But if we actually see it come right in line with the
IWM just chopped, stayed at the floor, and then just boomed off of 1120.
Mag 7 stocks like a
1125 past and 1130.
To really start to catch a
some
bid and move higher and not put the implicit risk of credit risk, actually, when it comes to the AI
This is the type of shit that gets fucking people fucked up on IWM, because IWM cycles be the most fucking fastest and craziest out of nowhere.
Increased by 4.8%. That's a massive
SPY
increase
coming in with the crazy cycle too.
Around 40% of that is semiconductor.
691 above again. We are above 690 today. 4, 1, 2, 3, 4 times we failed to break the lows of 690.
If it does, come to fruition, and maybe that's going to be the build-up for those China sales. So a lot kind of going into this report, but I think you want to have kind of that middle-of-the-road type of announcement from Nvidia if you're looking for the broader market to try to recapture and get over that 7,000 level for the S&P.
Okay, some interesting and sort of telling forward-looking indicators
that
there
is
are
so
something
crazy.
to think about as we look across some of these
still
numbers.
bullish.
What about software? Obviously, we heard from Workday yesterday that failed to sort of ease some of the concerns,
like,
I suppose, particularly given the guidance that they issued. I see the IGV is managing to continue to build on the gains here. We're waiting to see if this is more than a dead cat bounce, but obviously you've got Workday under pressure to the tune of 4%, and then obviously we've got Salesforce and names like Snowflake that's going to be reporting this afternoon. I mean, what do we anticipate that they say, and how this trade sort of pans out, given you've got this so-called halo trade, anything but AI and softwares right now playing out?
All right, so from a technical standpoint, the IGV, you could call it a dead cat bounce until it really does prove itself.
Bravo,
and what I would
Nvidia,
say, what proves itself
it
is
really
if it actually can get above
today.
around this $85 level, I think that would be very key. Obviously, we are seeing some green on the screen right now, up about 2%.
Nvidia sharks.
We are starting to see a little bit of a selling pressure within the broader equity market just as a whole, just a little bit. So keep your eye out on that. Workday has something that's a little bit more structural in nature or impacting their company as a whole.
Oh, that's
they have not
Eric.
Had really great
Eric
earnings announcements over the
3389.
last couple
Thank
of
you
quarters.
for telling us
This
who
earnings
you are.
announcement, they were able to meet the street's expectations for the quarter, but the guidance is a little
You
bit
requested to join
weak.
the old WhatsApp
The
group, so
enterprise
yeah,
spend might be slowing down, elongated sales
But
cycles.
thank you for saying something in chat, so we actually know who.
Announcement as well as a little bit on the conference call here.
We had a lot of people in past that never said anything,
that
never introduced themselves or said anything, and we just
could actually cannibalize their business here just a tad bit. So a lot that's actually going on in that space.
We can actually pull up the
SPY dividend yield chart real quick. Kind of what I also highlighted, something that is taking place here. You have a situation where we have a rotation out of the technology stocks, or we had the rotation out of the technology stocks, and you are now seeing a rotation out of the dividend stocks. And that rotation going back into software could also be a telltale sign for this market that maybe a near-term bottom could be in place. For Salesforce, the biggest thing for them is to see revenue growth expectations or their guidance moving forward above this 15% level. They have not been able to do so. If it's not, and it's sitting at around 13%, 12%, that's probably going to be a weight on the share. So a lot going on in the software space, but I think you have some short covering activity taking place right now, as well as maybe some technical buyers that are getting in and trying to see if this is actually a true bottom. And once again, we see a massive rotation out of dividend stocks, high yield stocks, going back into tech and communication services.
Yeah, a few people have been talking about how they've been getting into IGV, just obviously because it has been hitting those at record lows as well. But we're currently trading at $80. Let's see, 85 seems to be the number. If it can prove itself, KG, really appreciate it. Thanks so much for the setup for us today.
Wow. I mean, the fact that they have the power for this shit, options gaming to the max, but fucking wow. Off the floor 3 fucking times. 0 DT and passed. Holy Damien just joined the WhatsApp group. I'm gonna remove you. Don't know who you are. Shit's the most asses it could be right now. Entire day just bullish the video. Said hi, I am Damien. I've been following you since the beginning of January. I watch while at work. I only respond when I can. Okay, cool. Just start typing in YouTube so that we can know. Thank you. Look out for your name.
Address the markets, the fight for Warner Brothers Discovery, and so much more. The man in the middle, Roger Altman, he joins us. He's a founder, of course, and senior chairman of Evercore. He's been advising Warner Brothers in its contentious media deal. But before we get to that deal, let's get your reaction to what you saw last night by the President of the United States.
Well, first of all, thank you for having me. Brevity is not President Trump's strong suit, but I thought it was classic Trump. He's a showman, and the way he brought forth so many heroes, and I must say I love seeing the U.S. men's hockey team, and I would have liked to have seen the women's team too. The way he taunted the Democrats, the way he's very creative about the facts, it was just classic Trump.
Okay, but as a Democrat, did you think it was a winning strategy last night?
Didn't he set the new record that your guy held? Didn't he?
Well,
wasn't Clinton was 88?
Yeah. Well, that was at the Democratic convention, yes. But, I don't think the speech, speech, and I don't.
We
think
better
State
see
of
a
the
big
Union
ass
generally
fucking
changed
candle,
very much.
man.
I mean, President Trump's poll numbers are pretty weak.
Before end of day.
41% approval in the latest Washington Post poll. On the economy, 39% overall. Those are really weak. Did he change that last night? No, I don't think so. Because
197 the video. I want to close my eyes. I don't even want to fucking look at the video right now.
Do better. And I don't think a lot of Americans feel that way about the economy. And if they did, you'd see different figures on consumer confidence. You'd see different figures on Trump's approval on the economy. So I thought there was a disconnect there. But as I say, I think it was vintage Trump. He's a showman, and he put on a show.
Can I ask you just about the politics in the moment? Because here, he's talking about affordability. You're suggesting that maybe things are not as affordable as they should be. On the other side of the aisle, though, when you look around the country, we keep talking about what's happening in Seattle.
$10 up now.
Tax that may go into effect. We're talking about what's happening in California, in New York. I mean, there's sort of the pendulum is swinging almost on both sides. And I wonder what you think that portends for the midterms.
Well, at the moment, the Democrats are poised to win the midterms.
When you say win the midterms, win the House?
Well,
the House.
Win the House.
Okay.
I mean, the Senate is possible. I think it's less than 50%, but the House is quite likely. But that's not a surprise because I think only 2 times in the past 50 years has the party that just won the White House, in this case Trump and the Republicans, not lost the first congressional election following that. So that would be consistent with the cycle. And it's also consistent with his poll numbers. Now, I must say, the president's been very outspoken on various ways he might try to subvert the election. That worries me a great deal. I think that would be very destabilizing and just bad at every level. I hope he doesn't do that.
Yeah, we don't need to do that again.
But he's talking at great length about it, and I think it's very disturbing.
Hey, Roger, you
this shit is fucking godly.
Annualizing Biden's stock market return. Remember, and I told you you can't. That you can't. You're laughing, but we were talking about it as a positive. So since the election of Trump, 16% on the Dow, 19% on the S&P, 23% on the Nasdaq. There are good things happening.
No. In fact, as a matter of fact, I'm glad you brought that up.
Okay.
I think the economic outlook is actually good.
I think SPY's going to pull back to 690. I don't think Nvidia is going to pull back.
Real growth for 26.
Yeah.
Inflation is ticking down. It's not as low as Trump said last night. It's coming down toward the Fed's 2% long-term target. We see 3+% wage growth. And if you juxtapose that against the inflation ticking down, there are going to be real wage gains. Corporate profit outlook remains good. So I think just in terms of the economy.
Well, it's a disconnect for people that they really don't understand that things are pretty good.
Well, you have, but this whole
messaging
debate, Joe, about the K-shaped economy.
Yeah.
And that the lower half of the K, it's just a fact, I think.
I don't take private messages.
Lower middle
Sorry.
and lower income Americans
Eric sent
are
me
having a hard
a
time.
paragraph.
Should help there.
Yes, that's true. But they're having a hard time. You see that in the comments from recently Walmart. You see that from the comments from people like McDonald's. And those folks, I would say, need help, and they're very concerned. And by the way, it's pretty obvious.
DMs. Please stop messaging me.
Concern in much of the labor force about the ultimate impact.
You either watch the channel,
Roger, what was your impression of the impact of the Supreme Court decision on tariffs, and how you think that changes things, either for the companies, some of which you may very well represent, and the president, I think, tried to speak to it last night, for all of these investment commitments that so many other countries, foreign countries, made in the United States as part of these tariff deals, many of which are largely unfulfilled and in some cases continue to require
said I requested to join
legislative
the
approval
WhatsApp
in
group.
those
Yep. Are you
foreign
the real
countries,
estate?
and where you think those all go. The president said all those deals are in place and are not going anywhere because they know that I'm still here, and he sort of nodded to, he said Scott as in Besant. Are they here? What do you think?
Well, I think there's two separate questions there.
Okay.
Just in terms of tariffs, the administration had a lot of time to prepare for the Supreme Court decision. I think they were ready, in some respects, anticipated it. So they promptly put in place under under 122 authority.
Eric requested to join the WhatsApp group.
Tariffs were taken.
Just come back
keep in
later,
place for
bro.
150 days.
Don't
and the
do
weighted
that.
average tariff rate really didn't change very much between
The
pre-Supreme
WhatsApp group,
Court and post-Supreme Court. It's
Eric
about
messaged me a
13%.
paragraph saying, "I'm a super GMEA. Please
And then
message
after
me
the
what you
150
expect
days, I think
from
they
me,
can
from
have
you.
similar,
I expect you to not
authority
be
ready
someone
under
new.
Section 301
So no
and
disrespect
continue
at
with
all. I hope you
tariffs.
don't get disrespected
terms of
at
the
all.
investment
But I've been
program,
asking people to not request to
those
join the
countries are in
alert
a
room.
tough
I've been
spot
requesting
because
people to be
Trump's gonna do everything
active,
possible to
to even
hold them
join
to
the
that.
WhatsApp group for
I'm sure
weeks
some of those
and
countries
days. 8 days or
are
9 days in
still
a row
rocking
now,
that.
so
In fact, I know
don't
they are.
get disrespected.
And
I have seen
you
your
know,
They know
profile
they are
picture
because
before,
you've
though,
spoken to
Eric.
them.
I will say
Well,
that. But it has not
I've
been
heard
consistent.
enough
It's probably
that I
been
consider
one time
reliable.
in the last 4
Okay.
months. David, I've seen you a lot.
Such that they
It's about
think,
time you get in the WhatsApp
Trump will
group,
be out
sir.
of office before they actually have to
I wanted to
make
ask you
decisions on the whole thing.
personally if
Right.
you want
But
to
I don't
join
think they're
the
going to be able to
WhatsApp
just
group,
walk
or
away
if you
from
have
it
WhatsApp, but
because, that's an agreement they have with the administration.
David has been
and
here
Trump
consistently
will
for the last 3
do everything
weeks.
he can to hold
That
their
is
feet to
20
the
days
fire on
plus. Not that I'm trying to call anyone out. I hope no one gets any disrespect from what I'm saying. I'm just saying I get calls and I get text messages like a paragraph about anything every day. Used to. So please don't get disrespected. I'm just saying, like, I have to go to sleep at 2, 4. I don't want to get pings, from people doing poll just because that's the time they get on. Like, I'm just trying to be reasonable here. You know what I'm saying? So that's all I want, right? For people to be an actual watcher, for them to actually, like, they understand, and then they want to join the WhatsApp group or not, and then they join the WhatsApp group, and then they want to be active or not, and then they want to join or not. Like, it's just,
continues for the stock today, hitting a new 5-year low after earnings disappointed. Workday is down more than 30% this month. It's down more than 55% from last February's 52-week high.
Nvidia flying.
We are trading
Workday
lower by
getting bad news.
2.5% right now at $127 and change. So that's the focus of the morning trade. Joining us now for a closer look is my
Because a
colleague
lot of
Marley
new people
Caden.
just
Good morning
joined the
to you,
community,
Marley.
and
Obviously, we were talking
immediately
about
they
these numbers
want
yesterday.
to
They
join
looked
the alert
okay. It
room.
was
Like,
really
it's
about
not
the
really
guidance,
for
but we've got a
nothing, none of that.
long
It's actually
list
just,
of sell-side analyst notes and reactions on
gotta
this. Just talk us
do your
through
own
what we're seeing as far as the response today.
Good morning, Sam. Yes, like
No
you mentioned, we
interest,
covered the
no
earnings on air. The
interest.
quarter
Say,
itself actually looked
it's
pretty
just
good. As
baiting.
far as the numbers, earnings per share came in at
HOD breaking on
$2.47. That was
SPY.
better than the $2.32 that was expected. Revenue coming in at $2.53 billion, better than the $2.52 billion expected, just a little bit better.
Everything is
But
bullish
still,
selling now.
the quarter performed well. Their revenue grew
as well.
14.5% year over year.
Burned the fucking
Net
Bears
income
3/3.
was at $145 million. That
Since
was up from
10/50.
$94 million in the same period a year ago. But like you mentioned, that guidance coming in
It's like a
soft was
fucking
really
mega
problematic
extended
for the
went up like
report.
full game,
They
$4
called
to the
for a
HOD from the
30%
LOD.
and a half adjusted operating margin with $2.335 billion in subscription revenue for the fiscal first quarter. Analysts have been looking for a 30.9%
Good afternoon, Ochoa.
margin there
Good
on
afternoon.
$2.35 billion in subscription revenue. So a margin miss and a revenue miss for the current quarter. Then for the fiscal year,
Yeah, no problem, Eric.
they said that they
I'm
see
just
their
saying, like,
operating
someone
margin
else
being about
messaged me saying, oh, I don't know the
also
WhatsApp
trailed
group,
the
and like I'm not
consensus
old
with
enough to know,
9.93 to
what you're
9.95
saying, but
billion
like
in
it's like
subscription revenue, which does
like
imply
like literally that night we had a whole drama, and I was like, please don't do that. And then literally 2 hours before that, there was a whole drama, and I was like, all right, I'm removing because you're not listening to someone else. And then literally the day before that, I was asking on the live stream, and the day before that, I was asking on the live stream, and the day before that, I was asking on the live stream. And I just realized, looking at the time that they come in and the time that they go out, it might just not be hearable. But I mean, I say it quite often, is why I'm just like, at this point, it's like they don't really, they don't hear it because they're not here. Or, yeah. I mean, I don't understand because it's just, I mean, I guess I do understand because I guess I was like a little bit newbie on WhatsApp too when I first joined 2, 3 years ago. But like, it's like there are clear rooms, there are clear, like, I don't know, dude. I don't know. Like, the poll, like, I don't have to make a rule about that because that's just like a given. Like, everyone's sleeping. Like, we had a whole thing about the message thing overnight too. Like, no one's messaging overnight too because everyone's sleeping. I want to sleep like a nice ladybug too, but it's just, I get 4 hours of sleep. 6 if I'm lucky. When the thing pings, it pings, and it's just, why? Nobody messaging because they think it's just all about emoji, right? I don't want emojis on my own messages. And it's just like sometimes here and there when times are fun and good, yeah, emojis are fun. I do the same thing. It's just like emoji 24/7 and emoji only for life is like, I don't know, dude. Something else. Something else.
12 to 13% growth, but was looking for slightly better than that number. So just a week across the board for the current quarter for the fiscal year. And this problematic because, as you mentioned, investors have become increasingly concerned in recent weeks that these AI models could constrain growth for these major software companies, the SaaS-pocalypse, as we're calling it. So, of course, that led to a slew of notes from analysts. I will start bearish to bullish, Sam, and we'll get through what we can. Evercore ISI downgraded to inline from outperform with a new price target of 160, down from 200. Right now, for perspective, we're trading at about 127. They said that the results for the quarter were in line, but the new CEO, its agentic strategy being what they call in the early innings, and its lower fiscal outlook make it an unlikely narrative for a move in a positive direction in the immediate near term. TD Cowen downgraded to hold from buy with a new price target of 155, down from 200 on that growth deceleration. They also cited some deal slippage that they noticed in Q4, that leading to that ratchet down in the growth forecast. UBS lowering its price target to 130 from 170. That's actually very close to where we are right now with a neutral rating. Loop Capital down to 120, below where we're trading from 145, maintaining a hold rating, Sam.
Okay, Marley, I was wondering if you used AI to sort them from bearish to bullish. But knowing you did not.
I did it by hand.
Because you are on top of it, you are prepared, you're so articulate. So thank you so much for breaking down at least a few of those for us. There's a long, long list. All right, thanks, Marley. I'll catch you a bit later. Let's trade it now with Scott Bowers, CEO of Prosper Trading Academy. Scott, how are you approaching your example trade for Workday? It's having a pretty tough time. It failed to ease some of these SaaS-pocalypse concerns out there.
It is having a tough time, though. If you look at the trade today, it's well off its lows of the day. It's we're almost unchanged. We're down only about 2% right now. That being said, I think there could still be trouble ahead here, not necessarily because of just their guidance, but just the overhang in the industry as well. So when I put this out here, when I talk about this put spread that I'm looking to buy here, this is only about opportunity and only about reward to risk. The chart looks awful. 115, which we almost hit earlier, that is a line in the sand here. You had mentioned we're at 5-year lows here. That is a line in the sand. I think there's a possibility it could break through that. So I'm buying March expiration 115, 105 put spread. Could do that somewhere around $2, maybe a little bit less or so. Again, this is just a very, very inexpensive position to have for the potential of it breaking through that major support area.
Yeah, I mean, it's interesting because Evercore ISI still talked about how this agentic strategy is in the early innings. So I suppose seeing will be believing on this one. Let's wait and see. Thoughts on the overall market today, Scott, just as far as, the setup going into Nvidia later this afternoon?
I think there's a big sigh of relief coming out of the State of the Union last night that, nothing really kind of rocked the boat at all, that there wasn't more tariff talk, if you will. Yes, Nvidia, everybody is looking at this. If Nvidia does come out with really good guidance, a lot of these beat up stocks that we've seen recently, we may get a good rally out of this. I would expect numbers to be pretty good. I would expect guidance to be good. How much upside that means, is left in Nvidia? Can it go to 200?
People trying to talk to me, bro,
maybe
on the WhatsApp group.
But I think, I think overall the report is going to be a good one.
Just be
I really
active
like
on
where the market
YouTube.
is. I know, volatility got really expensive
For
end of
God's
last
sakes.
week, early this week here.
Or
and
just
I think
talk to
the
each
market
other
has
on the
just
WhatsApp.
reacted really,
You don't
really
need to
well.
reply to me. You don't need to at me.
All right. Let's see if the S&P 500 can hold that 6,900 level today. Scott, always appreciate your thoughts. Thanks so much for joining us today. Really appreciate it. Scott Bauer, CEO.
Wow,
of
Jeff is
Trading
being
Academy.
so rude. Yeah. People call me when my live stream's up, bro. Wow. And then they're gone. They're here for 2 days and they want to be added to the WhatsApp group. And I tried, and the permission wouldn't let me. And I got a call immediately to fix it on the spot. Well, sorry. I tried. If I tried intraday, and if it doesn't work, maybe I could do it after hours. But I for sure won't take the call intraday and try to figure it out when there's people watching. And I get a call. I'm okay.
Mike, with you on this interesting storyline, because it's one that I think captures a little bit of my attention and just thematically about where the ETF business is going. And that is to say that there is this divide happening between those ETFs that people view as more traditional and straightforward, and many of the actively managed ones that are maybe income or defined outcome oriented that have become much more complicated in how they generate their particular performance, and who's actually investing where. So take us through the research that you guys have done over at ETF Action with regard to that institutional retail trade.
Unbelievable run on IWM.
What types of products.
Yeah, so it's
Mac
a
the
really
RSI
interesting,
just
right?
in
We've
space
almost
on
got 5,000
QQQ.
ETFs in the market, and over the last several years, we've seen a lot more actively managed strategies, as well as what I would consider non-traditional strategies, whether that be synthetic income or buffer strategies, or the
Nvidia
growth of
truly
single
leading.
stock ETFs, whether they're covered calls or leverage inverse. And I think to set the stage, you have to understand that, pretty steadily over the last, 5 years, the ETF market, ownership market. So right now it's $14 trillion in ETFs. About 60% of that can be tied back to quarterly 13F filings, which are tied to institutions, whether they're independent RIAs or large broker dealers like Morgan Stanley, Goldman Sachs, whatever it may be. And what we've seen is, if you look at the big box,
The problem might be I
categories like
reply too
equity,
much.
fixed income,
Pros and
specifically,
cons
if you
to
look
that.
at the big,
Yeah.
large, passively managed strategies or broad-based strategies in those categories, it tends to be 60 to 70% institutional ownership. But as we look at that non-traditional category and watch it grow over the last 3 years, there's $170 billion in synthetic income ETFs, almost $100 billion in buffer ETFs. That number is significantly lower for most categories. So synthetic income, as an example, about 30 to 35% can be tied back to these 13F filings. But there are caveats. Buffer ETFs, which are more about downside protection, reducing some of your upside capture, but in return providing a buffer to the downside, those tend to be very heavily owned by the investment advisors that are using them for their client base.
All right, so with that in mind, Aga, it's interesting because over at Tidal Financial, your firm has become a launching kind of mechanism for many of the ETFs that are being brought to market. Many of the managers people do know, and some of the emerging ones out there as well. What do you attribute some of these trends to, Aga? I'm wondering, and what exactly are you seeing from your side over at Tidal with regard to just how much these types of products are resonating with either their predominantly retail base or their predominantly institutional base?
Taking a quick step back, so passive ETFs remain the largest portion of invested assets, but active strategies continue to dominate new issuance. For example, in the past couple of years, almost 80% of new product launches were all active ETFs. And derivative-based strategies like options overlays and income strategies, generating income through different option strategies are one of the biggest product development trends right now that we see titled also in the marketplace. New product launches exploded in the past couple of years. And issuers in partnership with titles accounted for almost half of that. We currently run one of the largest derivative risk management programs in the US based on a number of products that we trade and monitor, which basically puts us at the center of the trends. And what we are seeing is that the market is going through overlay everything phase right now, where issuers can take almost any underlying and layer on option strategies for income or hedging. And this includes enhancing income on investments traditionally known for generating income through dividends, for example.
Market literally fucking so volatile. It makes it fucking feel like hedging is literally the move. What the fuck? Hedging up or down? It's just.
And
oh my
income
god.
in particular remains the number one. It has been the number one selling point and will remain
so volatile, going up and down, up and down, up and down, up and down, up and down.
Especially among retail investors, just does not go away. And during uncertain market conditions, that added benefit of income seems to resonate well with investors.
You know, Mike, there was a point in time, you know, maybe it was 10 years ago, maybe even longer than that at this point, maybe 15, 20, 30 years ago, when if you looked at the investing landscape, you kind of made this, I guess, maybe unofficial link in your mind, psychologically as an investor, that it was the large institutions, right? They were the ones that got into more complicated, kind of structured type strategies that typically had sometimes higher fees, but also the possibility for higher returns. But you had to be a little bit more learned to be able to kind of understand how those processes worked. And conversely, you wanted to go towards more passively index-oriented strategies if you wanted to just find a fire and forget that had low cost. That was more geared towards retail. What exactly then do you attribute the change in shift or
legendary
thinking
Japanese
about
trader
these types of products towards that we now see most of the larger, big money, real money type investors turning towards some of those more simplistic, lower cost products, yet it's the retail investors that are gearing more towards some of these more complicated features?
Well, I think I'd set it up just a little bit differently in that part of it's just the access vehicle of the ETF changing that dynamic. So as you know, the ETF rule really opened up the floodgates for bringing more derivative type strategies to market. However, I think one of the reasons you're not seeing the adoption rate quite as high with the institutional users is because to a large degree, they were already doing this, right? I mean, writing covered calls is not a new concept. It's not a new strategy. But a lot of your investment advisors are doing that on their own for their clients based on that specific client's needs. But now we're seeing, you know, with the ETF wrapper, a much more efficient way to do it in some respects, especially with synthetic income. However, I would note that it's gotten really kind of the Wild West in terms of what you can do. I mean, if you look at indicated yields or distribution rates for the synthetic income market, you have some that are trading, you know, returning almost 100%, which is really just going to be an erosion of NAV, and others that are much more targeted in specific ranges,
collateralized debt obligations.
So there's a lot of education that has to be done before buying any of these products because they're all managed a little bit different. But big picture, I don't think, you know, it's that institutions aren't using it. They have a little bit different ability to access it. So if you're a self-directed investor and you like that idea of being able to generate income off of a more volatile strategy, as well as capture some of the upside, there's a lot of you know, QQQ type strategies that have covered calls on it now that have done very well and have returned a nice solution
overnight
for the investor.
bullshit.
But a lot of that institutional money already kind of, they've been doing this, you know, for a while. So it's the ETF wrappers making it so that those self-directed investors can access the same vehicle.
1150 algo range and
you know,
1/3,
it's interesting
2/3,
that Mike
3/3
mentioned
bearish.
kind of this knowledge gap
MACD
aspect when
RSI
it
bull
comes to
territory.
kind of understanding how some of these funds and strategies work. From your standpoint over at Tidal, what exactly is it going to take in order for some of those knowledge gaps to kind of maybe shrink a little bit? Not just among the investment advisors that people turn towards for their advice in managing their portfolios, but also some of the retail investors that invest in these vehicles directly. What exactly do they have to know about these types of products, some of the ones that have more exotic elements to them, as opposed to buying a straight-up S&P 500 or sector-based ETF?
That's a very good question, Dom. So the key takeaway for investors is that there's no free lunch in options income. The more income a strategy produces, the more upside you typically give up. Yield is a product design choice. And there are a lot of different ways to generate that income through option strategies for investors. There are very successful ETF brands out there that generate max income, and there are very successful ETF brands out there that generating a very conservative levels of income. It all depends, who the product has been designed
See
for.
a very fucking big red Shrek candle, man.
Income in particular, or hedge type ETFs get more complex. Having a very experienced platform behind the issuers really matters. All the regulatory, operational, trading infrastructure, including highly trained trading desk and sort of product development expertise to package sophisticated option strategy into the ETF wrapper and then be able to articulate what the strategy does and what it does not do will be critical.
All right, Aga, to follow up on that, because the Tidal financial platform has become a place where many products are being brought to market, sometimes from investment managers that we know or are familiar with, or from some of the other managers out there who are just kind of getting going with perhaps interesting strategies to be brought to market that just haven't gotten the traction yet. What exactly are you seeing with regard to the fund universe that you either advise or have sub-advisors for? What types of products do you think are gaining the most traction or being brought to market at the fastest pace? What types of products?
Someone sent me a Reddit fucking Wall Street Bets fucking picture loss. That's it. I feel better about today. That shit is hilarious. Oh my god.
Trading,
realized
our
loss
bread and
70
butter
fucking
are
K.
truly
Oh my
derivative-based products.
god.
So anything with options, futures,
That shit's
and
on Wall Street Bets already.
So on our platform,
Jesus
we
Christ.
launch a lot of income products as well as a lot of leverage
it says
products.
1148
And
timestamp. What the fuck?
We have also had a lot of successes with thematics. I believe
Man, I've really heard of in my life people losing 70K in 3 hours, 30 minutes on fucking spy calls and puts and shit. Like, I'm talking about close. I thought it was fucking like not fucking true, but like it is absolutely. What's going on? Oh my god. Market relentless today, actually, though. Eating every single 0 DT put along with Nvidia.
Did, the Democratic leaders in the House and the Senate did, was effectively give over the State of the Union to a rally of Republicans. And then they left the gadflies of the Democratic Party, the far left.
It's just fucking funny as fuck that it's literally posted today, like live.
And say,
it's like
don't take the
updated
bait,
fucking already.
Don't fight Trump, don't yell at him, don't do stupid things, because our voters that we need to win the midterms are people in the middle. Let's not tick them off. And yet we still saw the outburst. We saw the outburst of members getting pulled out. We saw the outburst with Democratic members using profanity in the middle of the State of the Union. I mean, this has just gotten out of hand. So bad look for the Democratic Party, huge missed opportunity for them, and in trying to give some balance to what President Trump said last time.
It's been wonderful having you as a Bloomberg contributor because you're really looking at both sides, even though you're diehard. I get it, GOP. He was like 12 years old when he entered Congress. I mean, it's amazing. I think about that, folks. John Tucker, what were you doing when you were 21?
I was in this seat.
Okay.
Right here.
Patrick McHenry at 21 says, I want to serve America. I think that's really cool. Patrick McHenry, the congresswoman from the 1st District in Iowa, isn't as lucky as you. Miller Meeks, Dr. Miller Meeks of Davenport, has a razor-thin vote. What kind of Democrat will defeat her?
It's going to be somebody who motivates their base, consolidates their base, but also is able to reach out to the middle, just like Mariannette Miller Meeks did when she was elected with the closest election of the 22 cycle. So she's battle tested. She knows what she's doing. She's a really hard-working.
The funniest shit I saw yesterday on Reddit on Wall Street Bets was like a lot of posts was like fucking people posting losses or some shit on calls and puts, and every single comment was just like, believe it or not, just buy C's. On Reddit, I'm talking about, and I was like, bro, this fucking community is literally just
that is the Democratic
shit,
equivalent of Mariannette.
Well, I mean,
That's a
very
hard. It's a very hard recruit to get. Somebody mainstream and also tenacious enough to fight in a battleground.
Someone was like,
this is
every
an
single
election
every single
year.
comment that was recent.
What do you think?
Like,
how do you think the president's State of the Union speech last night played for Republicans and Democrats as they enter into this election season?
Well, look, since Lincoln, the goal here, since Abraham Lincoln, the goal here is to consolidate your traditional base and then reach out to those that are persuadable. We're in an area, we're in a time frame where there are very few.
There's one post that someone lost like 48K or some shit on like he's a huge whale and he lost like 48K on Microsoft calls, and someone was like, believe it or not, now it's time. And the next comment was like, oh, you all right now is the time.
Okay, so last night's State of the Union was about consolidating conservatives, consolidating Republicans, making sure President Trump maintains his very high, historically high approval rating among his party, which I think he was able to do, and then reach out to those independents.
That's why I laughed, to be honest. That's why they were just fucking making jokes
election that brought him back to the White House. So that message on the economy, on health, on healthcare, but specifically prescription drugs. His emphasis on even smaller issues on data and energy use around data centers. That type of targeted messaging was about bringing home those people that are the Trump coalition.
Patrick McHenry, you're a beast at this. I mean, you're like total grizzled pro. I got 8 ways to go here. Okay, as simple as I can. How does he get back the Latino vote that he shattered?
Well, first of all, the visual of Minneapolis was horrifying to the American people and really shook the roundup approach that the Department of Homeland Security has had. The very high profile, very public roundups. That is really alienated Hispanic voters that came to President Trump in the 2024 election cycle. We got the biggest Hispanic vote a Republican nominee for president's ever gotten. So he's got to stop that, number one. He's got to refocus on his success at the border, which he took a victory lap on last night, and get into the question of deporting criminal illegals that are part of crime families and gangs.
The video
when
of
you
$6
do that, when
is
he does that,
wild.
that is a solid immigration enforcement message. Not getting in fights with liberal protesters in sanctuary cities. That doesn't look good. Nobody thinks that's effective. Nobody thinks that's smart use of federal law enforcement. And so that means he's got to get more Holman and less Noam. And that is going to be, I think we're going to see in the coming months. And they've already made that pivot.
Congressman, most polling shows that these tariffs, they don't poll very well with most voters out there yet. Are you surprised that the president, after the Supreme Court ruling, effectively doubled down on the tariff narrative?
Yes. I'm not surprised because the president loves tariffs, regardless of what the polling says.
Literally
the winning message on tariffs is the geopolitical struggle with China that the West has with China. This should be the unifying element around his trade agenda. And instead of emphasizing that, which will culminate in the summit with Xi in a month's time, or in months' time, frankly, with their scheduled 3 scheduled meetings this year. He should emphasize the job loss with China and how he's trying to bring that back through the use of tariffs, but tariffs as the means to the end of job creation and wage growth in the United States. He needs more of that and less of an emphasis on the word T for tariff.
Yeah, but let's be honest, that's not working. I mean, the average person on the street has no idea what's going on in China, doesn't care about China. All that person knows is prices at the store are very high. And I've got somebody in my ear telling me tariffs are the reason. That's a tough political play there.
It is tough. It is tough. But what I'm saying is the overwhelmingly, the bigger issue here for us with national security, with economic security, is China. And the administration has de-emphasized that in anticipation of a sit down with Xi and the hope of getting a global tariff regime and a new trading relationship with China. So they've been too quiet. And they should be stoking the American people about this challenge that we have, really a generational challenge with China. And we haven't heard enough of that. So therefore, the dominant effect is that
my profits are at risk.
Price increases,
Now
which
I
is
am
borne out in economic data, rather than tariffs being a utility to go fight the bad guys.
Dipping below
and
the
we need to have a
of
little more
February
emphasis
5th,
on fighting the bad guys. If I'm strategizing for the White House, that's what I would say.
Okay, Congressman,
every single put has been dragged out. Every single fucking put gone lower.
Mason-Dixon line since 2012. If you ever get to New York, we would blow out like half an hour of the show just to talk to you. I have such respect for you, what you did when you were in your early 20s. And the second thing is, if you come up here, you got to lose the fleece vest. You got to show up with a bow tie, okay? I mean, that's all there is to it.
I'm sorry I don't have the bow tie on. I was much more dressed for radio this morning after a late night on the State of the Union.
I'm always dressed for radio. Actually, my bow tie I missed today as well.
This shit is like my worst nightmare. I think I'm in a nightmare. Nightmare situation.
Breaking news for you right now. David Tepper, of course, who runs Appaloosa, sending a scathing letter to the management of Whirlpool this morning, saying that their management team, quote, has destroyed hundreds of millions of dollars of shareholder value. Enough is enough. There can be no more excuses. He, in particular, said that they watched with astonishment. He says it's a recent issuance of
someone said,
equity,
now I know why you're scared.
Why
you were scared on Nvidia.
Unnecessary dilution of shareholders. They go
this
on
shit
to
is
say,
Nvidia,
he should,
Palantir,
goes on to say
Tesla
that
earnings
was
worse.
done at a very high cost of capital, seemingly exceeding 10% with the stated intent to reduce
times
debt.
0.35 actually in reality,
this was done even
worse.
though the company's debt is trading in the capital
Definitely
markets
not
at a
better.
tax-adjusted cost.
Actually, this shit feels like Palantir almost. Palantir was fucking
really
terrible
when
it was at 230 or some shit.
To properly take advantage of the tariffs instituted
and then
by
180
the
the next day or 200
either
the
by
next day,
seeking
some
partnership with or by merging in whole or in part its operations with disadvantaged foreign companies. So he's pushing for them to think about that. And he continues to say that he believes that they need to remember their fiduciary duty and not accept management acting purely in their own self-interest. You can take a look at the stock. Right now, it's about $71.
This is the baddest
by the way, go back
of them all.
To 21 there,
bad boy.
and you're over $220. So you can talk about the value destruction. He first
all right, folks.
got into this stock.
Second to last poll of the day. Nvidia earnings.
I don't know what his average
is it
price
gonna boom?
Is, but it looks like it must be
200 plus.
Over $100.
If you think Nvidia 200 plus, say Jensen AI Huang 200 plus. If you think Nvidia below 190, say Jensen AI. Fuck this shit. All right, 190, man.
For
Fuck.
quite some time, but clearly he's had enough. And as he says, enough is enough. So we will hear.
When you marry a loser.
Fuck this
we
shit.
will hear.
I want to go smoke a cig. I'm getting stressed. And then hopefully it fucking does something, or probably it's not going to. But
reaction now on the State of the Union and takeaways
Bruh.
for markets and investors. Mark Anderson is co-head of asset allocation in the Chief Investment Office at UBS Global Wealth Management, and Henrietta Treyz is co-founder and director of economic policy at Veda Partners. It's great to have you both here. Henrietta, I'm going to kick this off with you because, yes, it was the longest address we've seen in history. There wasn't necessarily a whole lot of news coming out of here, but those comments on tariffs in the wake of what we saw with the Supreme Court decision on Friday, imposition of Section 122, your thoughts?
Yeah, I think that sums it up perfectly. Oftentimes we see a president roll out a new initiative, particularly in an election cycle. But this time, really, Trump stuck to his guns. He loves tariffs. He is indicating that they're here to stay. One of the things that's most striking to me is that if you want to replace the income tax that brings in trillions of dollars per year, these tariffs have
don't give me that Master Shifu quote, boy. I've seen some wild ass shit in chat. So don't you start, boy. Don't you start, boy.
Is really doubling down on what happens to be a just incredibly unpopular policy item. 72% of independent voters oppose tariffs. So it was remarkable for its pomp and circumstance and certainly the celebratory atmosphere. But the economic message is really the same. Tariffs are here to stay. We're going to go to a different authority. Get ready for more. We're sticking with it.
Could the president actually get to a place where he could get rid of the income tax without Congress getting involved? Or is that a longer term play that's going to need lawmakers?
No, absolutely not. He has no authority to change tax policy. Indeed, that's why the Supreme Court struck down the tariffs in the first place. So if he wants to eliminate the income tax, he has to go to Congress, ask for the votes in the House and the votes in the United States Senate. And he will, of course, not get those, which means we're all facing double taxation, the income tax and also the tariffs. And that's constitutionally required.
Mark, want to get your thoughts on the comments on tariffs and the address overall?
So overall, if we start with the tariffs, we don't think there's going to be a big change on the effective tax rate. So even if it's going to change for some individual countries, China might be a marginal winner here as one example. We don't think the investment conclusions change much in our view. Trump is right to say that the U.S. economy is growing at a relatively strong clip. We see sort of a 2.5% to 3% growth rate for 2026. I think that's conducive of a good equity market in our view. With those tariff rates potentially coming a bit down, I think that's still something that will keep the bid for gold relatively high, something that we have in all of our client portfolios, and then equally potentially a bit of a steepening here of yield curves with the Fed maybe slightly more likely to cut interest rates with fiscal worries still being sort of a topic for markets.
Yeah. Henrietta, the president also talked about healthcare and bringing those costs down, including most favored nation proposal and getting that codified with Congress. Also talked about, Obamacare subsidies and the fact that he wants to put money into, taxpayers' pockets rather than into healthcare companies' coffers and give them the right to choose here. How to think about how this healthcare policy progresses this year, since it was such a lightning rod amid the shutdown dynamics that we saw just a couple of months ago.
Right, exactly. So for consumers and Americans, the ACA subsidies rolled off at the end of the year. That's why we had that 45-day shutdown. But the reality is that the individual American voter lost anywhere between $200 and $1,000 when those subsidies expired. So the president's focus on that is directly contrary to what voters are experiencing. And I would just say that is also what we're seeing on the affordability message generally. The president stuck to the prescription drug pricing thing, which is certainly a piece of it, but a lot of those actions were started in 2022 under the Biden administration, and they continue to come down. What Americans are facing now is higher grocery prices, higher electricity prices, higher housing costs, and those are the components that they're really feeling, which is why affordability as a conversation point is really so entrenched in the national narrative right now and delivering pretty material gains for Democratic candidates across the country, from New Jersey to Virginia, Tennessee, and even Texas most recently. So that's the problem for the White House.
Yeah, and to your point, gas prices have come off. Egg prices, which he highlighted last night, have come off pretty aggressively here too. But the energy price piece of it, one of the other things that he brought up, Mark, last night, and I think we have the soundbite to play, is this proposal about AI companies agreeing to build out their own power infrastructure.
Don't you think I tried that? Don't you think everyone has tried that? It does not work. Why? Every day you wake up forgetful, distracted. That's the reason why I send the videos. The only way to remember every day is to change internally. The videos
we talk about the AI
are 10 times better than the posted notes.
Trust,
I've tried before all this shit.
Utilities have been rip-roaring.
But I swear, probably 95% of the people here, 100% of the people here have tried the post-it note thing in front of the screen.
How do you navigate these policies as
AI
becomes
you probably. Let's see in chat who've tried and who have not. Let's be honest. I think the majority of the people have tried it.
With the point in terms of electricity, so we have some estimates that say that roughly 4%
be honest
of the
as fuck
world's
right now.
electricity consumption today is moving towards AI and data centers. And we think that number is going to be closer to 8% by 2035. So what this will obviously do is to keep an underlying pressure on electricity prices, and something that Donald Trump in this address here is obviously very, very keen to try to prevent. We think the opportunity here lies in what we call sort of a power and resources investment theme, where we certainly like utilities as a sector, but we're trying to think through that whole value chain as it starts all the way from sort of the commodities, maybe ways to save energy, to power consumption as well. So this is a very interesting story for investors, and I think it's something that's going to stick with us as long as this demand for electricity is just powering ahead.
Said, I don't think so. I didn't do that for years. I make an effort now. Well, I mean, I did that 2.5 years ago, a year and a half ago, 2 years ago, but I'm pretty sure everyone has tried in their lives. What is known is that we get bursts of moments when we like it's good to write down, you know what I mean? But the motivation comes, the discipline goes, and the discipline has to stay. The motivation just comes and goes.
Concerned, obviously, the SCOTUS ruling on Trump's tariffs last Friday, the fallout from that, and now, of course, the latest State of the Union address. Just talk us through the reaction, in fact, the muted reaction, I would say, in the 10-year.
No, there really hasn't been much action in the 10-year for quite a while. It's been kind of drifting. Yields have been drifting a little bit lower, but mostly sideways over the last couple of months. And I think we're caught in this dynamic where there's no change in Fed policy on the horizon in the near term, so that's not a motivating factor. Inflation is too high, but it's
IWM reverted up to catch up to Nvidia.
Close to 3%. Yet there's a promise of rate cuts down the road, perhaps second half of the year. The economy's been resilient, but not generating excess demand to fuel a big rise in inflation. And we do have softness in labor. So we're sort of going backwards. And policy-wise, things are just not really that much different. I'll let Michelle comment on tariffs, but we still have tariffs. The question is how much and who and where and what. But at the end of the day, it looks like we still have tariffs, so that hasn't really changed the dynamic. We still have fiscal stimulus from the budget bill. And other than that, the policy changes are relatively around the edges and minor. So there's nothing really to motivate the market here. I think the big move is still steeper yield curve, because there's probably more room for upward pressure on long-term rates than there is really room for much movement in short-term rates.
Okay, I was listening to an interesting chat this morning, which sort of pointed out the fact that Trump didn't talk about any sort of extra spending, as far as, any helicopter money or these additional checks, which is perhaps why we haven't seen a move, certainly on the long end. But just as Kathy mentioned there, Michelle, I do want to get your take on what we're seeing here as far as, the tariffs. I mean, I was just having a chat with Barry Knapp, my previous guest, who didn't seem to agree with, China and places like India emerging as the perceived winners in all of this, with some of their duties actually being reduced here. Just talk us through what you're seeing, because it looks like global and regional markets have been celebrating what we got here.
Yeah, we have this shift from the IEEPA tariffs to the Section 122 tariffs, and that does reduce the rates on Chinese goods and goods from Brazil and India for now. But there's still 301 investigations for both China and Brazil, so those tariffs could increase again. But despite the tariffs, companies really are looking to move back to China. We hear that from the American Chamber in Hong Kong, due to the stable supply chains in China, and they're still very competitive on costs there, and we're seeing countries,
Candles are so tight on the
many
video.
countries looking to increase ties with China. German Chancellor Merz is there right now. We saw South Korean president and the UK Prime Minister both visit China last month, and then we had that deal between Canada and China to cut tariffs last month. Now, we have this pause right now on the U.S.-China trade war, but really, it looks like both countries really want to maintain that economic relationship because it is mutually beneficial.
It looks like they're fucking around.
Right. Obviously, we're going to be watching what happens in the Trump-Xi meeting as well coming next month. But, Kelly, just getting back to you, and obviously with respect to the tariffs and these rates now that we're talking about, what sort of impact do you believe that's going to have on inflation, and how would the Fed then be thinking about that? Because some of the conversation, I was also just speaking to Barry about that in the previous segment, seemed to think that, from what we've seen as far as the inflation prints, doesn't seem to suggest that we're going to see much more pass-through at this stage.
When you listen to various Fed officials, the attitude is once again, well, the impact of tariffs is believed to be temporary. It's a temporary price increase, and they'll tend to look through that as a one-time event and not take it as the start of a bigger move in inflation, a year-over-year continuous rise in prices. So I think we can, from the market's perspective, probably put that a little bit aside, unless we get a situation where there's more tariffs and we go through this cycle again where things start to add up. But that seems the least likely outcome. And I think Fed officials are relatively comfortable looking through a one-time price increase on goods again. Where we have, though, started to see inflation is in the core services area, and that's more of a concern for the Fed because that's more domestically driven. So they're going to probably try to put the tariff issue aside and focus on core services. And that's where, whether we get a rate cut or not, that and the employment market are where the Fed will decide what comes next. On the tariff side, I think it's probably impact is relatively limited on the bond market. There's so many other factors, such as fiscal stimulus and spending, that can have an impact on yields.
Okay, something to look at. Ladies, we have to wrap it up there. We've completely run out of time. Really busy day here for us.
And Nvidia calls went up 50% on all fronts. Maria.
Welcome back. Good Wednesday morning, everyone. Thank you so much for joining us this morning. I'm Maria Bartiromo, and it is Wednesday, February 25th. We are coming to you live this morning from Washington, our nation's capital, all morning long. It is 8:03 on the East Coast. First, though, there's this. President Trump celebrating the golden age of America last night in his historic State of the Union address, listing economic wins in his first year back in office, while telling everyday Americans their country is back. Fox Business's Darren Botello live on Capitol Hill right now with the highlights. Darren.
Hi, good morning, Maria. This was not just a speech from the president. This was a bold new vision for the United States, calling this the golden age of America. And ironically, you had Team USA there, the men's hockey team, with their gold medals.
When I last spoke in this chamber 12 months ago, I had just...
There's a video of the guy giving President Trump the gold medal, and President Trump wears it, and he's like, oh, I did not get one. Thank you, I love you.
A wide open border, horrendous recruitment for military and police, rampant crime at home, and wars and chaos all over the world.
1210 low is testing.
After
Looks
just
like
1 year, I can say with dignity and pride that we have achieved a transformation like no one has ever seen before.
The president, of course, leaning into those pocketbook issues, tax cuts and lower health care prices. Trump announced he's requiring AI data centers to power themselves and stop driving up your electricity bill. He also took a hard line on housing, calling on Congress to ban big institutional investors from snapping up single-family homes. And things got truly contentious, Maria, when the president dared the room to stand to put Americans first over illegal immigrants, giving a stark visual right there with Republicans on their feet for over a minute while Democrats mostly stayed in their seats. A few Democrats did stand, though, at one point to heckle the president. Congresswoman Ilhan Omar calling the president a liar and murderer. President Trump also announcing a new retirement plan for Americans who struggle to save for retirement.
To remedy this gross disparity, I'm announcing that next year my administration will give these often forgotten American workers, great people, the people that built our country, access to the same type of retirement plan.
burning all the bulls up here. Small cycle could turn big,
match
but
your contribution with up to $1,000 each year.
Nvidia keep bouncing.
And Virginia Governor Abigail Spanberger giving the Democratic response, saying the
Why
president
no
is
Hulk?
offering distractions, not solutions. Maria?
All right, Darren, thanks very much. Darren Botello on
Small
Capitol
sharks
Hill.
coming
Joining now
down.
is
Big
Wisconsin
sharks
Senator
coming
Ron
up.
Johnson.
They're showing
Senator,
north
great
as
to have
fuck
you.
on
Good to see
Nvidia.
you. Thanks for coming into the studio as well. Also
Wall
with
market
us
pulling
for
back.
the entire show this morning is former Speaker of the House, Kevin McCarthy. Your reaction to the speech last night?
I thought it was an excellent speech. I was not
12,
expecting
25,
to enjoy
I'll go
an
range,
45-minute
probably.
speech as much as I
Not
did.
draw this shit,
I really
looks
thought
like.
the crowning moment really was when President Trump just asked Democrats,
QQQ
would you
pulling back.
reaffirm that the first
IWM.
duty of American government is to protect American citizens, not illegal aliens. And I could
Cycle
not
trying to
believe
create the
Democrats didn't
3/3
stand for
bearish
that.
cycle.
I couldn't believe they wouldn't stand for celebrating the fact that a young child injured grievously by an illegal immigrant driving an 18-wheeler was healing, was in the audience. Wouldn't stand when we celebrated the life of a Ukrainian young woman who was brutally murdered. That they just sat on their hands like a bunch of sourpusses. So again, I thought President Trump showed really how craven
Nvidia bugging out.
and policies
All,
are.
all
And again,
this shit.
It was a very hopeful speech. It was a celebration of America and American heroes, and it was fun. It was really fun to be.
This
in
shit could be
in
testing the lows of
chamber
the spike
last
candle
night.
and
Well,
bounce
you
too.
said the same
It's
thing in
crazy
terms
enough.
of the Democrats' response and being unable to actually understand what the priorities are for the American people. Crime is down. Murder rates are down.
When Spanberger gave her responses, she raised the 3 questions. I can say, yeah, President Trump did all 3 of those, and you're doing the opposite as governor already. You're raising all these taxes. I thought the showcasing with the 250th anniversary, the people he brought in, you know, Ronald Reagan made that famous. He took it to a whole nother level, providing Purple Hearts, surprising an uncle that got released from Venezuela. It shows all of his policies do focus on America, but focuses that makes the world safer at the same time.
But, Senator, you've been focused so much on spending declining and trying to get our arms around $38 trillion in debt. What are the plans? What can you look to as actually solid solutions to actually lower spending?
Show me a big fucking red. Come on.
So I look at this probably differently than most people here in Washington, D.C. But if you take a look at what we spent in 2019, okay, prior to the pandemic, we spent $4.4 trillion, and now we're going to spend about $7.4 trillion. But if you just take that $4.4 trillion, increase it by Joe Biden's 40-year high inflation and population growth, we'd be spending about $600 billion less than we're scheduled to spend right now. So you just go category by category. By the way, that exempts Social Security and Medicare and interest from that calculation. You spend what you need to spend for 2026, but look at every other spending category and just use that base control. What we spent in 2019, we weren't spending too little back then, and we'd literally save about $6 trillion over the next 10 years. You really want to get aggressive, go back to Obama in 2014
Time is
or
12:30.
Clinton in 2000.
1 p.m. is here soon.
We'd be saving $10 trillion plus. So again,
2
I know it's green eye
QQQ
shade
1
way of
minute
doing
gap,
this, but that's
gap
what you need.
fill.
These are numbers. You have to look at the numbers.
The problem is that our adversaries are on the
IWM
march, right? China on the march, Russia on the march, Iran. I mean, the president wants a, what? He wants a $1.5 trillion defense budget in 2027. And you say?
Well, let's see what he wants to spend it on. Okay, there's a great piece written by Eric Prince, Too Big to Win. Let's not be spending on arms platforms
Nvidia
that are
and
yesterday's wars.
IWM
Now we've got
awfully linked.
Drone warfare, there's all kinds of new technology. Use it properly.
Visually.
Don't just throw money at the old platforms. And also, eliminate the fraud out of the military-industrial complex. I mean, I can tell you story after story. I mean, I love the fact that he's putting Vice President Vance in charge of the fraud program. It's not just in Medicare or Medicaid, also the military-industrial complex. I'm sure we're getting hosed by a lot of those companies
Why is there so much fraud?
Because they get away with it.
Money, yeah. There's only a few builders of this. Look, the greatest threat we have is our debt. Greater than China, everything is our debt. We're putting ourselves in a very bad position. And the other thing you have, you don't want to build a $30 million missile to knock down a $10 drone. It's who can overperform, who could build this new thing. You want to take the success of Silicon Valley and apply it to the Pentagon. That's actually what the president is doing, because he's held them down and he said, I want to see
1210 somehow breaks.
Not building the old stuff. You don't want to build the war for yesterday.
There's our
you don't
trying
have to go to war.
video.
That's why we need the weapons for tomorrow.
Well, these are all very important comments and great ideas, but in the meantime, you've got Democrats pushing back at every turn. The Department of Homeland Security is still shut down. What are your expectations, Senator?
Well, first of all, that's an incredibly important point to make. I mean, Democrats create these enormous messes, and rather than, lend a hand and try and help solve these problems, no, they train activists. They encourage their supporters to go and obstruct justice, putting them in harm's way. They get a couple martyrs, and then they use that with the backing of the legacy media. So it would be nice if we had Democrats who are willing to acknowledge the fact that their Obamacare is a disaster, that they created this devaluation of the dollar, this making things unaffordable, that they opened the border, but we do not have partners. So that's why it takes very strong leadership.
Somewhere VWAP maybe.
The biggest example was not even showing up for the State of the Union. If you disagreed with them, but here's government shut down, but they're shut down the Coast Guard, the Secret Service, TSA, and FEMA. These are all things that help the public. Why don't you say, I'm going to show up and I have solutions. I have ideas, Mr. President, to solve this problem. They wouldn't even show up to talk.
By the way, they're able to get away with that because the legacy
media
is
not going lower.
Them. They're the mouthpiece of the Democratic Party,
Nvidia,
so they always blame Republicans for
IWM,
shutdowns. Both shutdowns, in this case,
everything bouncing now except Nvidia.
Well, they are also able to block what I thought could be a talking filibuster on the Save America Act. Where does the Save America Act stand? Do you expect that you have John Thune's support?
I said 1/3, 2/3, 3/3 happening on Nvidia since 12/20. Now it's building.
And want to maintain the filibuster because it's kept us from being a socialist nation earlier. But those days are gone. Democrats have shown us their hands. They purged the two senators who prevented them ending the filibuster last time. Next time they get power, they'll end the filibuster. We ought to do it now, and we need to do it to secure our border, to secure our elections, the Save America Act. At a minimum, okay, right now we don't have the votes to end the filibuster. At a minimum, we ought to bring the Save America Act to the floor and make Democrats defend why they are opposed to something that American public supports. What, 80% of the American public, they want voter ID. They don't want their legitimate vote canceled by a fraudulent one. So
volume turning bearish on the video.
Let's force Democrats to talk about it, defend their indefensible position for days and days at a time.
But you won't be able to do that while the Department of Homeland Security is shut down, right?
Oh, no, we can do it.
We can do it.
Well, other lawmakers just recently told me that it doesn't make sense to do a talking filibuster if you've got the Department of Homeland Security shut down. So will you do it then? When can we expect a talking filibuster?
Certainly people like myself, Mike Lee, Rick Scott, we were in the Oval Office for 2 hours a couple of weeks ago kind of mapping out this strategy. Again, the American people had put pressure on Senate, hopefully on Senate Democrats, to deliver what the American people want, which is voter security.
What do you want to say to the critics who say if you remove the filibuster, Democrats are going to do the same and they're going to jam through their policies that may be against American values because there's no filibuster?
I'm sympathetic with the argument, but again, that's what Democrats are going to
Might as well go smoke a cig. This shit's stressful as fuck.
When they get the majority and they get rid of the filibuster.
Gee. Are there any major news coming out other than Nvidia earnings? I don't see. Chop City as fuck.
Back on Morning Trade Live. Let's talk chips. It's Nvidia earnings day, and here's where some of the major chip names are trading this morning. Ahead of that, we've got Nvidia up at 1.5%. Broadcom is back on Morning Trade Live. Let's talk chips. It's Nvidia earnings day, and here's where some of the major chip names are trading this morning. Ahead of that, we've got Nvidia up at 1.5%. Broadcom is also tracking higher by 2%, but AMD is lower, and so is Intel by a similar percentage amount. And of course, we are looking at a pretty mixed picture across the board, particularly off the back of what we've heard from Meta with these expanded partnerships with Nvidia and AMD. They are heading in other directions today. So let's go inside out on Nvidia ahead of earnings. Joining us now is James Demmett, who's the founder and CIO, Main Street Research. James, always nice to see you. Obviously, 8% of the S&P 500. This is pretty important. What is the main thing that you're going to be looking out for?
Yeah, this.
Did she just say 8%? Jesus. Oh my. What the?
This is going to be an important day, not just for Nvidia, for the tech trade in general, and we would suggest for the S&P 500. And our expectations are they're going to come in as usual with better than expected numbers. And I think investors, our message is look for that number 65. 65 billion in revenue, a 65% operating margin, and 65% year-over-year growth. So those are big numbers. Our view is they're going to meet them. This is going to be a wake-up call, not just for the S&P 500, which has been in a slumber, but the whole tech trade, the AI tech trade.
Yeah, and then obviously I know a lot of analysts are expecting gross margins to stay in the sort of mid 70% near term. So obviously those are the sorts of numbers that a lot of companies could dream of. What have they got to say about the guidance? You know, how many GPUs have they got to talk about committing to and rolling out this year for the street to be convinced of the demand and the capex?
Yeah, and I think you're right. It's going to have to be a convincing guidance all around, and I think specifically around the data center. There's so much concern that the capex spending cycle might be peaking, and Jensen's so good at letting us know, and I think this is what's going to happen, that we're still early, you know, in this AI evolution and in that cycle. But we need to hear that. We also need to hear that the supply chain is clear and continuing to get to parts they need to continue to produce the chips. And you know, I think that's generally it. You know, Jensen has a way of allowing a lot of investors who think the AI trade is over or the bubble is about to peak to sort of let us know, no, we're still early in this, and we believe that. This is maybe the three years in an 8-year cycle.
And what have they got to say about China? Because obviously a lot of this has been baked in ex-China, but no doubt any update on licensing and timing could be an extra added bonus here.
Well, I think that, you know, they're working more towards getting back into China than anyone. And, you know, you can see it with politically, et cetera. I think he's going to give a glimpse that that's something that may happen in the fourth quarter. And, of course, that would be really a great tailwind for the stock. But I don't really think, you know, as you mentioned, that's sort of baked into the stock. It's 29 times earnings and growing at twice the rate, right? So the stock's cheap here, gone sideways like the rest of the tech trade for 4 months. I think this is a great window of opportunity for investors to take advantage of it.
I was going to say, I mean, what do you make of the action here? I mean, is this going to be the catalyst for some upside and to break out of this sort of sideways action that we've seen? Or do you think it's going to be much of the same, particularly when you look at headlines around Meta and AMD, for instance, like we saw this week?
Well, you know, at Main Street, we're looking at earnings and growth rates. And growth rates for all of these AI companies, our favorites, right, which would be the Nvidias and the hyperscalers and TSM, because we're a global manager, those earnings keep going up. and the prices are staying the same. So what's happening, right? We have a value proposition that continues. And so these sort of periods during a tech revolution like this are not uncommon. You pause for 4 months, 5 months, and then all of a sudden you're off to the races. And we think this report might be that door opening for money to flow back into these stocks. They're certainly cheap relative to growth rates.
Yeah, certainly. I mean, given the pullback we've seen since late October, James, always appreciate it. Thanks for the setup and the preview on Nvidia for us. We are counting down to that report card. James Demmett there, founder and CIO, Main Street Research. Let's trade it now with Tom White, host of Fast Market. Hello to you, Tom. All right, a big one for us this afternoon. Obviously, this has been trading, as many have said, sideways, over the last couple of months or so. Just talk us through an example trade. What would the approach be for Nvidia?
Yeah, Sam, this stock is hitting the highest level it's hit in over 3 months today. So it's breaking out a little bit on that range above the 195 level, which had been an area of resistance recently. So I looked at this. The option market pricing in about a plus or minus just over $11 move either way, nearly 6% in either direction here post earnings. We've had some muted moves in the past few quarters, despite big beats on the top and bottom lines.
Man, bears are in a split roast right now.
Not what the street wanted at this point, but I looked at a strategy that kind of sets up with James's outlook here. If you're more bullish on this name,
Nvidia too.
This strategy gives you some upside exposure on here. I went out to the March monthly options here.
Divergence
at
the
about 23 days. So you got 3.5 weeks in this trade. It's not a pure earnings play where I'm going to buy an at the money 195 strike call, and then against it, sell the 215 strike call. So a bullish $20 wide call.
Congressman Brad Snyder, Democrat of Illinois. He is the chair of the new Democrat coalition, and it's good to see you, Congressman.
Good
Thanks
morning.
for joining
Good
us.
to see you.
Let's say that, just as an alternative to what you heard last night, if the Democrats were to retake the House, and maybe that happens at this point, if you believe the sentiment maybe that we're seeing in the country, what's the best way to accomplish affordability or helping with affordability? Is there more Trump could be doing, and how would Democrats handle it?
Of course, there's more that the president can do, and I wish my Republican colleagues in the House would join us as well. We need to focus on the things that are making life hard for American families. It's the cost of groceries, the cost of housing, health care, that extension of the premium tax subsidies, or premium subsidies through the tax credit. Millions of families are seeing their insurance increase by $1,000, $1,500 a month. That's $18,000 pre-tax. And it's a tough burden on these families. So we should focus on the things that folks are looking at every single month as they try to pay their bills. And also at the same time, help them save, take a vacation, even secure their retirement.
We were trying to get somewhere on that. Republicans and
Someone said,
and
"Damn, looking back
Democrats in terms
back
of a
to
year
back weeks,
extension
Wednesday has been
based
dog
on,
terrible for me." And I said,
on something.
"You're
How did
jinxing
that
yourself thinking like that."
break down? Is there anything happening
Dots
right now, or
manifest.
those subsidies are never going to be extended? I mean, there's some people that argue that they shouldn't have been since they were pandemic
Like right
era,
now,
and that we need a
thought
much bigger
and my
overall
nightmare is
fix,
manifesting on
for
the
some
video.
of the things in the Affordable Care Act.
Good example.
But where does that stand right now? I thought we were going to go look at that again.
We did.
692. Are we really showing all-time highs? Yes, probably. 7,000 calls we have a fuck ton.
Health insurance premiums. And if you get your insurance through your employer, the
Every
employer
time we
takes
up here.
a tax deduction, the government's subsidizing that. If you get your insurance through Medicare or Medicaid, the government's subsidizing that. It's the people in the individual market, whether it's small businesses or people buying their insurance on their own, that in some cases are paying 15, 20, 25% of their income just for health insurance. And many people saying, well, I just can't afford that. And they go without health insurance, which puts a burden on the whole system. At the same time, we can work to try to reduce the cost of health care, work on reducing the cost of medicines, working on reducing the cost of primary care, making sure more people have primary care so they're not relying on emergency services for basic needs. that's something that Democrats and Republicans should work together on. But you go back 15 years already. All the Republicans have done is criticize the Affordable Care Act and not come up with any solutions on their own. Let's work together.
Congressman, there's finger pointing on both sides on where the divisiveness. See, there's even a divide on how to say it. Divisive. I think
tomato. It's one of those things. Yeah.
There were a couple of times last night where it just seemed to be uncomfortable or cringeworthy, where Democrats were stuck to their seats. I don't know whether you stood. I'm thinking one time where that horrific incident where the Ukrainian woman was stabbed in the neck, and her mother was there, and the Democrats were glued to wouldn't even stand for that. Is that a good look? Does that get Democratic votes in the next election, or do people go just shake their head and go, this is beyond normal?
Yeah, before the cringe moments, let's talk about the positives where the chamber was united. There were two key moments that stood out to me when the hockey team came out, and we were celebrating not just the men's hockey team, but all the Olympians who represented our country and did it in an extraordinary way. And congratulations to all our Olympians. That was at the very beginning. At the very end, when the president gave the Medal of Honor to two war heroes, people who put their lives on their line, sacrificed for our nation, and set the example which more of us should follow, is love of country, commitment to duty, and honoring each other. And the chamber was united. And I think most of my colleagues, I know I certainly did, when the president acknowledged the people in the galleries, were folks that are an example to the entire country, we stood up. And the one you mentioned, the murder in Georgia was a horrific murder. It was terrible. The tragedy is the president tries to say that violent crime only is committed by immigrants. The fact of the matter is that immigrants are less likely to commit violent crime in this country than the general population. Immigrants are more likely to start a business, to work in jobs that other people don't want to take on, some of the harder, backbreaking jobs, and work to make our country stronger, our communities better.
Make America great again.
The country, when the president had spent more time trying to unite the country.
But there has been a change, and you've seen the videos of President Clinton or President Obama. You've seen them talk about illegal immigration in the past and open borders. And something changed. I guess it changed during the Biden administration. If you can't stand up for when the president says, will you stand up for U.S. citizens versus illegal immigrants? And just to make a point, I don't know if any Democrats really stood for that. And that's almost like a trap that the president set up to.
Yo, can somebody please explain to me how the fuck it works to play up and down like at the same time? Like, is it just like playing pops since they're both respective pops?
Moments in the president's speech is when he went out of his way to create that
Michael
divide,
Anthony said PD. What's PD, brother?
As you said, a trap, and basically tell Democrats.
Chris
if you
said,
don't
my
agree
thoughts
with
is
me, you're American.
IWM will test
The fact of the matter is,
262.5.
what makes this country so strong is the diversity.
Just to get people actually on the record for, okay, so yes, I do.
Are you sure you said 262.5? Because I hope to God, but what?
I don't accept the premise. I've been hearing this is my sixth term since I got here. We've been working on trying
Nvidia started
to
something, maybe.
immigration, comprehensive immigration reform.
Vinny said, what do we think is going to happen,
LOL?
Republican
colleagues, we introduced legislation
that's what the market wants us to
John Boehner
right
prevented it from coming to the floor. We worked on Dreamer legislation in 2017 after the president.
All I know is there's a damn divergence at that roof.
The DACA program. Then Paul Ryan blocked it. We need bipartisan work together to address the big problems, from immigration to healthcare to energy policy to addressing AI. The only way we'll solve problems with solutions that stand the test of time is if Democrats and Republicans work together across the aisle and represent the entire country.
I'm thinking about this divergence at the roof, how they're going down slow as shit on the video. Oh, Lord.
This is what NVIDIA's Grace Blackwell looks like on the inside, the 72 GPU system that's seen soaring sales from the likes of Microsoft, Google, Amazon, and Meta. But what we're really at NVIDIA for is an exclusive first look at this, Vera Rubin. NVIDIA's next rack-scale system for AI data centers has the AI world buzzing because NVIDIA says it'll help solve the biggest bottleneck threatening AI build-outs today, energy.
it's actually going to be
QQQ
about
and SPY is
10 times
popping
more
right now.
performant in terms of performance per watt compared to Blackwell.
So how did Nvidia pull this off? We're taking
Maybe
you on a deep dive
616 will
inside
reach.
Vera Rubin to find out, because this AI
IWM though
takes
this
a
is the
lot
most
more
crazy
companies than
shit because
Nvidia and a
IWM
lot
looked
more
crazy
parts
bearish
than
in the
these
morning and then
GPUs.
just knife
It's
up
not
and then
comprised of
fucking
just
whale
chips.
hook
It
and
also
then now
has
it's
the
doing a
compute
fucking
trays,
obtuse
the
fucking
chassis, the
oil
side
tanker
rails,
hook.
the bus bars, and 1.3 million components, over 80 different suppliers, and across more than 20 countries.
Vera Rubin's in volume production today with plans to ship later this year. But from a memory shortage to a supply chain ridden with tariffs, what are the risks Nvidia faces to getting these 2-ton systems out the door?
There is that risk that with all this AI capex, you basically have pulled forward or have a little bit too much than you need, but I don't see that as being a risk this year. And I think that's why Nvidia is so confident that their customers are saying we need more, and if we had it, we could deploy it right now.
From compute to connectivity to power, we take a look at the astounding ecosystem behind this single system and asked Nvidia how it built this complex web and whether competitors like AMD could ever catch up. When Nvidia released its current Blackwell rack design in 2024, demand was insane. Nvidia stock is up more than 100% since before it was announced, because it completely changed the game.
Because it was the first full rack scale design that took this approach of disaggregating compute, the scale of networking, as well as all the memory infrastructure. But all of it was done to make it behave as a single GPU.
The first generation of compute, you'd buy a server, you'd buy a switch, you would
let's get that Tron music on
into a single rack built for absolute greatest efficiency and greatest performance. And that's just not how servers were historically built.
Man, that's how Tron Legacy was
72
born.
GPUs,
Nvidia
nearly
GPU
800
systems.
other chips, 1.2 million total components made at some 350 factories.
TSMC is developing the silicon and the core chips. We're working
Flint!
with Foxconn on a lot of the other rack assembly components, Delta Electronics
sort of
for a lot of liquid cooling element. The nozzles that connect on the end of the hoses are made by a number of different providers.
Whether that's Amphenol and getting the connectors and the
Nvidia
copper,
might pull the market lower here, but
With
it could
so
also
many
be pulled back
components, not
by the
every
market
rack
here
is
too.
touched by the exact same global suppliers.
From China to Israel to Mexico, the US, Vietnam, Thailand.
So Nvidia created a standard reference design.
And so the whole idea by creating a standard is it opens it up to the entire ecosystem.
There's power shelves by Megmeet, Lite-On, or Flex. Power components by Infineon, Analog Devices, or ST Microelectronics. Chassis by Foxconn or Interplex. BizLink for bus bars. Pinda for rack manifolds. Cold plates by Oris, AVC, Boyd, Cooler Master. JPC to Rico deal for power whips. The list goes on.
This supply chain has really become this core group of companies that are building this all together. And of course, they're all leaning in on the success of Nvidia.
Is Blackwell still sold out?
Blackwell is in full production still. We're still, producing thousands of racks per week. And so what I'll say is...
We are literally in some Tron
they're
Legacy
spoken for.
universe on Nvidia right now.
So now, Nvidia is making the next big leap to Vera Rubin, with full production announced at CES in January.
This is a Rubin pod, 1,152 GPUs in 16 racks.
With about 100,000 more components than
It
base
looks
Blackwell,
terrifying.
Vera Rubin
It's
uses
literally
about double the energy, but can deliver way more compute.
The number of tokens it's generating is exponentially higher than last generation, and so they've become very efficient for these, these heavy workloads.
To get there, Nvidia redesigned all 6 of the core chips.
So this is our Vera CPU. It delivers about 2x the performance per watt compared to our previous gen Grace CPU. Then of course there's the Rubin GPU. This can actually deliver about 50 petaflops of AI performance, so about 2.5x performance.
So let's take a deeper look at one rack. It has 18 compute trays, each one starring 2 Vera Rubin superchips, the computing hearts of the system. Each has 1 Vera CPU, 2 Rubin GPUs, and much more.
So this particular superchip has 17,000 components. And as you look at all these elements that have to connect to each other, a lot of these are just to help make sure that the power is being modulated correctly. These are actually the SOCAMM memory. So we actually have memory units that can be applied and removed on the new Vera Rubin processor compared to the Grace Blackwell, they were all sort of soldered in.
But the real memory star lines the top and bottom of the Rubin GPU itself. 8 stacks of the latest high bandwidth memory, HBM4, by the likes of SK Hynix and Samsung.
Is there any risk because it is in such short supply right now?
The one thing that we've been very laser focused on is making sure our entire supply chain is aware, and aware of not just sort of the design itself, but we're actually giving them very detailed forecasts. We're aligning to make sure that everything we're shipping will be met by our supply chain. So I think we're in good shape.
Another risk factor, those 1.3 million components running workloads 24/7 generate a lot of heat. Some customers reported overheating issues in the early days of Blackwell deployments at the end of 2024.
Every component has to fit together perfectly. And I think when we were doing some of those initial deployments, there were things like you didn't get proper seating with the liquid cooling valve. It was just actual implementation, user error. And for the most part, all of the systems are fully deployed today, running hundreds of thousands of scales and without an issue.
Vera Rubin compute trays have no hoses, cables, or fans. It's NVIDIA's first system that's 100% liquid cooled.
Will this mean that data centers have to have a really robust liquid cooling loop ready and in place before they can move from Blackwell to Vera Rubin?
Yes, essentially we're requiring, as we build out the AI factories of the future, that the vast majority will be leveraging this liquid cool based architecture.
The superchip is covered with cold plates, piping in water that keeps the components cool.
This is the cool cold plates on the Vera CPU. You also have the Rubin GPUs that are also underneath there.
Data centers currently consume a lot of water. Will Vera Rubin help with that?
One of the counterintuitive savings is actually you use less water using liquid cooled systems. The main reason is because you don't use the evaporative cooling technologies as much, and that allows you to consume much less water through a closed loop system.
A lot of the needs for cooling come because of just how much power is running through the system.
It's about twice the amount of overall power, roughly about 220 kilowatts per rack. And so we had to redesign, obviously, the power delivery system.
But most of all, efficiency is tied to how quickly each GPU can access the memory and processing on every other GPU simultaneously, which NVIDIA solves with its own networking product, NVLink.
This is the NVLink switch chip, responsible for connecting all of these GPUs and CPUs together to have them behave as one. So this actually doubled the line rate from again, 1.8 terabytes per second to 3.6 terabytes per second.
9 NVLink switch trays sit between the compute trays, connecting all 72 GPUs together and pushing data at an incredible 260 terabytes per second.
And they connect through this NVLink spine on the backside. And this is really the magic of this full rack scale system.
One of these spines stands vertically, glowing through the back of each rack, connecting everything together with 5,000 copper cables, 2 miles worth.
Each wire specifically placed in line to where it needs to go to connect to another connection point on the spine itself.
Finally, there's Bluefield DPUs for storage and security, and outward-bound ConnectX-9 networking controllers, originally built by Mellanox, which NVIDIA bought for nearly $7 billion in 2020.
That was one of the most incredible acquisitions as you're starting to scale AI factories from single systems to full-on data center scale workloads. The networking is incredibly important.
See if they do anything.
Thousands of racks make up what CEO Jensen Huang calls an AI factory. So how do they all connect together?
No confirmation
with entirely
rejection.
separate networking racks filled with NVIDIA's latest Spectrum X switches. Overall, a Vera Rubin rack weighs nearly 2 tons and has about 1,300 chips with some 220 trillion transistors. Still, it's simpler than the current Grace Blackwell system.
You can now disassemble this full compute tray in seconds. Wow. So just what I just did there, to do this with Blackwell, this would actually be soldered to the board. You would need
screwdrivers,
all sorts of equipment.
Look at the video, 1 p.m.
And that's why when you look at this complete compute assembly, instead of 2 hours on Blackwell, can be done in 5 minutes.
Who wants to watch that documentary on BNF?
Now it's inside, right?
While Vera Rubin is less complex, it'll cost customers more upfront. NVIDIA doesn't share rack pricing, but analysts estimate the price will increase about 25% from Grace Blackwell.
So from somewhere around 3 to 3.2 to 3.5 to 4 million a rack.
The cost per token is about 10x lower for Rubin compared to Blackwell.
What the fuck is Nvidia now? 1 minute gap.
Matters the most is the equation of how many tokens per watt or per power consumed can you get, and the more you can tweak that or move up the curve,
I would like for
the
this
higher
to
the
fill
return
right now,
would be
right
on
here.
the dollar you spend.
Are there parts coming from China that are constrained because
Fill
of
the
tariffs?
gap.
Have you seen prices of certain parts go up, for instance?
So what I'll say is when you look at this
QQQ
supply
breaking
chain
down some
this
sort of a trend
complex,
line.
it's a game of whack-a-mole. And in terms of pricing, certainly given the demand, different components have definitely been impacted. But luckily, given demand, there's also incredible value in making sure that we can secure
SPY
that.
and QQQ.
Nvidia has also been part of the big reshoring push. It's vowed to manufacture up to $500 billion of AI infrastructure in the U.S. through 2029, including making Blackwell at TSMC's new Arizona fabs. Assembly, where all the components are pieced together, often by robots, also happens in the U.S. and elsewhere, including Taiwan and at a big new Foxconn plant in Mexico. As Vera Rubin starts shipping in the second half of 2026, customers won't need to phase out Blackwell.
Yeah, this is one of the few times that you'll hear a CEO tell its customers buy less, right? So we really want our customers to buy with our
Stay
annual
bullish as
cadence
fucking
because
to close
each
or pull
architecture
back
is
a
gonna
little bit to
continue to
close
leapfrog
Nvidia.
itself. We assume that there will be customers who will be parking Rubins right next to these Blackwell systems as well to power different workloads.
Later this year, Nvidia will see some big competition when AMD ships Helios, its first rack scale system.
You're going to see a lot of uptake because
Nvidia
customers
waiting for
want
the market.
more capacity, but they also want
breaking
a
down some
viable
sort of trend
second
line
source to kind of keep Nvidia honest, so to
still
speak.
in the trend line.
I don't know if we're the only company that can do it, but I can definitely say that there's a lot of sort of growing pains that went into understanding the complexity of delivering this type of system.
Either they bounce this shit and go clear the divergence at the roof, or
Major
they
Nvidia
just bull
customers
trap
are
and go
also
lower.
making AI servers with their own in-house
Nvidia
silicon.
somehow.
We visited an AWS data center in October filled with Ultra servers made up of 64 AWS Trainium 2 chips. And Google's filled its data centers with racks of its own Tensor processing units too.
Amazon is developing their own AI chip, so is Google, so is Microsoft, so is Meta, and still they're choosing to continue to work with Nvidia generation after generation. And I think that's a testament to the fact that these platforms that they're developing are very powerful.
Nvidia showed us a prototype.
Anyone want to see the documentary on DNF?
Kyber with 288 GPUs.
If you think about the math, we went from 72 to 288, that's 4 times, but the weight only went up by about 50%. And the way we were able to do that, we actually removed a lot of the cabling. What the actual production version will look like maybe a little different, but it's just an example of how we're looking to kind of push the bounds in terms of compute density.
Let's send the documentary!
Nvidia's next system, Vera Rubin Ultra, will be available with the Kyber rack design, expected to ship in 2027.
Ultimately, that's where they're headed, is to have fewer connection points, fewer points of failure, more integration. Not only does it make the system faster, but total cost of ownership.
This is the guy that was number one
if you're able
on
to
top of the other
a large
dude
number of
and the other dude
within the same rack,
on
that means
2chan.
that more GPUs
2chan
super
apparently
low
was the
latency.
online
If
version
the user
in Japan that was
experience of
popular
using AI is
from
amazing,
2000,
then more and more
2008
people will
before
use it, and
4chan.
they'll use it more. And then at that point, then the demand for GPUs is going to be even more.
David lives in Japan. He might be. I said in the I said in the alert room, you might be BNF himself as a joke, but there you go, the documentary. You know, the BNF guy, he's 88 years old and he still does his thing. Just impressive.
Sense that when the rotation started after Liberation Day, it was built on the premise of the interest rate cutting to continue later in the year, and people started to see.
I had no idea what 2chan was until that documentary that I saw yesterday too.
The extension of tax cuts and some additional
I went to go Google what 2chan was yesterday, and I was like, wow,
a lot of
predecessor of 4chan.
I guess the backdrop for a risk-on rally, so to speak, and a bit of a rotation, and large cap tech had been so great for so long and was getting rather expensive. So the ability to find companies that were going to have some tailwinds for earnings, but at cheaper valuations was pretty textbook.
Given the tech shock of the last week, you're out of nuclear engineering in Texas A&M, which is one of the most famous programs in the country on this. You studied a lot of dynamics and almost the Newtonian plumbing of a given science system. Are our markets acting normal
on SPY?
I don't know that if they ever act normal, but I think so. As an engineer, it's you're trying to take scientific principles, but then apply them in real life. And I think that's similar to investing. I mean, we have investing theory that is well founded, but it's not like physics. It's not, there is no E equals MC squared. And so you've got,
man, I feel like we're about to see some crazy ass fucking pop on Nvidia at 405 and then like
investing
a red
is more
or
like
shit, or just
an engineering application.
So
I don't even think they're
John,
just going to show a big red candle for some reason.
You know, earnings really do matter
go
here.
lower here and then what?
That is
Like,
cutting
I don't
rates,
know,
but
I'm scared.
the focus now is kind of reshifted back to earnings here. What have you seen so far in this earnings cycle, and is it enough to support this market going forward, do you think?
I've found this earnings season to be very interesting because we came into it with consensus expectations for the S&P earnings growth, maybe 7-ish%, something like that. But the reality is earnings growth has been about 13%. So it's a significant beat. I mean, we normally expect the bar to be set low enough for most companies to beat it. But with that said, that was a pretty significant upside surprise, but yet it hasn't been enough to move the market. I mean, the S&P is basically flat. So that just tells me that expectations had gotten really high and, you know, price for perfection maybe, but at least price for a lot of good things to happen.
We continue with Allspring's John Campbell, Senior Portfolio Manager. This morning is a nice lift to the market. Post State of the Union, some good voices coming up. Zach Cohen on deck here out of Washington. Paul Sweeney with John Campbell.
Hey, John, what screens well for you guys right now? Is it a certain industry? Is it a certain investment factor that screens well for you? What are you guys looking at?
Nvidia already been in a
that. Yeah, it's a great question. So our team is a systematic equity team. So we are quantitatively oriented, and we focus on value, quality, and momentum, a lot of different measurements of value, quality, and momentum, but we are seeing that value is perking up quite a bit. And you can see that just in the indices where Russell 1 value outperforming Russell 1 growth, but we see it also in just typical valuation factors. What is not working right now, which has been working for a while, are factors like growth, high sales growth. Momentum is working, although it's not as strong as it had been last year because we're seeing some of these reversals under the surface. So value, smaller cap are some of the factors that are working.
Welcome back. Tensions escalating between the Pentagon and Anthropic. Defense Secretary Pete Hegseth now reportedly giving the company until Friday to remove safety guardrails on its AI model or face potential contract termination, even invocation of the Defense Production Act. Deirdre Bosa has more on this in today's Tech Check segment. So Deirdre, what is the story?
So there's a story, but there's also a fascinating contradiction playing out around Anthropic right now, and it tells you a lot about where safety actually stands in AI. On the surface of this Pentagon fight, Anthropic looks like the principled company standing up to the most powerful institution on Earth over autonomous weapons and mass surveillance. Now, those are legitimate concerns, but simultaneously, Anthropic has scrapped the core safety pledge the company was founded on. It is replacing hard safety commitments with what it calls non-binding, publicly declared targets, because otherwise, it says, competitors could race ahead. This was laid out in a blog post. Now, in other words, CEO Dario Amodei is making the same argument they left OpenAI over. We can't slow down because our competitors won't. This is what was supposed to make them different. Anthropic's safety rhetoric is starting to look like branding and leverage, maybe a little less like principle. Now, fighting with the Pentagon, it may actually be a masterstroke in PR for the company as well. A defense official told Axios that they need Anthropic, and the problem for these guys is they are that good. Every enterprise CEO or CTO reading that takes away two things. The U.S. military thinks that Claude is the best model in the world, and Anthropic cares so much about safety, it'll walk away from a $200 million contract. We'll see what happens this Friday, guys, but the bigger story is what has already happened. The company, the one company that was supposed to be different, serious about safety, just told us that it can no longer afford to be. And if that is true, the AI race just got faster. And for every company in the path of this technology, the disruption will only accelerate from here.
And just to remind viewers, Dee, when we're talking about safety or Anthropic's qualms, was it about surveillance of Americans or the ability to deploy a weapon without a human, something else?
110.
All of that. All of that. They've been very clear on sort of what they want their technology to be used for and not used for. And to be clear, these are two different issues, right? It doesn't want its Claude chatbot or now Claude code to be used in weapons of mass destruction or for surveillance. That's one side of it, but on the other side of it is they have made safety their whole brand, and they're moving a little bit away from that on sort of those core principles. They're saying that they need to change it to reflect what's actually happening in the race. And it's interesting, right, because the Pentagon right now is only using Claude from Anthropic, which kind of tells you that maybe it's the most capable model, at least for what the Pentagon wants to use it for. If they focus too much on safety, I think the worry maybe is that OpenAI or Grok or others will be able to catch up.
Guys, smack the like on the live stream, por favor.
They would probably argue they wouldn't have the same kind of eye on safety.
If you have already, thank you very much.
Celebrating the golden age of America, listing his economic wins during the first year back in office. Here's the president on mortgage rates and American housing. Watch.
Mortgage rates are the lowest in 4 years and falling fast, and the annual cost of a typical new mortgage is down almost $5,000 just since I took office. 1 year. And low interest rates will solve the Biden-created housing problem.
Bears are here
at
on
the same
SPY
time protecting the values of those people who already own a house that really feel rich
IWM
for the
is
first
losing the
time
trend
in their
line.
lives. We want to protect those values.
Bears
we
are
want to keep
trying.
those
1/3,
values up.
2/3,
We're gonna do
3/3 on
both.
Nvidia. Trying.
And we are going to keep it that way.
Joining me now is U.S. Federal Housing Finance Agency Director and Chairman of Fannie Mae and Freddie Mac, William J. Pulte. William, thanks so much for being here. What is your reaction to the President's State of the Union speech, specifically about housing?
Well, he's the greatest of all time, right? He showed that last night. There's nobody.
Bearish.
Look, the housing market was in the toilet. It was very, very bad. It was upside down. Nobody could afford a home these last 4 years. The president has come in, crushed inflation, gotten interest rates down.
Bearish.
You had to have 8% mortgage rates. Now it's close to 5%. We've totally gotten ourselves out of the worst of the worst. Now we just got a little bit more work to do because, frankly, Biden left us such a disaster.
So what is left to do? Tell us the priorities right now.
Well, we got to get a new Fed chair in there, and the president's done a great job at picking a new Fed chair. But as you know, too late Powell has just waited way too long. I mean, it's almost a miracle that mortgage rates have a 5 handle on them, and we don't have a new Fed chair. So we did that. Obviously, the president announced last night that he's going to be banning institutions from owning homes. You know, people should live in homes, not corporations. You know, the Democrats, they talk about all these things, and last night they sat there and they were so smug. They've talked, but there's only one person who does anything, and that's President Trump. President Trump is going to get this done. He's already gotten it done. He's already changing behavior, by the way, in the housing market, because all the housing market participants know that you can't get away with this stuff
gap
anymore.
filled.
So we finally have somebody in the Oval Office who's fighting for the average American, and I'm very confident we're going to restore
Somebody
the
please
American
say the
dream.
time.
Yeah, and I guess the
Uno
president's
say
policies in terms of
DAC,
not allowing
EST,
institutions
standard
to
time
own
ESA.
single-family homes would be a positive in terms of moving the needle on supply.
Come on, this shit is so
is that the
dumb.
goal?
Well, it's to affect both supply, and we want to
Too
make sure
late,
that
Powell.
people can afford on the demand side of things. So it's a two-way deal. You can't just look at one in isolation. So yes, we need to build more homes. We're working very actively with the home builders on that. But you also need to make sure that you have demand, and when you have demand, you have to make sure that people can afford a down payment. You have to make sure that people can afford their monthly interest payments. You know, these are the two ingredients that under Joe Biden, nobody could afford a down payment. Nobody could afford 8% mortgage rates. So these things can't be cost prohibitive for people to get into homes. And we need to be a nation of owners, not renters. And that's what President Trump is focused on.
Somebody sing that song for me. You know, the Pitbull. 1, 2, 3, 4, 5, 4, 5. You
the lowest since
Ahora.
2022.
Uno,
That's
dos,
sparked a surge
cinco.
in refinancing. Applications
Uno,
up 130%
125.
from a year ago as lower rates boost borrowing power heading into the spring housing market.
Español cuatro
William,
in
how
Español.
much lower do you expect
I
it
know
to
how
go?
to say
And do you
the least
believe
amount of
that
stuff
even
like
if
what
the
that baño, por
cuts
favor.
rates,
Mi
that
primer,
is going to trickle down
mi
to
primer,
housing and mortgage rates?
mi
Because,
cumpleaños
there's no
de
doubt,
primero,
too, that
primero
just because
de
the Fed is cutting
noviembre.
short-term rates, that trickles down
Easy.
to mortgage rates, right?
Easy. Mi puedo ir al baño,
Of
por
course it
favor.
does, but let me just step back for a second. You know, they tried to get President Trump to sell these companies for 100.
You know, I don't know that you can say, of course.
Well, I don't know if that's necessarily true. If you look at if you look at when they cut over a long period of time, or let's say not just an isolated event, it does actually lead to lower rates. I mean, it just makes sense. When banks have lower cost of capital, that obviously flows through to what their lending capabilities are. In our cases, we have lenders that are ready, willing, and able to lower rates. They've reduced their spread. They've done everything that they can, but we need a Federal Reserve chair. But let me just say one thing, Maria. They tried to convince President Trump, and he knew very quickly it was nonsense, to sell Fannie and Freddie for $100 billion, if you can believe that. Today, some people say that businesses are worth up to $1 trillion. Certainly, they're worth $500 billion to $700 billion, we believe. So, look, you have this situation where President Trump doesn't sell them for $100 billion. Then he has almost $200 billion, over $200 billion in cash. He goes and decides to make a buy on mortgage bonds, and now you're seeing rates come down. This is entirely because of President Trump, and this is entirely because of also his inflation-fighting regime, which he's reversed under Biden. So can you imagine that the president is largely responsible for these things? We need a Federal Reserve chair.
I'm glad you mentioned Fannie and Freddie, because the president is directing Fannie Mae and Freddie Mac to buy the $200 billion in mortgage bonds to help lower rates further. But you're right. We've been talking about the idea that the president would direct spitting out a portion of those companies into the public market. I mean, you yourself expected it to happen sooner rather than later. Is that off the table at this point?
It's on the table. Everything's on the table with President Trump. He keeps all options on the table at all times. And look, this $200 billion mortgage buy is a perfect example of keeping all options on the table. I mean, Joe Biden didn't even know Fannie Mae and Freddie Mac existed, much less knew that they had $250 billion in cash or cash equivalents. President Trump just finds money everywhere he goes, and he uses it for the benefit of the American people. In this case, $200 billion reduced mortgage rates. Boom, right away.
Okay, so do you expect we see an IPO of a portion of Fannie and Freddie this year, 2026?
I think it's very likely. I think it's more likely than not. But look, this is up to the president. The president is the one who controls this, and it will be a decision for him to make. And he's the only one on the face of the earth that knows that answer.
Now, look, we were just looking at the 10-year this morning, William, and you said a moment ago it makes perfect sense. The Federal Reserve lowers interest rates and mortgage rates are going to follow suit. If we're all expecting a cut in interest rates once Kevin Warsh begins, why is the 10-year up 2.5 basis points?
Well, I can't talk about why the 10-year is doing anything on any given day, and I'd refer you to Scott Besson for that. What I can say as it pertains to the mortgage rates is that we have reduced the spread. The spreads are tighter, meaning risk is out of the system more than ever under President Trump. That means President Trump's mortgage market is safer and sounder than ever before. If we get those 10-year rates down, and again, I'm very confident between Scott Besson and the new Fed chair, they've worked together for a long time, Maria. I'm very confident they're going to get these rates down, and we'll finally get this housing market really booming again.
All right, we're going to be watching all of that. Great to have you this morning. Thank you. William J. Pulte joining us on mortgages and housing. Stay with us. We'll be right back.
I am back from my bathroom break. I think market looking like it wants to pull back. Got more water.
Enterprise Agents event eased concerns around AI disruption to the sector. Anthropic announced new partnerships and launched updates to Claude Cowork, allowing companies to integrate the tool into a series of enterprise apps, including Gmail and Slack. A look at what we're seeing on some of those software names and how they're fared over the year to date. We know it's been a downward spiral for some of these trades.
Polar Express is trying
the
to.
exception, we saw a little bit of relief coming into the mix.
Turn
What has
down
been
from the
astounding
North
has been
Pole.
just how strong chips have been, though. Very much the opposite direction. So
We are
almost a
indeed.
resilient trade in the technology basket. Not
Up
far
at
off
the
a
North
record
Pole.
high when it comes to some of those chip plays. And don't forget Nvidia reporting later on today. Big weight in that basket. Meantime, U.S. Secretary of Defense Pete Hegseth has reportedly vowed to remove Anthropic from the department's supply
2080
chain
MA is
and
only
threatened
here.
to invoke the Defense Production Act unless the AI
IWM
startup
going
agrees
lower.
to allow unfettered access to its
QQQ
models
is
for
holding.
classified military use. The threat was issued on Tuesday at a Pentagon meeting between Anthropic CEO Dario Amodei and Hegseth, who reportedly set a Friday deadline for the company to comply, according to multiple reports. Meanwhile, Reuters is reporting that Anthropic has no intention of easing its usage restrictions for military purposes. This is fascinating because don't forget there's been a whole heap of debate around the sort of guardrails that AI companies should have at this stage. We've seen just how disruptive they could be for other companies in the SaaS space over the course of this whole week. But Anthropic has been holding the line about how its technology should be used in defense capabilities. So that is something now that is up for debate. But does Anthropic change course? Does it roll back some of these safeguards? Does it sort of throw open the doors for commercial, for defense purposes? Or does it take the high road here and stick to the line it's had so far?
Yeah, the interesting thing about this designation of being a supply chain risk, or the threatened designation, is it's very unusual that they use it against
2 hours and 30
company.
minutes.
This is typically reserved for foreign adversaries, but if it's implemented, the Department of Defense's suppliers, vendors, contractors and the like would have to certify that they do not use Anthropic's models. So I think potentially what we see here, if this isn't resolved,
Bulls are
you've
trapped,
then
the
got
3/3
fallout
cycle
that
up at
ripples
the
through and
top.
affects other companies beyond them as well.
I mean, the line from Anthropic is they've told the Pentagon that they cannot be using Claude
There's
tools.
your
This is
trap
from the
at
Wall
the
Street
floor.
Journal. Cannot be using Claude
1050.
tools for domestic surveillance
LOD
or
level sound.
autonomous lethal activities. And, you know, all the conversations we've had about defense companies and how they use AI, this is really interesting that they're saying that there's a limit on this.
Gold is taking headlines. The VIX is crushed too. Let's see. 18.5 today from 21. Still in a channel upward in the higher time frame, but we pulled back all the way to the bottom of it, looks like. The fuck, it says SOXL split has occurred. Literally all the way to the bottom.
The market, please, for a little light relief. The Dow is up 160 points and the Nasdaq is up 220. Not bad, I'd say. Kenny Polcari, come on into this. Are the AI fears overblown? Would you say that?
Listen, I think they are overblown. I think it's easy for them to go overblown. I think the algorithms allow it to get overblown. I think people just are nervous because, you know, they're fearful about change, but it's okay. We keep talking about it. Yes, there'll be change. Yes, it'll be different, but it's
People
not
are nervous.
extinction by any sense.
I'm nervous.
And I think, look, if you can buy some of these great names that have gotten dislocated on sale, then you should back up the truck.
Okay. Nvidia, they report this afternoon about 4 p.m. Eastern Time. What do you want to hear from them?
So I want to hear what everyone else wants to hear. I want to hear about the forward guidance. I want to hear what the future looks like. Because look, the past, the earnings are history. It is. It's done. It's over. I want to hear what Jensen Huang is saying about the next 6 months, the next 8 months, the next year. What's he talking about data centers? What's he talking about the robust demand? And look, if Taiwan Semi was any indication.
87 Elke said, I think this time may be different after all. In what way? You talking about the Nvidia earnings, or you talking about what's happening intraday on SPY? Man, what do you guys think Nvidia? Earnings, bullish or bearish? All right, last poll of the day, folks.
Come out and say one little thing that the algos don't like, you know what the algos going to do? They're going to go into sell mode, which I think is perfect because as a long-term investor, I'd like to buy Nvidia cheaper than it is. But quite honestly, I hope that Jensen Huang comes out and just blows the roof off this place and that Nvidia continues to surge.
As he has done before. Kenny Polcari, good stuff. Great stuff. Thanks very much for being here, Kenny. We'll see you soon.
Bullish or bearish?
It's time for the... Again, it makes a lot of the significance of Google that these underlyings are moving a few $100 billion in market cap every single day. It again,
nobody's
makes
saying
a
anything
lot of
in
policy,
YouTube.
you know,
Okay.
less important at this point.
All right, so let's take a look at your first pick. We've got GLD, the gold ETF. Take us through this one and if we're bullish or bearish here with some of the moves that we've seen in gold recently.
Yeah, I'm going to start off with a bullish trade. I know it's unusual, me being bullish right off the bat, but that's exactly what's going to happen here. Gold appears to have a fairly solid bid back under it. And as it pertains specifically to GLD, the base of support may be in and around the 450 level. Seems to be kind of catching a bid.
Yeah,
and
BNF documentary, interesting.
The upside over here.
BNF,
it almost
was
feels
they buy the
like
dip player
in
a bearish environment.
Like
he made $12 million on JCOM and he lost $6 million when he bought the dip on Bear Stearns.
What do? Well,
one day apparently.
Capital towards gold.
Wow.
And I'm going to trade for exactly that. At least not necessarily breaking into new highs, but if you will, I'm going to trade to match some of the old highs. I'm going out to the April 17th options expiration. Again, April 17th option.
Trading activity. We are breaking above our downward sloping red trend line there. So look for price to break out to the upside and for the RSI to follow suit and to push into that overbought area above 70. Our volume profile study shows that the most important trading area right around here, as Don said, kind of around 450, 460, 470. That's where you saw a lot of the trading activity. Another pocket down here near that same 420 area that we mentioned earlier could be a kind of a line in the sand. And then here down by 400 is where we have another big spike of activity. Look here, though, how many volume spikes we've seen where volume was above the 50-day moving average. Very, very, very heavy trading in this product recently.
It certainly is, and trading above even those areas of heavy volume that you just mentioned. Right now we're at 477.61, trading about 0.5% higher so far on the day for GLD, but up more than 20% on the year. Bit of a different story as we look at this next ETF that you've got here. We brought IBIT in, the Bitcoin ETF. They are down certainly more than 20% this year as I take a look at their chart, down 22% so far year to date. Take us through this pick, Don. Where's Bitcoin going?
Yeah, you know, a few weeks ago, I kind of hopped on the bear train, and I'm going to do the exact same thing again today. So, and today we've actually got a little bit of a bid back under some of the crypto products, specifically Bitcoin has a bid under it. So a nice bounce, and that, people, is ideal if you want to actually build a bearish position. And that's exactly what I'm going to do in this particular case. Look, the price action kind of speaks for itself inside of Bitcoin, and specifically the Bitcoin ETF, in this case, IBIT. In and around that 36 level, we start touching it and we're going to break through it, and things could turn ugly and ugly very quickly. One of the things that's probably the most disconcerting to me in this particular case is I looked around in terms of this crypto marketplace, and volumes are dead everywhere. So whether you're looking at Bitcoin, some of the alternative coins out there, whether I'm looking at iBit, whether I'm looking at Bitcoin futures, volumes have really, really dissipated. It is not a good sign for this product. All of a sudden, it's hands off. So if we touch the 36 level, who's going to be in there to actually support the product? I think we're actually going to go to some new lows. So
Stop it. This shit really fucking playing with my feelings. My feelings are hurt from the market. I want to make up with the market. I want the market to make up with me. We are in a 3/3 bearish cycle. Where are you going, SPY?
Just say that private credit default rates could surge 15% if AI triggers an aggressive disruption among corporate borrowers. That follows Blue Owl's new limits for retail investors in one of its private credit BDCs, and a report from Citrini Research that says AI could lead to a double-digit U.S. unemployment rate by 2025, and also discussed fears in private credit. Let's discuss with Bloomberg senior reporter Silas Brown. Silas, I gotta say, it feels like we've hit a fever pitch of whether it's Boaz Weinstein, Jamie Dimon, one of the people from The Big Short fame, Danny Moses. It's like a who's who of warning about private credit right now.
Yeah, and as I sort of said earlier, I mean, if private credit was a species, it's been able to evolve without predators for most of its history, and now you're seeing kind of increasingly critical voices. I mean, a few years ago, it was quite hard to find a public, someone who would publicly be critical of private credit. Now, I don't think you need to walk too far to find someone who has some choice views about the industry. I mean, such is the nature of sentiment. With the UBS report and default rates, I think default rates are kind of funny in private credit because of the bilateral nature of most of the transactions. They can renegotiate terms, and so there's somewhat flexibility when it comes to default language. I think the interesting thing that I'm kind of paying attention to is, or will be paying attention to,
I want Nvidia at least $3 lower before
whether
earnings.
or not private credit that often has more control in negotiations, given that they have bigger positions in the capital stack.
Before 405.
Whether or not their recovery rates can kind of match or outbeat the syndicated markets.
Hey, I wonder, I was reminded in the Citrini Research piece at the end, in the comments by, I think, a guy named Peter, and that's all he gave in terms of his identity, that it doesn't really matter whether or not AI is going to eat the lunch of software as a service companies, but the perception is enough to be a problem for negotiating the price of those services and then the default rate as well, Silas. Have you had those conversations with investors?
Beef roast stick.
Yeah, I think it's it's to do with does the dog wag the tail, or is it vice versa? And I mean, I think in this, I mean, look, we still see a relatively
I ain't gonna draw this shit lower than here because
market.
I don't want to jinx it.
Not a huge amount of stress yet, but I mean, I think that hasn't impacted sentiment too much, and I think people can see that with a kind of paradigmatic shift in technology in such a darling of a sector, that will surely have quite profound consequences on not only private credit, but by the way, also private equity. I think Look, the deals that we're tracking now, I think we're paying very close attention to whether or not there's margin pickups. I mean, I think you can see that in the broadly syndicated markets
range at
to a certain extent already. And I think the fair expectation is either 50 basis points, 100 basis points pick up on certain credits that will not be able to make a particularly strong case on their kind of like health in the mid to long term.
Shit looking as crazy as it could be. What the fuck? I need Poe right about now. I need Poe to come out with the motherfucking skadoosh right about now. If they range this shit lower and then chop and cycle, that's way better than them cycling and bouncing here and then figuring out in the video for me. I almost want to reposition on Nvidia everything into money. Fucking shit, terrifying. Wild. Algo ranges SPY. Time is 1:45 and 10 seconds. End of February. In 1 week. If they don't go higher than 142, they're creating another algo range here. Alright, it is higher. So spiky to where it needs to be. Some massive fucking options and futures moving this shit. Cycle by cycle. Either Nvidia gonna trap or the market gonna trap. I wanna walk away for 5 minutes and I won't kind of laugh. Either or. The fuck? This guy says the video won't deliver much. Update. Oh.
Let's stick with AI. The next test on deck with Nvidia earnings after the closing bout. Jay Goldberg of Seaport Global remaining the sole sell on the stock, writing, "We think Nvidia will meet expectations. It is hard to see them delivering much upside." Jay joins us now for more. Jay, welcome to the show. Still the big bear based on the recommendation. Let's get into it. What's going to cap the upside from here?
I think they're limited on capacity, right? We know that the industry is constrained across semiconductors. The big problem for Nvidia is what the capacity they can get out of TSMC, both in manufacturing and packaging. And I think that sort of caps their upside until maybe later this year when we get a little bit more capacity out of TSMC.
Well, Jay, beyond next year, over the next several years, is this going to remain an issue? Is it something we can look through at the moment?
I think we're in a somewhat historic peak of capacity constraints right now for across semiconductors, right? Every sort of nook and cranny you look into in the industry, things we haven't thought about in years, like substrates and photoresist chemicals, everything is in shortage right now. And that's going to last. Some of those are going to last through the year. Memory looks like it's going to be constrained through the year, but semiconductors are cyclical, and eventually things will ease. I probably next year, but who knows when that's going to be.
Well, Jay, that's the big question, because you are the sole sell. There's 4 holds. There's 78 buys on this name. What are the 78 getting wrong?
I think that the difficulty NVIDIA has is it's gotten so big, and for it to keep momentum going, the deals that we're looking at, getting these data centers built to the scale that is going to be sufficient for their numbers, that's going to be challenging, right? We're already sort of starting to see the stress on the capital market side. It's getting harder and harder to fund these data centers, and the data centers are just going to get bigger and bigger. And NVIDIA needs that to keep the numbers going. And so I think that it's just getting harder and harder for NVIDIA to sell.
$78-1. Fuck.
Investors double down on AI ahead of headline results from Nvidia. AI-related stocks were on the rise again in Asian trading on Wednesday after startup Anthropic unveiled 10 new ways for business customers to use its AI plugins, meaning enthusiasm that AI will boost profits is back on. Technology stocks have seesawed in recent days after a viral piece of research suggested AI agents could replace not just software companies, but payment providers like Visa and MasterCard, and apps like Uber and DoorDash. Janet Moyes, head of market analysis at RBC Brewin Dolphin. Janet, software stocks seem to be gaining ground again. Investors are moving money back into tech. But how do you pick a safe bet on AI in such confused times?
Indeed, I think it is very likely that AI will bring about a lot of disruptions in many industries. But of course, there's a lot of uncertainty. And I guess investors initially are just in sell-off mode. Because they want to sell first and ask questions. And obviously there is very likely overreaction given that the sell-off is so indiscriminate. I would say in terms of positioning for AI, I mean, obviously the beneficiaries would be the AI picks and shovels play because many companies have already committed capital spending, and those companies will be direct beneficiary. And on the software layer, I do believe that the software companies that provide the infrastructure for companies that has its own data integrity, its own ecosystem, is less likely to be replaced by AI. I mean, AI could even improve the efficiency and productivity of these companies. Meanwhile, I believe that ultimately some will be losers, and those software companies that will be more single layer, application focused, not really about the infrastructure of the company, those would be more likely to be impacted. But I think overall, the concern is really that a lot of these software companies charge on a per user basis. So what if, people get more productive, companies need fewer people, that ultimately this per seat model is being challenged. So I do think there are threats, but overall there has been an overreaction, and so there presents some buying opportunities for selected companies.
How worried should the market be, Janet, about the amounts of money lent by private credit firms to software companies?
Yeah, I think that is an area of opaqueness, and that is a reason why investors are nervous, because the thing is, a lot of these private companies, they lend to emerging software companies, which means that their moat is relatively less solid. I mean, they're a challenger to existing businesses, and effectively their moat is less. Their years of experience, their infrastructure is just less build up that existing companies they were about to challenge. So I think theoretically, you can argue that AI could be more of a threat to these emerging companies or venture capital companies backed software companies. So I think there is indeed concern there, given that the investments are relatively less liquid and the commitment to these companies is less visible in the future. But ultimately, I do believe that hopefully there would not be a systemic impact to the wider financial community.
The market is, of course, on tenterhooks for Nvidia's results out later. Do you think chip makers remain a safe bet on AI?
I think relatively, because as I mentioned, hyperscalers have committed 600 billion of capex in 2026 alone, and this is solid. I mean, this is real sending that the semiconductor and hardware companies are direct beneficiaries of. So I do believe that the AI enablers, infrastructure builders will continue to be favored. I think Nvidia earnings will be, of course, very, very interesting. I mean, analyst expectations are already very high. They generally expect 70% year-on-year growth in both revenue and profit margin is likely to be at about 75%. I mean, these are really stunning figures. And despite this high expectation, I mean, it's already built into the price, and the price have been moving just sideways for the past couple of months. I think either Nvidia needs to have a very, very strong guidance on its upcoming chip orders, the Vera Rubin, or the fact that it would deliver some good news on China, which effectively the market has written off, or it has to really deliver a very strong set of guidance for gross margin. So I think it is a very hard number to beat. And I think if there are good news and if markets react positively, it will lift the entire semiconductor sector.
That was Janet Moy of RBC Brim and Dolphin. Don't forget, you can watch more videos on Reuters.com.
I'm ordering DoorDash right now. Let's listen to Dr. Mez,
the action of the President's
Dr.
State of the Union,
Oz,
Dr. Mehmet Oz, the administrator for the
while
Centers
I
for
order some
Medicare
food.
and Medicaid Services. Doctor, it is, I think doctor's better than Mr. Administrator. Do you even want to be an administrator? That's almost a pejorative, isn't it? That's like a bureaucrat. Good morning. Thanks for joining us.
Good morning. I do get to use a scalpel periodically when we make these budgets, but you know, I got to say, politics is a fairly bloody sport. It might be bloodier than heart surgery, so it's a good training for what we're up to now.
Yeah, that is a good point. One of the things in this world where affordability is always being talked about suddenly by the opposition, the president is very proud of what's happening with pharmaceutical costs and most favored nation, things like that. Should he be, in your view?
No, 100%, Joe. The president's been upset about this for a long time. He brought it up in the first administration, but this time around, we brought in some world-class experts, Chris Klump, John Brooks, and Hernandez, people who really knew the pharmaceutical industry and could go head-to-head with these $3,000 an hour lawyers who negotiate these deals. And instead of cowering in front of pharma, we were able to do what the president was insisting on, which is a deal with a moral hazard created by an industry which is incredibly innovative, save lives all the time with wonderful advances in technology, but nevertheless, they were charging American citizens 3 times more on average than brand products sold overseas. Joe, even when they were made in the same factory, in the same bottle, even when they're made here in America, we were paying 3 times more. And so the president wants that stopped. He also wants innovation to continue. So we went at it. We got 16 of the 17 top companies on board. The 17th one's going to sign. And we'll be back in the Oval Office again celebrating the president's initiative to make most favored nation drug pricing as standard. But there's some gaps. The first big gap is these deals last through this term. We made them for this president. We want to make sure these deals are codified by Congress so they last into future generations. We also don't have all the companies.
Looks good.
And if Congress takes action, we can get all pharmaceutical companies, especially those based in other countries, to agree that they must sell their drugs at the same price across the world. We're not price controlling. It's up to them to set their price. But whatever they're going to sell the drug for in America must be the price that they collect from other countries.
2 tenders.
You know, Doctor, if you weren't administrator of Medicare and Medicaid, you could have been involved with the FDA or even a biologics chief. You could, I feel you could wear all of those hats. You've seen some of the controversy. I think we're going to have Dr. Marty Makary. We're going to have him on it. And Becky was talking earlier about this amazing CRISPR technology. But it all comes back to rare diseases and drugs and the way that we promote it. There's a piece in the Journal today that is kind of very critical of what's going on with the head of biologics. I'm just wondering if you can weigh in on what's happening over there with Dr. Prasad and Marty Makary.
Well, Marty Makary is a superb clinician, but he's also a superb commissioner for the FDA. He's making some difficult and brave decisions, but we've worked together already crafting mechanisms for us to get devices approved more rapidly. We have a great model at CMS that lets us pay quickly for some of these orphan drugs. Drugs, for example, like the ones that can cure, not just treat, cure sickle cell anemia. It costs us maybe $2 million to treat a child with sickle cell anemia, but it saves $10 million for the system. And more importantly,
get that
these children
food.
no longer suffer with these deadly complications of their illness. And
Jason
so
said,
we're
ask
banking
Burry to come today.
on these
Burry,
technologies
he's
getting
buried.
advanced into commercial
Until
use,
the
and we're
earnings
going to pay
comes.
for them when they get there. Folks like Marty Makary have to make tough decisions to make sure the standards are maintained. But across the board, this administration, and I do want to applaud Secretary Kennedy for this, he's bravely taking on the status quo. He's not just going to sit back and let what's been in place for many years continue without at least kicking the tires. We've done that with food policy. We've done that with some of the new ways we're paying for solutions, including, by the way, in Medicare and Medicaid. We're, for the first time, going to pay companies coming up with digital solutions if they get great outcomes. I'm going to say that again.
But Dr. Oz,
Every
can I
major
just go back to
company signed up to participate.
What Joe was talking about in the Wall Street Journal, this is an op-ed piece that today lays out the difference with what Dr. Makary is doing, where he seems to be opening the path for a lot of these things, and what Dr. Prasad is doing, which seems to be rolling back some of those very same initiatives or very similar initiatives to try and help rare disease. And the Journal asked the question today, you know, where is this going? How do you have kind of one hand doing one thing and the other hand doing the opposite? You mentioned your support for Dr. Makary. What about Dr. Prasad?
I don't know Dr. Prasad, and I'm not trying to evade the question. I haven't read the article. I was busy watching the State of the Union address last night and getting ready for a bunch of different ways we're going to hopefully improve affordability in this country. I mean, my plate is plenty full at CMS without looking over to see what's happening next door.
Well, you're familiar with the gentleman, an ardent supporter of Bernie Sanders, government-run healthcare. It seems to stick out like a sore thumb in the Trump administration. Anyway, Doctor, I wanted to ask you about Becky. So, what's the baby's name?
Baby KJ Milton.
Baby KJ, CRISPR technology that allows it's working. Can you explain to me? Is it taken up by somatic tissue? I mean, it's everywhere. That would be an unbelievable advance if we could just put something in that would stay and work. You know, you could actually alter someone's genetic makeup. Is that what's happening?
CRISPR technologies allow us to insert either changes to the DNA because they were defects during conception, or adjust other pathologies that exist. I'm very excited about the opportunity for these solutions to not make these diseases into chronic ailments which require lifelong therapy, but rather simple or at least maybe even single solutions that might be able to get these kids past this problem. And I should mention, we were doing all these most favored nation drug pricing announcements in the Oval Office, and after one of them, we had an executive order on childhood cancer treatments. And about a dozen of these beautiful, bright-eyed kids were in the Oval Office. Every one of them would have passed if it wasn't for advances made by the pharmaceutical sector.
Make a phone call.
So this administration is strongly supportive of innovation across the board, across our agencies. We want these technologies to prosper. We want to be able to pay for them as they're appropriately used. The key challenge for all of us is to make sure that we make these affordable. Because, Joe, 1 in 3 families, when they go to the pharmacy just for basic medications for chronic illnesses are unable to afford their treatments. That's not right. That doesn't happen in other countries. So we're driving down prices for Medicaid. That's going to allow governors to manage their state budgets better. We're driving down prices for Medicare. That'll allow our trust fund to last longer. It'll keep the Medicare system intact. So folks who are working right now their entire life know that that safety net will be there when they get older. And the president hammered on these issues last night, which is, again, why he's calling on Congress to codify some of these changes so we'll have it for affordability across the board. That includes drug prices, includes hospital prices, transparency, and what you're going to pay when you get sick. All of that makes the system work better because the market works better. And that's why we can now take a chance using AI and digital technologies to bring them to the forefront of solutions for the American people. Let me paint a picture for you. We're going to be able to give you, as a beneficiary, information that lets you live your best life. We'll meet you where you are. We don't have to get you to call 1-800-Medicare.gov. You can do that too. We want to meet you where you are with tools and technologies from our most advanced companies in the space to allow you to deal with your diabetes more effectively, your hypertension, or maybe get diagnosed and treated with one of these CRISPR techniques.
It's too simplistic to say we'd like Europe's prices, but not Europe's innovation, but it's related. That's the thing. I mean, we're importing price controls to some extent. We just don't. We want to make sure that the drug companies are reimbursed for how expensive it is to develop these treatments, or else they won't do it, and we'll end up with no innovation. You know, they got cheap drugs over there, but when's the last time they don't develop nearly as much as our industry does here, Doctor? I know that that must be a front of mind consideration when we're doing all these things for you, is innovation.
Well, we're not. Yeah, Joe, we're not limiting their prices at all. They get to set their prices. We want to help them get better pricing in Europe. What they all come to us and say is, you guys are doing great. You support our innovation. Your cancer survival rates are better in America than in Europe because you're able to get access to these drugs faster. And so what we're saying to Europe is, you guys got to ante up. If America spends 0.8% of its GDP on pharmaceuticals that save lives, Europe can't spend less than half that. And we're asking Europe, like with NATO, same thing. NATO was an external threat. They all agreed to put in 5% of their GDP to protect themselves. We're demanding they do the same thing for an internal threat, the diseases that plague our people. Humanity will always be better if we invest in innovation, but Europe needs to carry its fair share. No more global freeloading. And you know what, Joe? Pharma wouldn't have signed on if they didn't think that made sense. And the sector's stock, their market cap has gone up since they signed these MFN deals, because they do allow us to preserve innovation while getting better reimbursement from other countries. Across the board, it'll be more stable for the industry.
What's driving the dollar lower today? Is it
market here on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our Cash Tag segment on Salesforce. For that, we want to bring in our next guest, and that's Landon Swan, co-founder of Likefolio. Landon, I know you've got a couple of charts with you, and the comparison to me, I'm not surprised to see a Salesforce, but there are, by the comparison, some things stand out to me in terms of both the leadership and the laggards. But take us through the latest data you have.
Yeah, I mean, Salesforce it's an interesting company in that it helps people, it helps companies sell better. It helps, manage relationships. It helps them make more money. So it should be an easy keep and an easy add for businesses. Of course, recently AI has been a huge threat, as anyone who's just, software as a service, that's the business. Those software products are much more easily replicatable because of, the way that people can code now. It's much more efficient coding. So they had a huge dip, and you can kind of see the trend that we're seeing here across some of these. Microsoft Teams is actually adding, whereas Salesforce and its own Slack, both down about 4%, Zoom's down as well. Again, I think what we're seeing is the new customers, or new potential customers, I should say, that are finding a lot more alternatives out there to Salesforce and to all of its products. And while the ones that are existing customers are, they're kind of locked in that, not contractually, so to speak, but more in just the way they operate. Because so much goes into setting up your Salesforce, setting up all of that, If you have it, it works, it's doing well, and it's a huge pain to try to transition out of that. And so I think they're going to hold on to their customers very well. And they're expecting, they're expecting plus 10, plus 12% on revenue. Their pipeline is showing plus 11% of sales incoming. So everything's looking good on the growth side. But what we're seeing on the, on the web traffic side and the consumer interest is a decline, which sort of tells me that they're probably holding on to the customers that they got, especially the larger ones, which are typically slower to move. And they're less likely to attract new, smaller, more nimble companies who are getting inundated with competition, all kinds of different ways to handle your CRM. And so you can see here the web data that we're talking about. It's a pretty big drop off. Over time, it's leading the stock, as you can see. We're down a little bit. The stock has pulled back down as well. But the stock is really pulled
I'm on
back.
the phone.
If you look
They're
at
not
what the
receiving
stock has
my
done,
order, so
it's trading 230
I'm on
to
the phone with
270
customer
for a
service.
long time, and then it dropped to 175, basically on Anthropic's announcement of different tools that compete, and it's rebounded now back up to 190 or so. So you can argue that maybe it was overdone. We got a little bit of a bounce back, but I'm definitely concerned long term for this company. Short term, I think that there's a good case to be made for them integrating AI into their agent force, their data 360 platforms that make leaving them even more difficult and make potentially selling new people easier. So they're doing a good job of fighting back, and using AI as opposed to just being victimized by it. So that's going to be the battle: is who wins that race. Are they going to show that they can use AI to make their products much better, much faster, or is it going to be the thousands of competitors that are going to crop up and say, hey, you know what, those licensing fees at Salesforce are really high. Maybe you should check out our product, which is much cheaper. So I think that's the battle that we're going to see over the next few quarters. On this quarter, I think we're more likely than not to see a little bump up to the upside just because of the oversold nature and people wondering, did we overreact to this AI hype around, will AI just completely destroy Salesforce? I think the answer is obviously no, but there's definitely been some selling in that direction.
Yeah, Landon, when you look at the, that one chart that you had where your data matches up with what the stock's been doing, but you know what? These companies, these software companies aren't just going to lay down when Anthropic comes up with new tools. They've got Agent Force. They're creating more AI tools now. They're probably going to keep a hold of their bigger customers. You mentioned maybe some new, maybe smaller businesses aren't going to maybe use CRM, moving forward because they might have a cheaper alternative. But the valuation on this on a forward basis.
All right, I'm back. They got my food order now. Man, fuck the goddamn panda. It's a shit show. Shit ass. Fucking HOD divergence cleared. It's pretty crazy looking going into earnings. Full on fucking bullish today. I need my food. I'm getting pissed off. Picking up my food. Food coming by 2:30. Do I want a donut? Fucking pre-made donuts. Nah. Just want my fucking food. Frustration. Frustration. Power hour starting in 45 minutes. And Nvidia earnings in 1 hour and 45 minutes.
Gentlemen, welcome to the table. I appreciate you taking the time. I look forward to the conversation because we got a lot to talk about tonight.
We hope so.
But, well, we do. We went through this whole drama about Trump and the Fed and who's going to be the new Fed chair, and there was Hassett, and there was Warsh, and there was Ricky Reeder, who, by the way, on Kalshi, I bet on Ricky Reeder. I really thought it was going to be Ricky Reeder. Warsh is here now, right? That's the name. So at least we know the name, and so now it's the process. So let's just talk about what's going to be the Powell legacy.
Got it wrong on the front, and maybe you got it right on the back. I mean, he's going to go down in history as saying that inflation was transitory, and then all of a sudden it was persistent. I don't think right now it's political theater. It's not economic policy or Fed policy. I think he can't change that legacy.
In my mind, he is a master of saying nothing. And I think that, honestly, to do that job, you have
Inflation
to
is
really,
transitory.
really good at that,
right? That guy does not show. He's actually probably going to become a professional poker player for his next career, because honestly, there's so many times where, after one of these pressers, we're all sitting here, we're like staring at it like, what did he say? Did he say anything that I can write about tomorrow? Right. Yeah. And like, no, maybe he said this, or maybe he like kind of made a movement with his eyebrow. But look, he's data dependent, which means he's driving his car looking in the rearview mirror. Right. And so I'm thinking,
sometimes, unless it's about tariffs, then he's looking out the front windshield going, inflation's coming. I swear, it's there. I see it, but it's not.
I agree with you, and that's what always bugged me. Like they could be forward looking at certain points, but for the most part, they're always backward looking, and I think that's where they get it wrong.
History's written by the victors, right? So his legacy, it depends who's writing the history. So if it's somebody that hates Trump, they're going to talk about as like a smart guy who's carefully thought out inflation and craft this policy. And then you have somebody that likes Trump. It's like, well, this guy's the worst ever. And like, and I have to say, I'm in the latter, because like your job is to keep inflation down.
Right.
And so in the spring of 2021, we're getting 9% inflation prints. And we're still expanding the balance sheet by $50 or $60 billion a month with 0% interest rates. So like this inflation is rushing in your face, and you're like, well,
but wait, could he really have been that blind? I mean, because you're right, we all lived it. We're all sitting here when he's saying it's transitory. We're all going, no, it isn't. Even the guy in the street was saying, no, it isn't. But he kept telling everyone it was. Could he have been that blind, honestly?
So he wasn't managing to control inflation. He was managing to control the S&P 500.
I didn't know that was a mandate for the Fed to control the S&P 500.
Well,
that's the unwritten one.
That's the third mandate.
He should have been way more aggressive on the front end with the balance sheet and inflation, and we probably would have gone into recession, but we'd be in much better shape for it now.
Agreed.
For him to say they're like, nonpartisan and non-political when you can make these comments about tariffs and about student loans. And it's like, it becomes clear that it's like very fashionable in Washington to just be against whatever Trump is for, rightly or wrongly. And like, look, he's like, I'm a Trump supporter, but like, doesn't mean he gets everything right. And so, but if you're against everything just because he said it, you're probably wrong half the time, at least, right? So his legacy, it will be coated over and sugar-coated, but the policy decisions he made starting in late 2020, when we were past the second stimulus came across in December, and the third came across in the spring. And between those two, that was like $5 trillion that was coming into the economy. It's like, well, we think it's transitory. It was helicopter money. He couldn't stop that, but he could control interest rate policy. And remember,
he could try, but like it brings up the question for Warsh, though, right? Like he said that he's going to do what it sounds like the president wants. I'm curious what you guys think. I think you get in that job and go, oh crap, this is a lot harder than it.
Well, 100%. I think that's
what I promised the president on my potential interviews to be the Fed president. Now I've got to backtrack on that and really look.
I think that happens every time. Yeah, I think that happens every time. Can I say something controversial?
Please.
The question is, how effective is the Fed with inflation, especially if it's supply push inflation? Because remember, that last bout of inflation really came from the supply side, right? So how can raising or lowering interest rates have affected that in any possible way? The Fed is, I think, he probably found himself in a place where, oh, our tools are kind of useless against this at this point.
Yeah, but he did nothing.
I'll just say, like, he wanted to get confirmed again.
Right.
And he gave the policy he needed to give to get confirmed again.
Right.
And so you lost 6 months of tightening.
That's right.
And you tightened too slow into the worst inflation in 40 years.
Yeah.
Like it's there's like a great Twitter account. You had one job.
Right.
Like his one job is to control inflation, and he didn't. So like, why would anybody say anything else?
Well, I will also say there's a follow-up to that, which is that I think the messaging is really important, not necessarily the interest rates. Okay, so if the messaging is that you don't care, then it's going to affect consumers.
Yeah, I think you're right. The messaging is even more important than the interest rates because look, the 25 basis point extra cut here or extra hike there, it's not going to have that much of an impact.
No, but
not
he
like it's
needed
that
to go
precise.
a full percentage point at the time when he should have.
messaging
He had to make a dramatic move.
His
which he chose
messaging
not
at the
to do.
time was easy money, easy money,
Right.
easy money. So hey, you want a new dishwasher? Go out and buy it. Oh, it's $5,000, not $3,000, because there's none of them here in this country.
That's
at
how
the
they
time.
show it to the
I'll
rest
take
of
it
the
for
world.
$5,000.
Fucking
New
nuts.
car, I'll take it. I
Right.
don't care what the price is. Easy money.
Right.
And that was the messaging that we were getting.
If you look at growth, like, again, I would love it if we had 15% growth. I take the under on Kalshi.
Yeah.
Like I think I'm with that. They just did away with the endangerment finding, right? So that was in 3 months they did a study of the Obama administration, which gave the EPA the ability to regulate greenhouse gases. Okay, that's done. So Heritage says it's $1 trillion a year of annual cost. Okay, plus all the environmental regulations the Biden administration put in, or another $300 billion annually in regulatory costs. Well, that's going to take its time to work its way through the system. But you combine that with the tariff structure, the immediate depreciation from the big beautiful bill,
coming.
the entrance of artificial intelligence,
coming.
robotics,
15
and
minutes.
now lower interest rates.
Well, what does it do to the labor market?
Earnings
This
coming
is a
in
big
1 hour and
argument.
30
That's
minutes.
the other side. It's not just interest rates.
Am I the only guy at this table worried? I'm not thinking 15%. I'm thinking, is the labor market going to survive? Because I'm seeing a very, very weak labor market right now, and I'm thinking that has to be triaged with lower rates.
Okay, well, where are you seeing
certainly messaging?
Where are you seeing the weak labor market?
Small businesses in particular, you're looking at job openings that are not there, and then you're starting to see, particularly in niche fields that were highly specialized, AI taking over. So IP litigation and patent drafting, you get into SEC legal fees, right? You don't need 19 different SEC attorneys to write S1 forms.
It's happening.
Yeah,
Just think about how much more we can get done in a day today than a year ago.
So I think you have the tricky thing for Warsh, which I say that and I always think I'm hearing my mom speak
Bearish
from North Jersey.
annihilation
I
on
gotta go do the
spices
Warsh, not,
about 4 days ago.
The tricky thing for him is how do you
crazy.
manage the
Over
labor
the weekend,
market,
we
because you're going to
said
get productivity gains that hold back
1.5% down.
hiring until we
SPY
figure
puts
out where
cost
that new equilibrium is.
something
Yes,
dollars.
every technological disruption has
1.5%
created
up
more
on
jobs
SPY costs
eventually, but in the
$60
near term,
of
it
shit.
disrupts.
It's a
It always
transition.
disrupts. Yeah, well,
It's going to be it's going to be an ugly transition. But I'm seeing it in the numbers. I mean, am I the only guy seeing the numbers? I mean, you watch that ADP NER Pulse Pulse, like that comes out now once a week.
ADP touches a big part of the.
But just look at the trend.
economy.
I just
Bulls
look at the trend,
driving it
right?
today.
And if you see the trend is pretty telling on what you can expect, from the
Yeah, if there's a
government
lot of
numbers.
noise in
Even
the
as a
signal,
And you're
cycle.
just seeing these are like paltry numbers that keep coming out.
If we go back to
Accelerate,
2022, we're adding about
accelerate to
350,000
rise.
jobs on average a month. We're down to like 50, below 50.
Dark Knight
So
rises.
there's true labor weakness. I don't know what the exit transition is, how it sorts itself out, but I think that's what the next Fed president's going to have to figure out.
Look, the economy is not like an F1 race car. Like you can't turn on a dime with this thing. So when you start to see the labor market falling apart, it's not like you can just suddenly say, "Oh, sorry, we'll cut 25 basis points," and it fixes the problem.
No, it doesn't.
You're gonna have to be aggressive. The messaging has got to be consistent. I mean, even if he's not cutting rates, it's got to be consistent messaging.
Okay, but to this point, even if they cut rates, to your point, how's it going to solve? How's it going to fix the labor market problem?
It's going to slowly start to make it more attractive for small businesses to expand and keep hiring, create new jobs, bring in someone that has skills in AI that can help a small business run. We're our own labs of innovation, figuring out how in our personal productivity we can use AI, but that can be transferred to small businesses that don't
dude
have
is
any.
fast with
You're
it. You
running
gotta
a
be
local
here in 8
bakery or
minutes or
butcher
less.
shop or our favorite, the pizzeria. You're not thinking about AI right now.
Right.
But a new grad or a young, mid-20s, someone that has just grown up with it, they can come in and optimize
My
your business
DoorDash
through
wings.
the margin to justify their expense. So I think you're going to get new job creation. I just think it's going to be messy.
I'm like a little bit more of a doomer on the labor market in the short term than you guys are.
Okay.
Like the speed with which AI is happening, there's never been a technology trend that's happened this fast.
Right.
And like I think net on the whole, like you probably do end up ahead, and you have very smart people saying the opposite of what I'm going to say. David Sachs, okay, CEO of Palantir, CTO of Palantir, saying that hey, this like AI is going to create more jobs and it's a tool. I think there's a lot of middle management that are just gone.
You can now write code with AI.
Yeah.
Think about you can have 20 programmers. You can have one person
Right.
doing what. I mean, listen, they created their own exits.
right.
They created their own exit.
I have a lifelong friend that's been a coder, has had multiple exits in software. He texted me 4 months ago and was like, I don't do any coding at all anymore. I just go back and forth with Anthropic and Claude. And then he texted me the other day. He's like, I don't do anything anymore because I created an agent to do all my coding for me while I'm
Lazy as
sleeping."
hell.
Bot,
Yeah.
right?
I mean, that's where I think
Yep.
in this software Mageddon or SaaS apocalypse, as we're calling it, right? The moniker that's getting. The one thing that shows me that's not just a freak out about valuations or what the business is doing is if you look at job postings on Indeed.com for software, they're just cratering. So there's some true shift. There's a paradigm shift happening there.
It's real.
Yeah.
Guys, it's real. I'm
I don't know
telling you,
how
it's
it
real.
settles
We
itself,
haven't
though.
seen the numbers really show up in the numbers that we like to look at, but I definitely see, you could see it. You could feel it. It's one of those things where it makes sense and our projections sort of match, what's actually happening. So I'm with you on this one. I think we're at the tip of the iceberg for the pain.
Warsh is going to have to go in.
I'm gonna have to eat for 10 minutes when the suit comes.
Also addressed the Supreme Court's ruling to strike down his tariffs, while the justices were sitting in front of him, front and center actually. Only 4 of them, by the way, attended the speech.
Just 4 days ago, an unfortunate ruling from the United States Supreme Court. It just came down. It came down. Very unfortunate ruling. But the good news is that almost all countries and corporations want to keep the deal that they already made. And as time goes by, I believe the tariffs paid for by foreign countries will, like in the past, substantially replace the modern-day system of income tax, taking a great financial burden off the people that I love.
Senator Steve Daines, Republican from the great state of Montana, joins me now. Mr. Senator, do you think tariffs could replace the income tax as the president suggests?
Well, we'd have to do a little more math on that, Stuart, and looking at the balance. But anytime we could give the American people some tax relief, count me in and just want to look at those options. But I think it's important to remember that what President Trump has done, he's reduced the trade deficit with China by $100 billion last year. So his aggressive approach on tariffs has brought these countries to the table to remove some of their tariffs and non-tariff barriers, provide access for American farmers, ranchers, and businesses. When you think that 95% of the world's consumers live outside the United States. This is why these markets really matter and why we need to make these markets more accessible for America.
I see a lot of smiles on the faces of Republicans this morning. There seems to be a general agreement that that was a pretty good speech last night and marked a pivot for the whole party as you approach the midterms. You go along with that?
I do. I think it was truly a great speech by the president. It also displayed two very different Americas for the American people to see. What a contrast when you can see the Republicans cheering for the fact that borders are now secure, taxes have been cut, great American heroes there in the crowd, including the U.S. hockey team. We're standing at our feet cheering, and you saw the Democrats sitting down, scowling, shaking their heads, in fact, screaming back at the president. It's a reminder, Stuart, that elections have consequences. Think about what if Kamala Harris would have won in 24? It would have been a very different night last night than what we discussed. Well, we got to hear that great speech.
The president also brought up the Iran negotiations. He says he wants diplomacy, but he didn't rule out military action. Senator, you're on the Foreign Relations Committee. Any word on how the negotiations are going? I mean, a lot of us are looking at this and saying, sure, we're running out of time here.
Yeah, we are. Let's not forget this is a country, the current regime is called America the Big Satan, Israel the Little Satan. They chant death to America. There's only one thing this current regime respects and understands, and that is force. It is strength. That's why you're seeing the president upping the military presence right now around Iran, given the maximum negotiating leverage. But this could be an unprecedented shift in the Middle East if there were a regime change. The Iranian people will drive that, but this could be a Berlin Wall moment in the Middle East, because you and I both remember the days when Iran was a friend of the United States. We could work with them. Of course, a very different story today as the leading sponsor of terror in the world.
So much build-up.
Their policies created the high prices. Our policies are rapidly ending them. We are doing really well. Those prices are plummeting downward. The price of eggs is down 60%, Madam Secretary. Thank you. The cost of chicken, butter, fruit, hotels, automobiles, rent is lower today than when I took office by a lot. And even beef, which was very high, is starting to come down significantly. Just hold on a little while. We're getting it down.
That's President Trump last night delivering a message of American pride and spirit in the record-long State of the Union address. The president's highlighting his administration's efforts to lower inflation, food prices for American families. Joining us now is the Secretary of Agriculture, Brooke Rollins. Secretary, I believe he was referring to you when saying Madam Secretary, so congratulations.
Oh, thank you.
What are your priorities now? And give us your sense of the speech last night.
Well, I thought the speech was a triumph. I think that sometimes we forget, Kevin and Maria, so great to be with you, that just a little over a year ago, borders were open, highest inflation in our country's history. People were losing hope in the American dream or had lost hope. It's remarkable to think that in just 1 year, the borders are sealed. The peace through strength around the world, so many wars solved. And from my perspective, being the Secretary of Agriculture, working to ensure from a national security standpoint that America can feed ourselves and fuel ourselves while ensuring those prices come down. I think the president, did an amazing run last night walking through a lot of those wins, but the affordability of housing, of food, which we've been working so much on, fuel,
Candle was green on
Nvidia. Real. Those prices are coming down. Listen, there's still more work to do, but when you think about where we were a year ago to where we are today, it's just incredible. Before we walked out, our cabinet is very close. You've had several of my cabinet
30% off your
members
next food
this
order.
morning
Give me a
before
discount.
We all got together and said a prayer, and the prayer was, just the shield of protection. God, help us keep putting you first, ensuring that we're fighting the good fight. And I think what the president encapsulated last night was exactly that for the American people.
That is beautiful. Now, we've been talking about the upcoming midterms. We've been talking about the polls. How do you make this resonate more with the American people? And what do you need to do? next to further get grocery prices lower in price?
You know, you look at the 4 years of Biden, and we talk about record high inflation, and certainly that's true. But what a lot of Americans don't realize is that fertilizer went up 33% under Biden, seed went up 40%, interest rates for our farmers 73%, labor went up 47%
So good. Korean fried
in
chicken.
the agriculture industry under Joe Biden. So there's no, of course, food went up astronomically amongst so much else. So working to bring all of those inputs down while opening up the trade deals for our farmers around the world, all of that is the formula for success. A, to basically bring our farmers, our agriculture community, our rural communities back to prosperity, but also to bring prices down for all Americans. So we will continue to do that. It's a really important point, though, Maria. You know, we have gotten so much done. It's almost like, I remember this in the first term, Kevin, you may remember too. We had done so much. Yeah. It's hard to break through. It's like, you know, oh, we've solved the wars, we've sealed the border, we've brought costs down, housing is more affordable. We're seeing, you know, all of the wins. What we've got to do now, from my perspective, is you'll see our team moving out into America, talking to real Americans, highlighting their stories like the president did so beautifully last night. And I believe sincerely, even though it is a bit, you know, it would be unprecedented for us to be able to make some real movement in the fall. I think we're going to do it because I think our story is so compelling.
Kevin, what about that? I mean, your former district, right, is one of the large agriculture districts. What do they need to see in order?
Well, I will tell you, first and foremost, I think Brooke has done a tremendous job as Secretary of Ag, and I've been through a lot of them. What you have accomplished in this first year, just the accomplishment with the eggs coming down, but people don't quite understand, and you're making a very good point, how difficult Biden made it. It's not a magic wand and opening it back up. And a lot of those victories there, too, what you did the last 4 years, building those executive orders ready to go. You've accomplished more in 1 year than people do in 8. What I think people want to see is, and they're beginning to see it as well, they want to go to the grocery store and want those prices to be lower. They're coming down, and they're going to keep coming down. Do we get there in enough time? What Brooke has done, too, is bringing agriculture out. People really care about what's in their food. The ingredients is healthy.
That's pretty
and
impressive.
What you did on the mall, bringing people from around the world, that is
IWM coming in with the weirdest candle, SPY,
Americana. And nothing says it more than farm and agriculture. And the food safety is so critical, people take that for granted.
You're right.
What you have established this year and build upon is critical for our safety, for our health, for our children.
Yeah.
And I think what's happening over there with Kennedy, people are excited about
which
this.
is why people do not like to see China owning farmland. We don't know. I mean, look, on the one hand, we're hearing that, you know, Chinese nationals came in and with pathogens, right? On the other hand, we're hearing all of this aggressiveness in terms of buying farmland. So how do you deal with that?
Well, I think what's important to realize, and I think that's why this term is so different from perhaps any in our lifetime, is that we live in the best country in the history of the world, but constantly running for office.
Now, if the rocket comes after
like
earnings,
China, they've got a 100-year plan. How are they going to become the superpower in 100 years? And we're
where the
fighting
fuck
over
can they
transgender
go?
bathrooms in this country.
Not much.
What President Trump has done is he's cast that long-term vision,
on
how
SPY.
we get our food back, how we begin to again support ourselves.
But we are now above
manufacturing
616.
critical minerals.
Anything above 616 looking
Agriculture.
institutionally and
so
smart
as we
money and big money
change and we
bullish.
calibrate our entire
On
system
tech,
around
QQQ.
America first. We begin to build that infrastructure that hopefully the next president and the next can continue, the next members on the Hill. So we've got the long-term plan, and that's what we're implementing.
All right, Secretary, it's great to have you this morning. Thank you.
Thank you, Maria.
Agricultural Secretary Brooke Rollins. Stay with us. We'll be right back.
I really need to eat, so.
Thank you, Mr. Chairman. Mr. McDonald, congratulations on your nomination. It comes not a moment too soon. Yet 2 weeks ago, the CEO of LexisNexis told me under oath that the federal government, according to their estimates, to their own expert research, loses $1 trillion per year to fraud. $1 trillion. That's more than the entire defense budget for this year. A more conservative estimate, the GAO's estimate, is that the federal government loses about $521 billion to fraud every year.
Nobody
That's
gives a
about
fuck
the
because this shit
budget
happens
of
on
the
the daily on the stock
Department of
market.
Veterans Affairs. Either way, we're talking about just enormous amounts. And of course, we've seen it on display in states recently like Minnesota. And my question to you is, are we going to see some more accountability coming for the fraud that has been perpetrated on this country, particularly in places like Minnesota? I mean, is accountability coming?
Senator, our goal will be to bring accountability. It will not be easy, but we will work tirelessly to bring that accountability to ensure that the fraud that we are seeing annually is erased.
Let me just give you one example of the kind of accountability I think we need to see. The Attorney General of the state of Minnesota, Keith Ellison, was in front of a committee of mine, and under oath, I would just say, just a couple of weeks ago. Mr. Ellison is right at the center of the scandal, the Somali fraud scandal that has rocked that state. Just to take one piece of it, a group called Feeding Our Future, as you probably know, defrauded the federal government of at least $250 million. $250 million that did not.
On and Anthropic are at a standoff. The AI company has until Friday to remove certain military use restrictions on its Claude AI system or risk losing out on hundreds of millions of dollars in defense contracts. Brian, you're hot on this one.
Well, I just think it's really interesting when a company sells things to the Department of War and says, but you can only do certain things with it, right? Like we'll sell you this airplane, but you can't bomb, you know, that place with it, or you can't go on this mission. Like if a company said that to the Department of War, they'd say, well, we're not going to buy your aircraft then because you're not in charge of this. You're not the commander in chief. So Anthropic is trying to tell the Department of War, you can't use our stuff for autonomous weapons or surveillance. Okay, fine. Maybe there's a debate to be had on that, but they're not the guys who get to dictate that. I think it's the commander in chief and ultimately the voters in America who decide who the commander in chief is. They decide the parameters of how this stuff is used. So, I like the pushback, and it's an open market. Like, if Anthropic doesn't want this business, okay, there's other guys you can do.
Gemini, Grok is in there.
It's tricky because it reminds me a little bit of the conversation we were having about JP Morgan and debanking. Do they have to guarantee that everybody has a bank account, or as the business owner, are they allowed to pick and choose? Now, there's federal laws against discrimination, and it's very different than what we're talking about here. But in some ways, I see the similarity, Taylor, which is, can this company sort of set its own parameters?
They can, and then they can lose out on business, right? Because that's the capital markets. And I think to Brian's point, there's lots of competition. Now, Anthropic has the benefit for, I think, according to some stories I've read,
Nvidia earnings.
Which is why they're trying to get a deal done.
Market is at 694.
There are other lots of companies out there who are willing to work with them without those parameters. So that's the best thing about having multiple players.
You may not know the answer to this. I don't mean to put you on the spot or anybody else, but do other companies have the technology to be able to compete with Anthropic?
Well, I mean, these are AI systems, right? Yeah. So Anthropic may have the most advanced or evolved for these applications, but like the leadership changes every how many months in this space, right? So Alphabet, which is no longer so skittish about working with the Department of War, could catch up. ChatGPT, Grok AI, whatever.
Can I just point out one weird thing about this story? Weren't we all worried? Wasn't the left just up in arms about how these companies were going to drive us to the brink and they were going to give anything to anybody and they would do anything with this technology? The companies are actually putting the brakes on how this technology is going to be used. I was surprised by that.
Just looking at the sector today, everything is up. Yep. Obviously, we had 2 days ago pretty steep sell-off. And we've been seeing weakness in the Mag 7 and the software stocks as well, so I could see why people might be back in. But is there, sort of this resurgence? Have people just kind of said, wow, we panicked on this space, and now it's
7.87% of the S&P 500
for a violent counter-trend rally to the upside. That's the good news in software and in tech and in AI. The bad news is it's going to be sold in coming months, is my view. A lot of institutions are trapped in these software stocks, and they're going to use the strength to get out and lighten up. The reason is the pricing power is kind of eroded from these AI tools, which is going to cause the multiples to re-rate. So the good news is it's going to go up for the foreseeable future. The bad news is I think as we get into the back half, we're going to see some new weakness. As it relates to Anthropic, it's not about the $200 million contract. It's about if they don't do what the Department of War says, they're going to lose tens of billions of dollars of valuation when they're raising money in the private markets. You lose the Department of War, you lose all your investors. So Secretary Hegseth has all the leverage here.
Interesting. He's got the leverage, but that sounds, I mean, from a shareholder perspective, Taylor, that sounds like a crazy decision for this company to make.
Yeah, I mean, I don't want to call out names, but ask Palantir. Palantir's valuation is through the roof because they've done such a good job of working with government contracts, and that has been a huge win for them. When we talk about AI, certain companies, data centers, the impact on power bills, whatever it is with AI, I feel like we're in this moment where this is about messaging. I was reading an incredible note about how in 2009, 2010, fracking, there were some big regulatory headwinds. That industry came out and immediately started touting jobs, U.S. Foreign policy to make sure that they countered the narrative from the left all about banning fracking. Then you had, on the other hand of that, Gilead. They come out, they cure Hep C, but they get crushed for 10 years because they didn't message about the benefits of lower kidney transplants. They were getting blamed for high prices for drug pricing. So I feel like AI right now is in this moment where they get to choose the route. It has to be about messaging. They have to come out and talk about, yes, you know what, we're in your neighborhood, but here's why. Here are all the benefits. They need to go down the fracking route and not the Gilead route. And I think those were two really clear examples of, like, in this moment, if you're in AI, that has to be the message, whether it's Trump messaging or us talking here. And I think Satya Nadella has been out, Microsoft on this, talking about not in your backyard issue, but we'll provide our own power and our own water. They have to do that if they want to win, I think, the heart and the emotion of American people.
I love that.
You know, the first phase of AI, you had a chip bottleneck. Now you're going to have the next phase is going to be a huge energy bottleneck. Give or take, how long does it take to stand up a power plant? You think they're going to wait 3 years until their power plant's ready to go?
Or they can't afford to.
Yeah, exactly.
And of course, Democrats were on board with that for a long time, giving out all these tax breaks.
Yeah.
Now suddenly they're like, oh, that was a mistake. We're not going to do that. They can't figure out how to play it.
Still looking obtusely strong, man. I would love the time for it to be 4, but not.
Futures higher to kick off the show. 30 minutes till the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, Nvidia faces a high-stakes earnings report as investors look for fresh evidence the AI spending boom remains on track.
Private credit fears intensify. UBS warns defaults could hit 15% if AI triggers aggressive disruption among corporate borrowers.
And President Trump defends his economic policies in the State of the Union address and issued another warning to Iran.
So some of the stocks you're watching this morning, it's the deal that will never go away. I think this is like the next year and some change of our life. And I'm talking about Warner Brothers Discovery. So let's look at the next plot twist. Warner Brothers Discovery board members have reviewed Paramount's new bid for the Hollywood giant and now say it might be superior to the Netflix deal. I think it's notable that Netflix is gaining off the back of this. They'd get a breakup fee and they don't have to take the extra leverage on their balance sheet.
Exactly. I don't know that their shareholders, at least all of them, really want it anyway. Nvidia earnings after the bell expected to move the stock by 5% in either direction, or at least that's what's happened in the historical average. Its outlook will provide investors hopefully a better understanding of the impact of AI on markets and on the economy throughout the year. Right now, Nvidia stock, and obviously a huge mover that could shape the way the indexes go, up about 0.8%, Danny.
It feels like a lot is at stake with a very shaky market. Let's dig into it with Bloomberg Tech's Ed Ludlow. Ed, this is a company that typically beats. Is good news going to be good news this time around for Nvidia?
Yeah, I mean, the options market pricing of a 5% swing either way is interesting because actually Nvidia's fallen very modestly in 4 out of the 6 post-earnings sessions. And, you know, going into it, the market is basically going to look at the forecast for the current period, fiscal first quarter, hope that Nvidia exceeds what they think it will say by $1 to $3 billion. And then it's all about, you know, the confidence projected by Jensen Huang, the CEO, that everything's intact. They're going to grow revenues overall in the fiscal fourth quarter by almost 70%. That's not at the same.
Yo, I'm about to take. I'm about to drive somewhere for 30 minutes and come back in 35 minutes for the Nvidia earnings. Anthropic's Pentagon conflict. I really think I want to. Let me see. I'm deciding if I should. Okay. I will be back in 30 minutes. Yes, I'm leaving my stream on.
Christianity and belief
I'll make
in
it quick.
God. And a big part of that had to do with my great friend, Charlie Kirk, a great guy, great man. Charlie was violently murdered by an assassin and martyred, really martyred for his beliefs. His wonderful wife, Erica, is with us tonight. Erica, please stand. Thank you, Erica. In Charlie's memory, we must all come together to reaffirm that America is one nation under God, and we must totally reject political violence of any kind.
It was one of the many emotional moments from last night's State of the Union address when Turning Point CEO Erica Kirk stood up as President Trump paid tribute to the late organization's late founder and her husband, Charlie Kirk. Trump credited Charlie with the religious revival movement sweeping across the country. He also described Kirk as a martyr for his faith, taking the moment to denounce political violence of any kind.
Another big moment from last evening, President Trump hammering home his crackdown on illegal immigration and putting Democrats on the spot when this happened.
I'm inviting every legislator to join with my administration in reaffirming a fundamental principle. If you agree with this statement, then stand up and show your support. The first duty of the American government is to protect American citizens, not illegal aliens. Isn't that a shame? You should be ashamed of yourself not standing up.
Well, some already suggesting that that moment you just watched could come back to haunt them come November. What about all that with the Vice President, J.D. Vance, who now joins me live. And, sir, thank you for your time. After a late night last night, you're back at it today, and appreciate you coming on. Good morning to you.
Good morning, guys. Thanks for having me.
So the New York Times, about that moment, says, stand up with one maneuver. Trump tries to box in Democrats. The president's ploy changed the energy inside the House chamber. At that point, would have been a mostly dutiful State of the Union address morphed into a full-blown political theater. You and Speaker Johnson are only one of two people, in addition to the president, who have the same line of sight with his view. And when that happened, what did you see on the right side of the room?
Well, I saw a couple of things, Bill. First of all, obviously, most Democrats didn't stand up or clap. And you know, what a shame that is. What a sad commentary that is on the Democratic Party, that the idea that the American government should stand for American citizens, not illegal aliens, that shouldn't be controversial, but apparently it was to the Democrats. But I will say, Bill, something that I saw that probably most TV viewers didn't see was really the cowardice, because there were a few Democrats who sort of politely clapped. They didn't want to stand up. I guess maybe they were worried about being primaried by the far left fringe of their party. But they were all looking around. They weren't actually saying, you know what, I'm going to stand and support this because this is a common sense, obvious statement. They were all looking around for cues from their colleagues because they didn't have the courage to stand on their own. And that, more than anything, Bill, is the saddest commentary on the Democratic Party, that not only will they not stand for the idea that Americans should come first, they won't even have the courage of their convictions. They lean on the person to their left and their right rather than actually have some conviction. That is unfortunately what's true about Democrats in Washington today.
Well, it is being talked about a lot of how many Democrats chose not to go last night. Senator Fetterman, a Democrat from Pennsylvania, last hour said on our program that the State of the Union address has changed forever. Have you given that much thought?
I really have. I mean, a couple of things, Bill. First of all, it was a celebration of America in a very unique way. I'd never seen in a State of the Union address where you have all of these great people coming in. You know, the guy who flew the Chinook helicopter in the Venezuela mission coming in, being awarded the Medal of Honor, and then a 100-year-old Korean War veteran being awarded the Medal of Honor at the same time. You had this poor girl who was assaulted by illegal aliens who managed to survive miraculously. All of these stories, you know, normally you hear one or two stories. It was a constant, invigorating reminder of how great our country is through the stories of these great Americans. I think that is fundamentally a difference, and I don't think that we'll ever go back. And I think the second thing, Bill, is the president used it as an opportunity to highlight the difference between congressional Republicans and congressional Democrats. You had congressional Democrats, they wouldn't stand for the idea that children shouldn't be socially transitioned without their parents' wishes. They wouldn't stand for the idea that American citizens should come first. They wouldn't stand for that innocent little girl who was assaulted by an illegal alien but managed to survive. Whatever your politics, whatever your views on immigration policy, can't we all stand and clap for an innocent young girl who shouldn't have been assaulted and was, being held by her dad? It was such a heartwarming moment. I think every American, Democrat or Republican, thought that was a great moment for our country. The only people who didn't believe that, apparently, were the congressional Democrats in that chamber. I think it shows again how broken their party is. But that revelation, I think using the State of the Union to drive home that we really do have a radical fringe in our country that's not representative of the whole, I don't think that we'll ever see a State of the Union that doesn't drive home that point.
Okay, let's get to the issue that might clip this administration, and that's the economy. On screen now, we can show you three of the most recent polls about the economy and how about Americans are feeling about it. Everything in red. Our Fox polling disapproves at 59%, Washington Post, ABC News 57%, Wall Street Journal at 54%. It seems like you're pushing a car uphill, and you've got 9 months to turn it around. You know Democrats are juiced. They are ready to vote tomorrow. Do you have enough runway to get this economy where it needs to be before November?
Well, Bill, in some ways, we are pushing a car uphill because the Biden administration left us such a disaster of an economy, the highest peacetime debt in American history, skyrocketing inflation. A lot of Americans who had lost $3,000 was how much the average American had lost in take-home pay. Now, in a year, we've actually seen the average American gain about $1,200 in take-home pay. But if you're sitting at home from the perspective of the Biden administration, you are still worse off than you were when Joe Biden took over. So we are absolutely pushing that car uphill. But here's the good news, Bill. I think we're about to get over the hump. I think that tax season is around the corner. A lot of Americans, because of no tax on tips, no tax on overtime, no tax on Social Security, they're about to get a massive tax income refund. We've seen this massive trillions and trillions of dollars coming into our country to build new factories. Those construction jobs are starting to hit the economy. Then the manufacturing jobs, once those factories are built, will hit the economy too. So I think that we've got a lot of momentum here. But the president said this last night. We inherited a mess. Our ask to the American people is let us continue to fix this mess, make your life better. That's what the president is prioritizing, and that's what we're going to keep doing.
Seems like it is the question on behalf of many, many Americans over the next 9 months, and we'll follow that very carefully. In the meantime, you've got a new job. Here it is, the announcement last night from the president.
I'm officially announcing the war on fraud to be led by our great Vice President J.D. Vance. He'll get it done. And if we're able to find enough of that fraud, we will actually have a balanced budget overnight.
So here are some of the allegations. California, $8 billion in suspected COVID fraud. Minnesota, 19. Massachusetts, almost 15. And Maine, $45 million in improper Medicaid payments. As you look at this, go ahead and explain it to us because we want to understand what the job is. And what do you think the number is?
Well, I don't know what the top line number, Bill, is, and I think that's unfortunate that nobody has ever tried to take a systematic look at how much fraud there is in the federal government. How many illegal aliens are on Medicaid? We know that it's billions and billions of dollars that should go to American citizens. It's going to illegal aliens. How many fraudulent daycare centers have been set up where that money should go to American citizens to help their kids get into childcare? Instead, it's being stolen from them by illegal aliens in our country. How much have government officials actually been complicit in this fraud because some of them have gotten wealthy, or at the least, they've gotten campaign donations from the people who have gotten rich from that fraud? The story of the American economy in so many ways during the Biden administration, Bill, is that the American citizen was ripped off for people who shouldn't be here and by politicians who should have known better. And the Trump administration, the president has asked me to take a full whole government approach to trying to understand that. And what does that mean, Bill? That means, first of all, the Department of Justice is going to be investigating and, where possible, throwing fraudsters in prison. But it's also going to mean that Scott Bessent and some of our friends at the Treasury Department, we're going to be looking at income tax records. We're going to be trying to understand how it is that the American people have been defrauded, how it is that people have used resources and programs that should go to American citizens instead have been going to fraudulent uses. There's a whole host of tools that we have that have never been used. And the president, I talked about this a couple of months ago and said, what if we just did everything that we could to stop the fraud that's being committed against the American taxpayer? The president said, great idea, let's do it. And we're going to work on that very aggressively over the next year.
Need a quick answer. Over the next year, is that the time frame? Is that 12 months?
Well, it's going to continue beyond that, but I think that we've already discovered a lot, Bill, and really I think the next year is where we're going to try to uncover as much as possible and run at this as much as we can, but it's not going to stop after a year.
All right, we have big topics, too, on the line. You got 5 years of war in Ukraine. You've got Iran on the precipice of something. Stay tuned and stand by, Mr. Vice President. More on that when we come back.
After midnight hammer, they were warned to make no future attempts to rebuild their weapons program, and in particular, nuclear weapons. Yet they continue, starting it all over. My preference is to solve this problem through diplomacy. But one thing is certain, I will never allow the world's #1 sponsor of terror, which they are by far, to have a nuclear weapon.
So there's the president touting his push to try and end the Iranian nuclear threat. Not easy. There's a new round of talks scheduled for tomorrow in Geneva. I want to bring back the Vice President, J.D. Vance. And, sir, thank you again for your time. Democrats have significant concerns, especially those who were briefed yesterday behind closed doors by the Secretary of State, Marco Rubio. Here is Chuck Schumer. Had some comments yesterday and talked this way this morning.
The bottom line is he has an obligation to lay out to the Congress and to the American people his goals. That is how foreign policy should work. When you're forced to lay out your goals, you have to meet potential criticism. I am very worried about how Donald Trump conducts foreign policy, and particularly in this area of the world.
Sir, you can address that. Iran is not easy, as you well know. What does military success look like?
Well, I have to say, I try to understand where other people are coming from, Bill, but I don't know what Chuck Schumer is even talking about. The president has been as crystal clear as he could be. Iran can't have a nuclear weapon. That would be the ultimate military objective if that's the route that he chose. That is, of course, what we're trying to accomplish, as the president said, through the preferred route of diplomacy. But it's very simple. We have to get to a position where Iran, the largest state sponsor of terrorism in the world, cannot threaten the world with nuclear terrorism. And it's very simple. I think most Americans understand that you can't let the craziest and worst regime in the world have nuclear weapons. That's what the president is accomplishing. That's what the president has set as our goal. He's going to try to accomplish it diplomatically, but as we all know, Bill, the president has a number of other tools at his disposal to ensure this doesn't happen. He's shown a willingness to use them, and I hope the Iranians take it seriously in their negotiations tomorrow, because that's certainly what the president prefers.
Does that mean the supreme leader has to go?
Well, again, I think the president ultimately will make the decision about how to ensure Iran does not have a nuclear weapon. But we're sitting down having another round of diplomatic talks with the Iranians, trying to reach a reasonable settlement, but a reasonable settlement towards what end? Iran can't have a nuclear weapon. It's very simple, Bill. I think the supreme leader and everybody in their system should understand it. We've been crystal clear, and we're hopeful that we're able to come to a good resolution without the military. But if we have to use the military, the president, of course, has that right as well.
Two more topics on Ukraine and Russia. 5 years now. Eastern Europe has been exploding. Is Vladimir Putin simply putting you off in these on-again, off-again talks as they go?
Bill, I think we've been engaged in very, very deliberate negotiations with both the Russians and the Ukrainians. Obviously, the Russians have some red lines, the Ukrainians have some red lines, and the president has just set the entire team from Marco Rubio on down to try to bring the killing to a close. You know, it's hard. As the president has said multiple times, he thought this was going to be the easiest war to solve. I agreed with him. It has turned out to be much more difficult. But I think that we're making progress, Bill. I think we're making progress with both the Russians and the Ukrainians, and we're just going to keep working at it. Eventually, we're either going to be successful or we're not going to be. Right now, I think the president has some good optimism that we can bring this thing to a successful close. It's bad for the world. It's bad for America. So we're going to keep working at it.
You can certainly understand how people look at this from the outside and think that Putin is just buying time. Right?
Well, Bill, this point, I understand this point, and sure, I'm sure that Vladimir Putin has his military objectives, and obviously he hasn't stopped the killing, even though the president wants that very much to happen. But the way to solve this is to continue to engage in diplomacy. And so that's what the president has asked us to do. We're under no illusions that these guys are going to, meet in the middle of a field, give each other a hug and sing Kumbaya. That's why we're engaged in the diplomacy that we are engaged in. We are optimistic that we can get to a point where both the Russians and the Ukrainians feel they've accomplished enough of what they need to bring the killing to a stop. That's what the president has set us out to do.
All right, big stakes on both those topics now. Let's end on a patriotic note. Last night, the red, white, and blue, and gold. Watch.
Now we're winning too much. And I say, no, no, no. You're going to win again. You're going to win big. You're going to win bigger than ever. And to prove that point, here with us tonight is a group of winners who just made the entire nation proud. The men's gold medal Olympic hockey team. Come on in.
So for those of us who weren't there, how much fun was it to have those guys around for a day?
Bill, it was so electric, so fun to have him in the White House, obviously at the State of the Union. You may not have been able to see on TV, but Mike Johnson and I were probably the only two people in the House who couldn't see the team when they walked out because they were sort of directly above us in the chamber. But we're so proud of those guys, and it was just a great moment for the country. Again, Bill, the State of the Union was really just a celebration of our country, of our war heroes, past and present, of all the great things that we've been able to accomplish over the last year, of the incredible Olympic hockey team that won gold medal, both the men and the women's team, of course. It was just a very, very cool moment, a very patriotic moment, but I really think it set the tone for the whole speech. A celebration of our country. We ought to be proud of our country. We've had a great and proud history, but under this leadership, under the president's leadership, I really do believe, Bill, the best is yet to come. We just got to keep working at it.
All right, we'll watch the women come to the White House very soon. We'll cover that then. Sir, thank you for your time. I know you go to Wisconsin tomorrow. The president goes to Corpus Christi, Texas, and we'll see how the message is received. J.D. Vance, thanks for coming on today.
Thanks, Bill.
All right, Aisha.
Hey everyone, I'm Emily Campagno. Catch me and my co-hosts Harris Faulkner and Kaylee McEnany on Outnumbered every weekday at 12 p.m. Eastern, or set your DVR. Also, don't forget to subscribe to the Fox News YouTube page for daily highlights.
Front and center this hour, the state of the tech union with Nvidia, Salesforce, Snowflake, all reporting earnings tonight. We discuss and debate what is on the line for these markets with the investment committee. Joining me for the hour, Joe Terranova, Shannon Saccocia, Jim Leventhal, Rich Saperstein. Let's go to the markets, give you a look at the picture. 12 noon, NASDAQ is leading as we look ahead to these big events. It is, I think, fair to say, Joe, the biggest day for the tech trade in some time. Not just because of Nvidia, but given what's happened with software, with Salesforce and Snowflake also reporting. The NASDAQ's the only major average to be down year to date. Most of the mega caps are as well. Take it from there.
Well, I think the market was able to shrug off the earnings report from Workday. So I think really the bellwether, and I'm going to call Nvidia the bellwether because I am 100% confident that exactly is what it means to the marketplace. That bellwether is critical, and it's critical because the mercurial nature of 2026, we see it represented today. The leading four sectors for the S&P all up greater than 13%. They're all down today. The worst performing sector, financials, that's higher. Software is higher. Crypto is higher. Technology coming back once again. So I think what's critical about Nvidia this evening,
and the software ones. I think that
I disagree.
No, not given what's happened with the software
We have
trade.
stabilization today. Workday.
One day means nothing.
Workday, Workday was down. We were expecting that would bleed into the software names, continue. I think you have stability in the software names. And I go back to the live stream yesterday from Anthropic. I think that was critical in giving a little bit of comfort to the market, in particular the software industry.
How can you have stability? One day means zero. IBM's down another. IBM on the week is down 7%. Who cares what it's doing today? Snowflake is down on the week. Who cares what it's doing today? CrowdStrike and Palo Alto and some of these other names are down on the week. Who cares what they're doing today? Which is why, Rich Saperstein, I would submit to the court as the judge.
I disagree.
That the tech trade in general has so much riding on it today. Salesforce and Snowflake are arguably two bellwethers in terms of the questions about AI and what's been happening there. So yeah, all three add to the importance today.
Look, the offensive team is off the field right now, and the defensive team is on the field. And that's probably going to carry on for, I don't know, weeks, months, who knows. But I think there's a defining point where we have to look at what price you're paying for earnings and the growth in earnings, which is PE to growth. And if you look at the staples, whether it's Procter & Gamble, Clorox, Coke, Kimberly-Clark right now, the PEG ratios are anywhere from 2.5 to 5. I own Procter. It's 5 times right now. If you focus back on the Mag 7, the bigger stocks, the PEG ratios are 1 for Google, 1 for Meta, 1 for Amazon, and 1.5 for Microsoft. So at some point, the market will redefine who's going to be on the field. Right now, it is clearly the consumer staples. As it turns to Nvidia, they're going to put up good numbers because the hyperscalers are basically is spending $670 billion this year.
Doesn't mean that the stock is going to trade in kind, right? The stock has been stalled. It's run a little bit into the print. So a great report doesn't necessarily mean great price action. And that, frankly, is something probably more interesting to watch than anything else. I would also suggest, as Piper Sandler today downgrades tech to neutral, B of A's credit investor survey says AI bubble now.
Not on my watch. You ain't spewing bullshit in chat.
Ever. Okay?
Not on my watch.
23% investor risk for the first time ever. AI bubble.
Thought I was gone.
So, Shan, that says to me why I framed it from the top the way I did. Joe's sort of sitting back looking at me like I'm crazy because I know he wants in again.
Never crazy.
He's leaning like
so many
this,
things to say.
looking at me. And I know when he does that what it means, and we'll get to you in a minute. But Shannon's sitting next to you, and I want to get to her first. Sure. That's why I framed it the way I did.
And I think your point, Scott, is that the market right now is teetering between oversupply versus obsolescence. And I think that regardless of that B of A survey, I think investors are looking at what is the broader impact of AI. AI. A couple of months ago, we were all talking about the potential productivity enhancements, the creative destruction and disruption of businesses and the opportunities for growth. Now we're looking at it from the perspective of maybe some of these business lines are no longer relevant in terms of this AI. But I would point you back to Nvidia. You made a great point. And Rich, you sort of talked about this already. Valuations, if you look at consensus expectations for EPS for Nvidia for 27, 10-17 implies a multiple of about 19 times, Scott. So given your point and how much demand has already been stated, put on paper by the hyperscalers, Nvidia, I have to agree with Joe here, continues to be really important in terms of corroborating those expectations.
Hey, I didn't say it wasn't the bellwether. I'm not the one who said that. D.A. Davidson was the one who said that yesterday.
But I will agree with you that we get a blowout in earnings on Nvidia. I actually don't know that completely tamps down some of these concerns on software. And I think, again, the obsolescence idea, this disintermediation, this is going to be a rolling concern between now and when we start to get earnings again for second quarter.
I'm saying, Jim, that when Piper Sandler downgrades tech, and then Bank of America's credit investor survey says the AI bubble is now the #1 risk for the first time ever, that's why I think there's added and greater importance on these in total today. The two software names along with Nvidia.
Well, look, I am today focused on the software names. Part of that is because Nvidia, we all agree, should have an excellent quarter, an excellent guide, and the stock's running up into it, so it gives me some comfort that it will probably respond well.
I don't know. You know what?
I know.
They've seen muted earnings.
But the reason
that the stock has not moved a whole lot in recent prints. That's another thing.
True. That's absolutely true.
The stock's gained or fall in less than 3.5% after the last 3 reports.
That's absolutely true. But the fact that it's rallying the last few days into the report gives me some comfort. Maybe I'm wrong, but it gives me comfort. Where I am still concerned is software. Now, I do have to say with this D.A. Davidson report that when we say AI bubble is the biggest concern, are we saying that the data centers...
That was the Bank of America credit investor survey.
There's two things that can't be true at the same time. We can't have this massive overbuild of data centers and then at the same time say that AI is killing everything in its path. I just don't see that as a viable duopoly.
No, again, it's their credit investors, so it all plays in the same story. Well, if you're borrowing hand over fist to build data centers and to raise capital to deploy towards the AI trade, well, if you're overdoing it on all accounts, like the market has placed its bets at certain times with some of the names out there, whether it's the private credit names or the Oracles of the world or others, that's why you get #1 risk for the first time ever, according to them, an AI bubble.
Just go back to where I just want to finish my point really quickly, because software is, to me, the more important part today. And I think the Workday earnings report basically doesn't answer the question. Because on the one hand, hey, they've got 12 to 13% growth going forward. On the other hand, that's down meaningfully from the high teens of a year ago. The one thing I will point out on this, and I think it applies to Salesforce, applies to Adobe, applies to all of these guys, is that their share price charts actually exactly mimic their valuation charts. It's not a question of earnings. It's a question of what we're paying for earnings. And I think when we're down at roughly 12 times for some of these companies, that it's cheap enough. And that's why Workday is actually slightly positive.
It's what you're paying today for your idea of what the future earnings are going to be.
A lot of
You're
questions
not paying
about
these prices based on what you think today's earnings are going to be. The real fear is that you might have to pay even less because you're more worried about what future earnings are going to be. You got to keep that into perspective too.
That is in my perspective, and what I'm saying is specifically, if you look at Workday, just as an example, I don't own it, but 2 years ago, stock traded at roughly 35 times. Now it's trading at 12 times forward.
For a reason, isn't it?
Yes, and the question is, what you just said, Scott, about the skepticism about what forward earnings are actually going to be, is, I think at this point, appropriately priced at 12 times for an asset like, these are asset like
You're
companies.
trying to be a rock star. They keep telling you at Workday not to be a rock star. You watch these commercials.
You think I'm trying to be a rock star?
You watch
I'm just
these
telling you what's on my mind. I'm just telling you what's on my mind.
Billy Idol is telling you don't be a rock star.
Billy Idol? Okay.
He's in the commercials.
Okay. All right, now I know what we're talking about. Sorry, I kind of...
Jimmy.
Look, man.
Jimmy, have some water.
I'm not an HR guy. So those are good commercials, but they go right, in one ear and out the other. I'm sorry.
Just save him.
I know Joe wants to get in on this, but I think I want to note something that you just said, Scott. that was from the credit analysts, right, at Davidson. There's a reason that there's equity investors and credit investors.
Yeah, the equity investors ain't feeling much better.
But AI actually creates hard-to-price tail risks for bondholders. And I think that you're going to continue to see some dispersion in terms of views on credit versus views on equities. And I think that investors need to take that with a grain of salt in terms of thinking about what is the earnings going to support. That may not be as supportive to bondholders because of that cannibalization for CapEx.
Come on. Come on.
Center for Strategic and International Studies, former Director of Strategy and Policy at the Defense Department's Joint AI Center. It's great to have you back, Gregory. Thanks for joining us.
Great to be with you.
Did you expect anything different? I mean, did you expect the company to adhere more forcibly, supposedly, to their principles?
Well, I think you have to separate the safety concerns at issue. The dispute with the Department of Defense is really about what their tools are going to be used for in the national security context. And they're specifically looking for stipulations in the renewal of their contract that their tools will not be used in domestic mass surveillance or in fielding lethal autonomous weapons without human oversight. They're even willing to help the Pentagon develop such weapons. They just want to stipulate that they not be deployed in the absence of human oversight. By contrast, I think that's by the terms of these contract negotiations, it's actually far less than what the Pentagon agreed to in the initial contract with Anthropic in July 2025. That original stipulation included things like not using Anthropic models for offensive cyber weapons. Anthropic has abandoned all of those provisions and retreated to this set of relatively modest two requests on domestic mass surveillance, which is really not something the Department of Defense should be engaging in regardless. That really falls to other parts of the U.S. federal government in those types of concerns, and then also this deploying lethal autonomous weapons. Now, I think Anthropic's requests are reasonable, but I'm sympathetic to the Department of Defense's view that they don't want to have those kind of debates in contract negotiations with the companies providing them technology. Those are the kinds of debates they want to be having inside the Department of Defense, with Congress, with the White House, and in the broader public sphere, not part of a contract negotiations. I'm sympathetic to the Department of Defense in that regard, but I think the threats that the Department of Defense is making, such as threatening to label Anthropic a supply chain risk type of company, those are the kinds of labels that we use for companies that have secret Chinese or Russian ownership or are known to have active spies working at those firms. It is a radical escalation to take the company that has really been out front in trying to support the Department of Defense and throw such big threats at them for this. It's an unreasonable escalation on the Department of Defense's part.
Yeah, the Defense Protection Act's a pretty powerful tool here. To Deirdre's point a moment ago, does all of this suggest to you that Anthropic is, in fact, in the pole position?
So I think there's a couple really interesting data points that we've actually gotten from this dispute. If you think about the LLM chatbot models like ChatGPT or Claude as it might be used by an everyday consumer, I think what we've seen is that the switching costs from those kinds of models has been relatively low. I might use ChatGPT one day, I might use Google Gemini another day. But what this dispute with the Department of Defense shows is that once you actually integrate these models deeply into your tech stack, whether that's for cybersecurity applications or intelligence analysis applications, there actually are very high switching costs. The Department of Defense does not want to have to go through the exercise of ripping out Anthropic's technology and trying to build up a competitor in that regard. And high switching costs, if that does indeed remain the case, that suggests high margins and a first mover advantage in this industry. It says a lot about what the AI economy might look like in the next few years.
right, let's get back to tech. Got to talk about software and more. Hatem Diab's with me, managing partner at Gerber Kawasaki Wealth Investment Management. It is great to see you. I haven't seen you in a long time. Look, what's going on with IGV, the software stock sell-off? Are there names in here that you just wouldn't touch anymore?
Yeah,
They
it's
dropped
really
the
good to
last
see you,
50
Nicole,
minutes
as
and
well.
fucking 5 minutes on
Absolutely.
SPY.
I mean, it's been
10
a
minutes.
reckoning for software names. IGV, I think, down 30%. It was on down, what, 13% just in one day and a couple weeks ago. The reality is we have a transition that's happening, and all the AI tools that are actually coming out are really a genuine threat to a lot of these software names. So I think if you want to dabble, or if you want to be looking at some of these names, you have to really understand, is AI a threat? Is it a headwind or a tailwind? And that's kind of really where the work is right now, is understanding who's going to survive.
So at this point, are there names that you would stay away from? For example, I had a guest today who actually named some names saying, look, I'm not interested in those names anymore. I do like certain names because they have cloud or cybersecurity. Yeah. Are you going to break it down like that?
Well, absolutely. You can think of it that way, right? Like, think of Intuit, for example, a company that basically does your taxes, right? Can AI replace that? The reality is probably. Intuit went ahead yesterday and did a deal with Anthropic, so their stock went up.
350 is coming soon.
But I think for me, is that a software, or is that a company that I want to invest in? Probably not. If you think about these agents or agentic AI and how these software, these agents are going to replace the seats. In other words, a lot of these software companies sell licenses for seats, but if these agents now can do the work, then all the seats are going to go down by exponentially, right? So the revenue is going to go down. So I think you need to understand which companies are about to be challenged in a way that we haven't seen before.
So at this point now, a name like Salesforce today that we're waiting to hear on, do you expect anything good or not necessarily? There's Snowflake too.
Yeah. So Salesforce is interesting because
divergence
it's actually,
at the roof. They want to clear the divergence.
You know, we use here my firm Salesforce.
Holy
and
fuck!
It's a systems of record, right? So a lot of our client data is on there. It's secure, it's safe, right? But their business is generally challenged from AI. But I'm not going out there and changing my Salesforce because Anthropic can do some of the work. Plus, I don't trust the security of the AI platforms, right? So I think what you're trying to see for these companies is, are they using these AI agents, or are they helping integrate some of these new tools within their platforms? And through Agentforce, you're seeing Salesforce do that. I think their run rate on their AI sales are almost 500 million already, or probably going to be in the billion this year. So a company like Salesforce, maybe they're a little late to the game, but I think they will do well, and they will be able to integrate some of these agents. And also, they signed a deal with
15,
Anthropic,
20
so
minutes.
They're working really hard to bring these tools to us.
Fuck.
But I think that's really the opportunity.
I mean, I have to ask you about Nvidia. What are you hoping for Nvidia? Do you think that there's a playbook here? What's the playbook?
I mean, you got to own it, right? Like, it's our biggest holding in the firm. I mean, $650 billion in AI spend that was announced the last few weeks. The lion's share of that is really going to Nvidia. You can't build data center without Nvidia. I know AMD signed a deal with Meta this week, but the reality is Nvidia has the best and the most important software stack for data centers, and they will continue to be like this for years. So I think they're going to have good revenues. I think they're going to beat. I think they're going to raise their guidance, and I think we're going to see huge numbers.
I always used to talk to you about Tesla. What happened to Tesla? What did you do with Tesla? And what about the Elon Musk leadership? What are you talking about when people ask you about Tesla these days?
I mean, I don't know, their business is so challenged. I mean, they're moving towards robotics, right? And AI and things like that, and FSD. But the reality is the core business, selling electric cars, is done huge because the brand is tarnished, is damaged. I think China will be down 30% or so. The Chinese cars are really, really good. And the reality is, I think Elon has done a a real damage to a consumer discretionary brand. I mean, I live in California. I think a lot of people just don't want to drive the car. And obviously the business is going to go down, and if you can't sell cars, right, your main business is challenged, so revenues will go down. So I think changing the narrative around robotics and AI and FSD is key, but it's going to take some years for that to play out. As a result, I think the valuations don't make too much sense right now.
So you're not buying it here at 416.
No, we're not.
Do you want Elon Musk to step down from Tesla?
I don't think he will ever do that. I know Elon is a very unique individual. I mean, what he's done is really amazing, but also at the same time, I think his foray into politics and to really buying Twitter has been really damaging to the brand in general. But the reality, the cars are really good. It's just, it's a consumer discretionary brand, right? Like the perception matters. I don't care how good the car is. If people don't like the CEO, then they're not going to buy the car.
Right. And also there's the political views. Some folks don't like his political views these days. Let's get back to tech overall. What is working, whether it's energy, infrastructure, data centers? What are some of your favorite picks that you are really into these days?
Well, I think the infrastructure layer is really what we've been into. I mean, Nvidia being like the king there, but we own GEV, which is basically makes power or natural gas turbines for data centers. We're really trying to own anything. Amphenol, which makes cables and high latency wiring for data centers. So like anything really that works within the infrastructure for data centers, I think is going to last. And again, the reality is we have almost $650 billion that needs to be spent, and that spending is going to happen next 2 or 3 years. So I think people need to look at that.
Yeah, I mean, I'm looking right now at GE Vernova, and that's at a new high. So you definitely like that one. And then I think the other one is it APH? That's also not far off.
Yep.
It's high. So yeah, so we'll look at Amphenol too. All right, APH.
Oh, my mic was muted. Sorry. There's a divergence at the roof. They may pop in 5-10 minutes, or they reject. With the divergence at the roof anyway. We'll see. 350 is here in 2 minutes. Power imbalance hour of the power hour starts soon.
This week, Bitcoin manages to fend off another pullback. Trump family crypto venture World Liberty Financial says it was targeted by a coordinated attack, and Coinbase Chief Policy Officer Faryar Shirzad lays out the current status of the stalled crypto market structure legislation. Welcome to CNBC's Crypto World. I'm Ryan Baker. Crypto markets in the green, on pace to end a weeks-long streak of losses. As of noon Eastern, Bitcoin rose nearly 3% from last week. Ether jumped more than 5%, and Solana climbed nearly 8%. This marks a sharp turnaround for Bitcoin, which faced a multi-day pullback that started over the weekend. It fell as low as the $62,000 level yesterday before bouncing back. Tomas Perfumo, chief economist at Kraken, weighed in on the crypto market's recent volatile moves, and he says there are two big forces both pushing prices lower but also providing a layer of support.
The situation right now is in my opinion, very simple. We've had a deceleration in capital flows into the ecosystem, into the crypto industry for several months now. So if you look at, for example, Bitcoin ETF activity, 4 sequential months of net outflows.
HOD divergence at the roof has cleared on SPY and QQQ into 350.
Two of the biggest demand vehicles in the market for spot Bitcoins. If you look at the net impact between the two, since October, the net flows are actually neutral. They're flat. Effectively, the ETFs have washed out about $8 billion worth of net outflows or Bitcoins over that period of time, and MicroStrategy bought almost every single one. And what's kind of interesting, in my opinion, is you see the same trend playing out in stablecoins as well, particularly
fucking absolutely nuts.
Market supply.
Zero DT puts destroyed SPY and QQQ into end of day.
They demonstrate dollars moving in and out of the system by way of mint and redemption. And they similarly, after 2 very strong years of growth, almost doubling in total supply, you're now down about 1.5% year to date in terms of market capitalization of the 2 stablecoins combined. And so the trend, in my opinion, right now is really just a stabilization of this massive capital flow that came into the
divergence
ecosystem over
cleared.
the last 2 years.
And taking a look at a crypto-focused stock for a moment, shares of stablecoin issuer Circle spiked nearly 30% today after the company reported a 77% revenue increase from 1 year earlier. Of course, Wall Street's adoption of crypto was a big focus in 2025, and Perfumo says that continued adoption by institutions could be the next big catalyst after crypto's pullback.
3:50 p.m. power imbalance went northward on SPY.
Traditional finance will get intertwined with crypto. The Clarity Act is another
insane
big,
work.
I think, catalyst coming up. And more pointedly on that front, like if you think about the Genius Act last year, which
I'm shorting on 1DT right now.
Within the months after Genius Act passing, you had all these financial intermediaries, whether they're banks, the largest payment processors, all start to explore and announce their efforts into stablecoins and tokenized stablecoin payments and whatnot. And the reason why I think that's relevant is because they now have line of sight into what they can and cannot do. They're highly regulated entities, and they want to explore and be part of that kind of next wave of
350
growth in
wipeout.
financial
Wild.
services. And I think the Clarity Act has a similar composition to it in the sense that it provides clarity as to what kind of activities different financial intermediaries can undertake with digital commodities, including things like Bitcoin, for example, and how it impacts them from a regulatory perspective. And so I expect that between Clarity Act and even a lot of the efforts on the tokenized security space, tokenized stablecoin space and whatnot, you're just seeing this kind of expansion of
9 minutes left until 4 p.m.
financial services and
power imbalance time.
Crypto more accessible, whether it's for investment purposes or for spending purposes, etc. And so I think that to me is like a positive underlying or undercurrent, if you will, a positive long-term trend.
Okay, let's talk about the top stories. The Trump family tied
first trade on SPY and QQQ in fucking like 3 days.
Stablecoin briefly slipped from
2
its
days.
$1 peg. An announcement on the company's X page says there was a coordinated attack against its stablecoin USD1. The company also said attackers hacked the accounts of its co-founders and opened short positions on the company's WLFI token to, quote, profit from the manufactured chaos. Data from CoinGecko shows the token's value fell as low as $0.994 on Monday morning, but it has since recovered. Crypto custodian BitGo, a World Liberty partner on this stablecoin, says USD1 is fully backed by the short-term US government treasuries, US dollar deposits, and other cash.
This shit is crazy.
The company, founded by members of the Trump family, has faced some recent
oh my God.
by House Democrats. Last week, a group of lawmakers wrote a letter to Treasury Secretary Scott Bessent calling to investigate potential conflict of interest and national security concerns related to the platform. Next, many Bitcoin miners are now running at a loss. That's according to analysts
8 minutes left until
who earlier this week argued that all miners should be actively transitioning to high-performance computing. This comes after Bitcoin lost about a fifth of its value year to date. The note adds that record low hash prices that pressured Rosenblatt's earnings forecasts back in December now look enviable given Bitcoin's tumble led to an additional 20% hit in the hash price since then. Last, PayPal shares popped yesterday on reports it could be an acquisition target for Fintech startup Stripe. Bloomberg reports that Stripe
pull
is
back
considering
fucking
buying
please
some
to
or
694
all
by
segments of
close,
PayPal's
please.
business, and discussions are still in early stages.
5% from close.
PayPal shares have struggled alongside the broader market as investors question the strength of the economy and just how much AI will shake up businesses. As of noon, shares are up 12% week to date. All right, for our main story, Crypto World's Mackenzie Sigalo spoke with Coinbase Chief Policy Officer.
Man, they killed my fucking Nvidia puts today, and now they're coming back up slowly.
Efforts on Capitol Hill stalled
close.
after pushback from the
very violent
industry,
push up, but still.
including Coinbase CEO Brian Armstrong.
On my contracts, but still very slow candles.
Whether rewards on stablecoins are allowed under the law. Shirzad discusses what a compromise would look like for the crypto industry and banks, and he weighs in on how the crypto industry's lobbying efforts will play a role in the 2026 midterms.
So let's start with market structure. Your CEO, Brian Armstrong, was on CNBC this week from the World Liberty Forum.
Every minute, time ticks by.
Clifton is head of policy
4:05.
research at Strategas.
Here it comes.
Dan, good to see you again. Is this $1 trillion we already know about, or is there new details, new information, new things in here?
Yeah, I thought the president's speech last night, a theme of that speech was we did a lot in 2025, and you're going to start getting the benefits of that in 2026. So, he passed one big, beautiful bill.
Please, God.
The income tax rate was not cut. So people are going to get that in a tax refund as they file their taxes here in February, March, and April. And it's really large.
Please,
it's
God.
$150 billion of new tax cuts for American workers that they're going to feel this year.
355.
And 100% expensing
Go
of
down to
capital
194 by
R&D and
close,
property.
please.
So you're going to get about $200 billion on the business investment side. I saw the headline coming out of that reporter's lunch about tax cuts. And my view was this isn't going to be income or corporate. They don't have the capacity or the votes
Market closing
to do
in
it.
5 minutes.
Will the president put out zero capital gains taxes on inflation or zero capital gains taxes on home sales, of which he did neither of those last night and really kind of stuck to the basics? He is not a long laundry list person of policy ideas like Bill Clinton or Barack Obama. And he basically just stuck to kind of his core principles and was basically preparing people for better economic growth this year rather than saying we need to new
4 minutes left until 3:59.
Yeah, when he says through reconciliation, what does that? I was trying to think to myself, okay, what does that mean? What is that telling us? And is it what you're saying in terms of the areas where he could move without that broad support?
Correct, right? So budget reconciliation
Someone
is a
just
way
voted
to
on
pass
the earnings poll. I'm
legislation with
deleting
just
it.
Republican-only votes. But right now, the Republicans have a one-seat majority in the House. And if this congressman from Texas
Bears are here.
resigns anytime soon,
Kendall trying to
given his
squeeze down on the
problems, then
video.
you can wind up seeing there be more Democrats than Republicans. Now, they wouldn't have the majority and it wouldn't replace the speaker because of technical factors, but they're not passing anything right now.
The 350
and
spike.
I'm not very confident of that. So it's going to be smaller measures. They'll do a housing bill that's passed the
10
House and the
minutes.
Senate.
Video
They'll
earnings.
do an extension of the infrastructure
1
bill.
hour in the
They
video
may do this
earnings
crypto
call.
bill. But the agenda here is not for very large new tax cuts after passing such a big reconciliation bill last year.
Let me ask you then about what you think are the two most significant things last night. Number one, talking about Iran building a missile system to attack the U.S. Secondly, you said the most serious policy proposal was the payer protection pledge. So first on Iran.
Yeah, so I would just say I think a lot of the commentary this morning misses what happened in that speech last night. The president gave you a pretext to be able to attack Iran if those negotiations today don't work out. And that's the idea of building a missile system that could hit the United States. We already know that they're building one to hit Europe. And of course, our allies in the Middle East. But the idea of going to America is a new discussion that they're having and one that starts to give that pretext. That's number one. Number two, Eamon just came on and said, look, they didn't talk about AI. AI is extremely unpopular right now with voters, and there's a lot of local opposition. What the president was doing was giving you a way around that by saying these tech
I'm in
companies
so fucking
are
deep
going
on the
to
video
be
right now.
able
I'm
to build their own
fucking
energy
scared.
and remove that
I
from the
might be
ratepayer
fucked.
themselves. So I actually think there was
194 by
something
close.
in there
Do it,
for AI,
dumb bitch.
specifically about
Candle.
building the data centers and trying to get around some of the local opposition. I would note housing
Yes.
stocks are down big today
Thank
because they
fuck.
were anticipating a plan. Defense
Now I'm feeling
stocks
a
are
little
down
bit
because
better.
they were anticipating a plan. But the banks and the cards are up
Fuck.
because there was no talk about credit card caps or
Thank
interchange
fuck.
fee regulations.
Yeah, I wasn't
What
sure
the
if
fuck
the,
is
Definitely
this?
stuff trading on last night's speech.
Yeah.
in certain sectors.
I thought housing might be Lowe's gave
Thank
this kind of,
goddamn fuck.
it wasn't very upbeat about the housing outlook. That stock's down 5%.
Oh
but
my
you're saying
God.
it's more because he didn't come out with a big plan that was going to kind of unleash this
I'm getting
wave of
released on
building.
some fucking
But
plates
that's
at
the
least.
stuff that you just said could actually make its way through Congress this year, one of the few
Thank
areas.
goddamn
Yeah.
fuck!
There will be a manufactured housing bill. It's a very specific
194 in
bill.
the
I think
video.
what the president is doing on rates through financial deregulation and what he's doing through
Close,
the GSEs
crazy.
with the agencies purchasing
4 p.m.
mortgages
close.
are far more important for housing than any State of the Union proposal.
Fucking
You're
rocket
seeing
from the
mortgage
fucking
to Treasury
depths
spread
of
come in
Tartarus.
as those
Now I'm maybe
agency
back in the
retained
clouds.
portfolios go up. Nobody's
Depths of
talking about
motherfucking
that.
Tartarus.
That's one of the reasons
Market
why
close in
mortgage
50
rates
seconds.
at their lowest levels in 4 years, and that's where their focus is.
355.
Rather than on a 10-point housing plan, which the market was
Yeah.
anticipating.
Can
One of
I-
the reasons why the housing
I'm turning you into like a stock picker today, Dan. But there's one more sector that I do want to ask about, and maybe this is going too far. But
I'm about to throw up.
as you bring this up, you say one of the most important things that's going to happen is trying to bring down that mortgage rate, bring down rates, and we keep hearing that the
I'm about ready to throw up. I was down $3,000 all fucking day long, and now I'm back to 1.7K. In the last fucking 5 minutes. 350 power imbalance time. God did. Shit. Here we go. Oh, Jesus Christ. I want to close my fucking eyes. Oh, Jesus Christ. I have my fingers open. Barely looking through my fingers right now. Oh, Jesus fucking Christ. Have mercy on my soul, please. Please, Jesus fucking Christ, please. Oh, I don't want to look. Fuck! Everything closed. All options closed on Nvidia. Oh my fucking god. ETA 5 minutes. Okay, guys, if this shit drops $12, I will scream my lungs out, okay? Mute your fucking mic. ETA 3 minutes. All hell breaks loose. Goddamn, fuck this market. Ah! By the power of God vested in me, let it be. Bum bum ba bum 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 ba bum. 4:05 is here in 10 minutes. Bum bum ba bum 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 ba bum ba bum ba ba bum ba ba bum ba bum. Next 2 minutes, very, very important. Time is now 4:05, 4:03. We will most likely see something from now on to 4:06 in the next 3 minutes. Lord, have mercy on my soul. Lord, have mercy on my soul. Oh my God. I'm about to break something, so I'm getting a plastic cup ready. We are right at 195.5. Fuck. Fake ass candles. Jesus Christ. Please, 187, please. Jesus fucking Christ, please. Please. Time is 4:05. Oh, Jesus Christ! I don't want to look at. Oh my god, they're about to close this shit. 4:15 and then fucking figure it out maybe. Oh god. I'm not looking at the screen. Oh my god. What the fuck is wrong with me? Oh my god. What the fuck is wrong with me? I can't feel my hands. My hands are numb. I think my heart is pumping crazy right now. I'm gonna raise my hand to the ceiling. I'm gonna put my hands up to it and everybody clap your hands. Everybody na na na. Everybody na na na. Everybody put your hands in the air, clap right now. Na 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 na. No move yet. 4:05. Oh, fuck. Time is 4:10. Is the earnings out? I don't think so. Breathe, breathe, breathe. Ah, breathe. Most anticipated earnings of the year so far. Nvidia earnings. The most annihilated earnings so far in Nvidia this year, 2026. Ah. I'm dizzy. I gotta lay down. Oh my god. Alright guys, I'm back. I'm dizzy as fuck. Ain't no way, still no move. This shit is abnormal. Is it out? After the stock market closes, typically around 4 p.m. is what it says on Google. Getting fucking itchy, frustrated everywhere. Oh my god, I think it's out. Oh my god. $4.15. Is it out? Is it not out? Man, why the fuck does it look? Why does it seem like I'm the only one fucking anticipating right now? Is anybody else anticipating right now? Like, what the fuck is this shit? Just silent. Why is it so silent? Like, nobody. Nobody. Nobody else gives a fuck. Oh my god. Oh my god. Three people into Nvidia earnings. Positioned long. 4 people positioned down short. 420. The craziest part is I've never seen earnings not out this late ever anywhere in my life. Time is 4:20. Happy 4:20. Earnings results. What a fucking crap show this is so far. I'm like tilting my body and my head every single candle. This is fucking bad. Stress. Maybe if I turn the stream off, it might do something. I think it's just not doing shit because I have the stream on. Might as well turn the stream off and watch it in fucking peace from my bed. Oh, fuck. No funny candles. needs to be fast. Like, I'm talking real fast. It's faking out. Time is 4:25. No news. Fuck. Never have I seen something not move at 4:05 on earnings. Never. Almost actually fucking immaculate. Like, what the fuck? Oh my god. Get ready for the biggest fucking pop of your life, or the biggest fucking dead cat bounce of your life. On the market. On the market. Going down, up and down like 7 times. Holy fuck. I'm scared they're using this $12 move through this. Some of it through this. $196 level. 195, 196, 197. I want the candle to come so I can go take a hot shower. I think I fucking deserve it today. Market's been absolutely fucking wild. Matter of fact, I'm about to go take a cold shower. Fuck it. Depending on how this shit goes. What do you guys think? If this shit goes good, should I take a cold shower? If this shit goes dog shit terrible, should I take a hot shower? If this shit goes dog shit good, should I take a cold shower? If this shit goes dog shit fucking bad, should I take a hot shower? What do y'all think, man? I think I'm watching Jensen Huang in the showers. Jensen Huang about to leather me all up with his leather jacket. Oh my god. What the fuck? Oh my god. Oh my god. What the fuck kind of candle open was that? Oh my god. Oh my god. Man. That's a fucking $10 move already. Fucking godfather of all AI, man. Earnings beat probably. $4.30. Each fucking stock at 200 on the video. Oh my god. God damn. Nvidia cascading fucking puts, man. Oh my god. Jesus fucking Christ. Wow. That is fucked. It's the biggest candle I've ever seen in my life. 190 to 201. They hit the bottom and the top at the same time. I think it's curling down. I'm gonna end the stream like this, guys. We will see where it happens or where it opens tomorrow. People are now voting into the poll, but you saw the message earlier, so don't do that. Candles be moving on candles. Candle comes in, pull comes in, vote comes in. It's too long until Nvidia earnings, so I guess I'll end the stream here. Nvidia earnings in 20-30 minutes, so if anything changes, we will see in the WhatsApp group. $7 up from close, $10 up from the spike. Such a tiny spike compared to the after hours on SPY. Wow. What time is Nvidia earnings call? 5? Damn, it's close as fuck. We'll see if this pop holds through earnings call. I mean, the chances of this shit reverting down is like fucking 10%, right? Or is this like what the good earnings? Every time we had good earnings, though. There's no way they don't hurt my puts on Nvidia. Like, what the f? There's no way they go down on this shit. Even if they do, like, where? Yo. $201 to the nights. The fuck is this? I think now is the time to end the stream on suspense. Five more minutes. Won't hurt. Options close on SPY. 5. SPX close 5. I mean, we are literally at all-time highs again. 694.2. What the fuck? Yo. Damn, they crazy with this shit. This is the way to get fucking 7,000 again? What the fuck? Like, the calls options. Oh my god. Oh my god. Look at Robinhood right now. SPY is literally at 694 all-time highs. Into 4:35 p.m. when everything closes on SPY and SPX these days, 5 p.m. A new fucking game in a new world. After hours fucking game, 4 to 5. Man, either the market about to whoop my ass tomorrow, or it's about to break my ass tomorrow, because this shit is the most crazy shit I am seeing. And 200 open tomorrow would kill me. 191 open tomorrow would save me. 190 open tomorrow, sub tomorrow would be fucking. I'd take my fucking L. I'd leave. Shit. But yeah. Beat my ass time or make my ass time Nvidia. And thank you, Jensen Huang. And this is the reason why I have AMD in my computer. Fuck. God damn. Got that Ryzen, boy. Motherfucking got me fucked up with this Blackwell Nvidia shit. Give me my fucking RAM cheaper. Fuck. I can't even buy a computer right now because it's so fucking goddamn expensive. I know this shit's about to be outdated in 2 years. 1 year. Fuck. What a crazy candle, though. That is the most insane candle ever. It opened 192. Or opened two. I don't even know. It opened 200 and went below and then went up, or opened 192 and went up to 200 so fast that I couldn't even tell which direction it opened and went. Fucking insane. After hours, crazy volume. Fuck. Futures, people, please. Take this bitch back down from all-time highs overnight, man. Earnings is here in 10 minutes. Call. Really, should I fucking really watch it? Fuck. Nah, alright. Nah. Just gotta let him do its thing. But I'll send the live in the WhatsApp group, folks, the link. Showing bullish into 5 p.m. 450 on SPY from 4 p.m. close. And options close. All right, bye-bye, everybody. I'll walk away from this shit. Fuck. I can't walk away. Fuck. Truly, it's a lot of shit. A lot of cycles happening in after hours. Every single candle. Moving big on SPY. $10 below where we are right now is 190, 187, 188. We are $10 above from 192 right now. Damn. 8% of S&P 500. Whatever the fuck happens overnight, this is gonna do. 5 p.m. close. 5 p.m. close. SPX 5 p.m. Showing bullish into 5. Nah. Nah, dude. Nah, dude. Alright guys, I was gone for 5 minutes, but I'm gonna go hop in the shower. I will send the Nvidia earnings call.